04 in the matter involving Rocky Mountain Power's application for a general rate increase. And before we begin with Mr. Coleman, who will be our first witness today, let's just see if anything has come up that requires our attention, any preliminary matters at all. Seeing none, we'll turn to Ms. Schmidt, or whoever's.
We're sharing, but I'm doing the presentation of Mr. Coleman.
Okay, proceed.
The division would like to call Mr. Casey Coleman to the stand as its witness. May he please be sworn.
Sure. Welcome, Mr. Coleman. Great to have you with us this morning. Would you raise your right arm? Do you solemnly swear that the testimony you're about to give in this matter pending before the Public Service Commission of the State of Utah shall be the truth?
Pardon me, I'm having trouble hearing you. I'm sorry. It may be a personal problem.
Well, maybe I've lost my normal vibrant voice today. All right, I'll try to speak louder and closer to the microphone. Let's start that again. Mr. Coleman, do you solemnly swear the testimony you're about to give in this matter pending before the Public Service Commission of the State of Utah shall be the truth, the whole truth, and nothing but the truth, so help you God? Yes. Thank you. You may be seated. Turn to Ms. Schmidt.
Good morning, Mr. Coleman. How are you today?
Great. How are you this morning?
Just fine. Could you please state and spell your name for the record?
My name is Casey J. Coleman, C-A-S-E-Y, J, and then C-O-L-E-M-A-N.
J as an initial?
J-A-Y.
J-A-Y.
So it's kind of cool. It's the initial, but it's the name too. So
Very cool. By whom are you employed and what is your position?
I work for the Division of Public Utilities. I'm a utility technical consultant.
Your business address, please?
160 East, 300 South, Salt Lake City, Utah, 84114. Or the same as everyone else.
Have you participated in this docket on behalf of the division?
I have.
Has your participation included reviewing file testimonies, drafting and reviewing data requests, analyzing issues, participating in discussions and emails discussing these things, and more?
Yes.
Did you prepare and cause to be filed what's been marked as DPU Exhibit 3.0 DIR in confidential and redacted form?
Yes,
And were there exhibits attached to that?
there were.
I believe they were 3.1 through 3.12, which was an Excel sheet or work papers, and then 3.13 and 3.14. Does that sound familiar?
Yes, it does.
Did you also, is it correct that you did not file rebuttal?
That is correct.
Did you prepare and cause to be filed surrebuttal marked as DPU Exhibit number 3.0 SR with exhibits 3.01, 3.02, 3.03, and 3.04? And this packet was filed in both confidential and redacted form, correct?
Yes.
Do you have any changes or corrections to your filed testimony?
No.
If I were to ask you the same questions today that are asked in your filed testimonies, would your answers be the same?
Yes.
Do you adopt your pre-filed testimony as your testimony here today?
Yes.
With that, I would like to move for the admission of Mr. Coleman's testimonies and exhibits as previously identified.
Thank you. Mr. Coleman's direct and surrebuttal testimony and the exhibits connected therewith are admitted.
Thank you, Chair. Mr. Coleman, have you had a chance to prepare a summary to share with us today?
Yes.
Please proceed.
Thank you. Good morning, and thank you, Chair Fenn, Commissioner Clark, and Commissioner Harvey for the opportunity to discuss my position and analysis regarding the cost of capital for Rocky Mountain Power. To begin with, I want to, I guess, talk about the elephant in the room, which is, I understand this is phase one, and there's going to be a phase 3 hearing that's going to be dealing with wildfire risks, the insurance premium, and different things like that as well. So we recognize there will be some risks that a prudent utility should face as far as wildfire risk and some of those elements as well. But what I've tried to do, which I think is what the commission asked to do, is to wave my magic wand and say, if we're not dealing with those things, what are the appropriate risks and the appropriate elements that need to be considered for a rate of return when looking at Rocky Mountain Power? And so as I'm giving my presentation, I'm basically trying to do it from that position as if all of the things that have been talked about with the hearing, which we know will be resolved potentially later on in phase 3, and if they're prudent or non-prudent are also going to be discussed, but I'm just trying to present what would be the financial reasons or what makes the most sense as far as the cost of capital and rate of return for Rocky Mountain Power. Last week, Chair Fenn, you shared how one of your favorite books is War and Peace, and you can keep, and you can handle long narratives as long as the story has an interesting plot. And at least I think that's what you said. It's subject to check. I had hoped to keep my comment short, but feel compelled in an effort to have the most complete and accurate record for the commissioners to discuss many of the points discussed by witnesses in the hearings. My hope is that the plot of my narrative is captivating enough to keep everyone engaged. As I've listened to the testimony of witnesses in this docket, there have been two different opinions offered. Mr. Garlish started the proceedings testifying that Rocky Mountain Power is very risky. That theme of an extremely risky company continued with many of the following witnesses, including Ms. Koblia and Ms. Boakley. With this general rate case, we continue to see a tale of two companies being presented in the data. One that faces higher risks because of capital market conditions, or a company that is less risky than the total market and less risky than the proxy group of companies, especially when risks encountered due to the company's own conduct are properly placed on shareholders instead of ratepayers. The divergence of opinions is clearly evident in the recommended return on equity of the company of 9.65% versus the 9.30% return on equity recommended by the Division of Public Utilities. Some argue that because of current monetary policy and the direction of interest rates, the Commission is justified in keeping Rocky Mountain Power's return of equity at 9.65%. Others argue that when looking at the total market conditions, along with the risks faced by Rocky Mountain Power, a reduction in return on equity is justified and sets fair and reasonable rates. Against this backdrop of differing opinions and expectations for the capital markets and risks faced by Rocky Mountain Power going forward, the Commission is tasked with the responsibility of setting a just and reasonable rate of return for investors and customers of Rocky Mountain Power. In my testimony, I've completed and included the calculations for the various models and recommended an appropriate cost of equity for Rocky Mountain Power. My recommendation is based on an evaluation using the discounted cash flow model, the capital asset pricing model, and risk premium models, along with experienced judgment on other factors that must be considered in Rocky Mountain Power's cost of capital recommendation. Based on my analysis, the appropriate cost of equity for Rocky Mountain Power is 9.3% with an overall weighted average cost of capital of 7%. My recommended return on equity and its cost of capital estimate is within the Division of Public Utilities calculated range of 9.20% to 10.10%. Sorry, technology got me. My testimony shows that when assessing a number of risks, such as interest rate risk, business risk, regulatory risk, financial risk, and liquidity risk, Rocky Mountain Power is less risky than the average market and less risky than regulated electric utilities. This is especially true given the relative strength of Utah's growing economy. The average allowed return on equity I calculated for 2024 is 9.69%. My recommendation of 9.3% return on equity fits the Hope and Bluefield standards of capital attraction, comparable earnings, and financial integrity. The company has argued, because of a number of capital market conditions, keeping Rocky Mountain Power's return on equity at 9.65% continues to adequately compensate investors and is just and reasonable. The company used many of the same financial models the Division of Public Utilities used to analyze the financial markets to support its recommendation of 9.65%. The Commission should put little weight on the financial calculations of the company because of its flawed analysis using the discounted cash flow model, capital asset pricing model, and risk premium models. The record before the Commission does not support a 9.65% cost of equity, and the Commission should set the appropriate cost of equity for Rocky Mountain Power at 9.30% with an overall weighted cost of capital at 7%. Finally, Rocky Mountain Power has argued that because of the unprecedented times, the Commission should offer regulatory support in the form of keeping its return on equity at the same level and accepting a hypothetical capital structure. The Division of Public Utilities agrees that this is unprecedented times where Rocky Mountain Power needs critical support to maintain its financial strength. The question is where that support ought to come from. When evaluating how to proceed in this unprecedented time, the Commission must consider why Rocky Mountain Power faces these financial pressures. Rocky Mountain Power faces these financial situations because of the incremental wildfire liability accruals and settlements, coupled with the company's sizable capital expenditure plan. Rocky Mountain Power faces significant wildfire liability due to its own negligent, grossly negligent, and reckless conduct as determined by an Oregon court. When determining the appropriate return on equity for Rocky Mountain Power, the Commission must consider what would be the prudent costs of the utility. A prudent utility is not one found to be reckless by a jury. Ratepayers should not be responsible for alleviating the financial strain caused by the company's conduct, as determined by the competent legal authority where the conduct occurred. Ms. Koblia was clear in her testimony that the company seeks ratepayer relief from the verdicts against it and the company's aggressive settlement strategy in light of the verdicts. The capital structure and return on equity is the wrong place to deal with the costs of wildfire risks as they appear in this case. The Commission should deal with those appropriate costs in the different operation and maintenance expenses or other places the Commission determines on the company's accounting records. While risks that exist for a prudent utility are a proper consideration in evaluating risk for purposes of establishing return on equity, to simply increase the return on equity in reaction to litigation results or agree to a hypothetical capital structure violates the fair rate of return principle. The Commission would be creating shareholder value by allowing earnings that are more than the weighted average cost of capital, not setting fair and reasonable rates. It is not the ratepayer's job to repair the company's financial challenges created by the company's negligent and reckless conduct, especially when its owner is clear about the lack of willingness to strengthen the company's equity position. Moving forward, I would like to address different points brought up in testimony last week and point out some inaccuracies in those comments. Additionally, I will attempt to articulate my recommendations and observations given in my direct and rebuttal testimonies. To begin, I wanted to discuss comments made by Mr. Lynn last week regarding bias. And I think these were as a result of some questions that you gave to him, Commissioner Harvey, so hopefully I get this right. In his testimony, Mr. Lynn stated he believed every party in this proceeding has bias. I can agree with Mr. Lynn with this statement if he was meaning that everyone has their own set of personal knowledge and experiences that will bias their testimony or recommendations. Instead, if Mr. Lynn was suggesting that everyone in this proceeding has bias in its recommendations to the commission because they are hoping for a certain outcome, this statement is not accurate. Mr. Lynn may not be familiar with the regulatory framework of the Division of Public Utilities, but our agency has the statutory requirement to balance the interests of ratepayers against the backdrop of a healthy, regulated utility. When offering recommendations and opinions to the Commission, the Division of Public Utilities may be the only party in this proceeding that does not have a bias towards an outcome. Instead, the DPU is attempting to provide to the Commission the most complete record so the Commission can make the most informed analysis of the facts. In an effort to update the information provided to the Commission and also to provide some clarity in the docket with what has been discussed in this proceeding, I have updated the average return on equity chart that was filed in my direct testimony to reflect the current conditions from 2009 to 2024. And I have actually put together an exhibit that kind of shows that for the parties.
The division proposes to circulate this as an illustrative aid if there is objection to its admission, or on redirect, I will seek to admit it as evidence.
Well, let's get it to Mr. Saban and Mr. Moskin. Do they already have it? Let's distribute it. and then-
I don't know what he's referring
Yeah,
to.
no,
I
that's
can't
why I
see
want
it,
him to
so, yeah.
pass it out
Will you
to,
get it from?
Yeah, that'd be
pass
great.
it out, and then you can decide whether you have an objection or not. Sure. But you can pass it out to all of us,
Yeah.
and then we'll consider to whether we're gonna admit it or not.
And also,
Please.
I don't know if I'm.
we also have a purely illustrative exhibit that will, I think, aid in pulling things together that we'd like to.
That's a
introduce at
different
some
one?
point. That is a different one that
Do
we'd
you,
like to
do
address
you
at
want
some
us
point.
to submit them, you want us to circulate them both now?
Yes, please.
Let's circulate them both, and then we'll consider whether we'll put them on, in the record. Yeah, is your microphone off?
No, thank you. Mr. Coleman, could you please put,
Hang on. I don't, before we get into putting anything on the record, we do have a strong objection to this. This misrepresents the evidence in this case, and this is not a document that was put into his testimony to which witnesses could respond to. For example, this has a line that shows Ms. Bulkley's recommended return. She has not recommended from 2009 to 2024 that figure. I've seen the documentation sheet that was presented by other witnesses showing the recommended returns. It's also not the case that the Rocky Mountain Power has recommended a constant number from 2009 forward. And so this also makes it sound like this is an S&P market intelligence report showing all of these things, which it's not. This is not there may be parts of this that are reflective of what you would see in the S&P, but the remainder of this is not accurate. So we do object to this, and I object to him presenting this, whether as illustrative or not, because it's not in his testimony. This is not anything he's covered.
Jimmy Schmidt, do you want to respond to that?
I believe that he has covered the components of this in his testimony, and it's been addressed by other witnesses, and this helps pull it all together.
All right, let's, Let's just take a 2-minute recess on this. So I'm still not sure exactly how I want to proceed on this. Okay, hang on. We'll be right back.
Thank you.
Have you seen the second exhibit? Go ahead, we're on the record. I want you to, the others have gone, but you can be here with me.
I'm thinking for just one moment.
While she's thinking, let me just, I understand that there's new thoughts that come to people as the proceedings go on. There's times where we would like to throw in additional material that, to augment our prior testimony that's been pre-filed. The problem with this is we're getting this today. Our witness has not had an opportunity to review it. And this is being submitted as if it's part of augmenting his direct and rebuttal testimonies. It's just fundamentally not appropriate to submit or talk about new materials in this context.
But if this is an attempt to summarize or recap material, I understand your objections about the lines that are, the horizontal lines that don't vary, mischaracterized testimony. You can make that objection on the record.
No, this isn't summary.
I'm talking about this one.
Well, this isn't summary. This is, there may be a line that's summary, but the document is not a summarization of anything.
I understand. I understand that, Mr. Sabin. Well,
Chair Fenn, may I approach and give you the second document?
yeah, let's see the second document.
It's the pink one.
Oh,
Or
looks
it's the-
like we
sorry,
have
It's
it.
the yellow one. Okay, he already has it.
All right,
Okay.
give us a second. I'm actually ready to rule on this, but I'm going to just talk to the other commissioners for just a second.
Thank you.
So, as I said, I was about ready to rule on this before, and haven't changed my position on it. Mr. Saban, your objections are noted, and generally, we don't look favorably upon information that is provided after surrebuttal. However, we're going to allow the witness to testify as these. We'll give it whatever weight we choose to give it. It's, you've already pointed out there are some significant errors in the graph. You can further just illuminate those. If, in fact, there is information in here you think turns out to be prejudicial to your case, after your cross-examination, we'll allow you to recall by video any of your witnesses that you think need to rebut this. It is indicated it's illustrative. That's, I'm assuming that the division takes a position this is really not new material. Frankly, I'm really only looking, the first part of that chart doesn't make much difference to me. I don't care. All right, I'm only looking at the last part of that chart. And I guess I have one other question before we finally resolve that, and that is with respect to these numbers.
I can address those separately.
That's, yeah, address those, please.
So during cross-examination of other witnesses, Commissioner Harvey asked about changes with an equity increase and a debt reduction. This yellow paper illustrative exhibit is merely to aid the commission and the parties if Commissioner Harvey asks that again, because there are so many numbers it is difficult to keep track of.
Okay, well, all right, so that's helpful. Again, we may end up not giving any weight to this at all, but I'm not gonna sustain the objection so that he can't use this to illustrate his testimony. Again, Mr. Saban, you can go after this in cross-examination, and if you're concerned at the conclusion of your cross-examination that you think there's material here that is still prejudicial to your case, I'll allow you to try to remedy that. That's my ruling. Okay, let's continue.
Thank you. Mr. Coleman, can you pick up where we left off?
Yes.
Can you give us a sentence or two ahead of where you left off to help us put it in context?
I would briefly discuss, sorry. I was saying before, I've updated the average return on equity charts that was filed in my direct testimony. Sorry, you're right. I have updated the average return on equity chart that was filed in my direct testimony to reflect the current conditions from 2009 to 2024. And that's what this illustrative exhibit shows. In my direct testimony, I had done a chart that was basically showing the average return on equity from S&P Global Market Intelligence, and I believe it ended approximately about 2020. Also in my direct testimony, I had verbally discussed how those average return on equities had changed from 2020 and had seen an increase in that as well. And so if you look at the blue line on this chart, going from 2009 to it's basically the first quarter of 2024, which was the most recent information that I had, that will show the average return on equity according to S&P Global Market Intelligence from 2009 to that point. And so you can see that there was a distinct downward trend until about 2021, and then the trend from that point has gone up a little bit. Ms. Bulkley also discusses this in her testimony when she talked about how the average had gone from 2.60 to 2.82%. The orange line, because we're talking about Rocky Mountain Power, is basically charting the vertically integrated return on equities, again, as calculated by S&P Global Market Intelligence, and that does show the downward trend again until about 2021, until 2024. I think this basically emphasizes the point that I was trying to make before. If somehow the Division of Public Utilities was biased, we probably wouldn't want to show that the rates were going up from 20 to 2024, because that may not support our position as strongly. But what we believe is the most important is getting the information in front of the commission so that they have the appropriate information to make the decisions. I will also agree with what was discussed earlier. The 10.3, or the green line that is going across there, in this case, Ms. Bulkley has not recommended a spot return on equity. She has been pretty particular about a range from 10.25 to 11.25%. I will talk more about the ranges in a little bit. So the green line there is me basically saying, if we were to put a point in Ms. Bulkley's range, where do I approximately think that would be? I put it at the low end of the range, 10.30%, again, because I believe Rocky Mount Power is a less risky company. I don't believe these ranges are correct, and again, I'll talk about that. But if you're looking at a range, I believe where Rocky Mount Power should be is at the low end of the range, and so I've done that, which I think would, if I wanted to, I could have gone significantly higher with that as well. So it's just to illustrate where in the information that's been provided is Ms. Bulkley's recommendation compared to the other elements of that as well. With the other line, I'm not suggesting, and I went back and forth on if I should have put the different amounts as far as what Rocky Mount Power has got in different rate cases. I do have that information available, and if the commission would like, I'm not suggesting I put it in there, but I can provide that information for the commission. But the blue line there is basically showing what Rocky Mount Power is saying the allowed rate of return and the recommended ROE should be at 9.65% as of today. And then the bottom line, the purple line there, is what I have said in the testimony as far as what we believe the total market return as calculated using the risk-free rate of 4.08% and Kroll's equity risk premium of 5.0%, which would be 9.08%. Those lines are there to just basically illustrate some of the points that we were representing, which I will talk about more as we continue, in the fact that Ms. Bulkley's recommendation is significantly higher, 117 basis points higher. Okay, sorry, let me step back. Where I put in the information as far as 10.3%, that's not Ms. Bulkley's recommendation, but using her range, that's 117 basis points higher than what the total market return is. If you look at, again, the 9.65%, as far as basis points with that, when you're looking at 9.08%, that's over 50 basis points higher than where either the company or Ms. Bulkley is recommending the rates of return should be. I'll discuss those points more, but this was just to kind of give a quick summary of some important information that I think has been discussed not only by me, but by other witnesses in this case. And even if you go back and, like I said, review Ms. Bulkley's testimony, she talks about how those average rate of return went from 9.660 to 9.82%. So I am representing what Ms. Bulkley said in her testimony.
Okay.
So that's the information there. Continuing on, in her testimony before the commission, Ms. Bulkley emphasized a couple of times the importance of quotation marks.
So are you done with this chart?
For now, yes.
Okay.
Yeah. I'm not going to refer back to it anymore. I will use some of the points in there as far as basis points and some of those things later on in my summary, but I won't be pointing back to that chart specifically.
All right, I think that's helpful to know. Okay, please continue.
I'll start over kind of where I was at, just so we're all. In her testimony before the commission, Ms. Bulkley emphasized a couple of times the importance of quotation marks versus paraphrasing. Ms. Bulkley indicated that if she was using a direct quote of the witness, she would have used quotation marks. While if there were no quotation marks, she was giving her understanding of the witness's position. I would caution the commission to pay close attention to when Ms. Bulkley paraphrases others' opinions. She seems to often not get the statements of the witness correct or only shares half the story. One example of this that I can point out to the commission is Ms. Bulkley's discussion around market-to-book ratios. Ms. Boakley suggests Dr. Morin and Dr. Bonbright did not support the use of market-to-book ratios in setting ROEs for Rocky Mountain Power. Ms. Boakley even pointed to the Commission to Section 12.5 of new regulatory finance by Dr. Morin. My caution to the Commission is to pay close attention to what Dr. Morin is suggesting. In Section 12.5 of the textbook, Dr. Morin discusses how using market-to-book ratios are not recommended when setting a return on equity for a company. The Division of Public Utility never used market-to-book ratios to calculate the return on equity for Rocky Mountain Power. As has been testified earlier, my return on equity recommendation was made using the discounted cash flow model, the capital asset pricing model, and bond risk premium models. In my direct and rebuttal testimony, I never recommended that the Commission should set a rate that attempts to have the market-to-book ratio equal 1. Instead, the market-to-book ratio was used as a financial theory to support the claim by the Division of Public Utilities that over the long term, it appears utilities have had earnings that were adequate to compensate investors for the risk of investing in regulated utilities. The ratio can serve as a useful measuring stick to evaluate the results The ratio can serve as a useful measuring stick to evaluate the results arrived at through modeling and the adequacy of historical rates of return. This attempt by Ms. Boakley to suggest an inappropriate use of market-to-book ratios is another misstatement and misapplication of my testimony and correlates with many other items that I put in rebuttal and surrebuttal testimony where Ms. Boakley was not adequately paraphrasing or stating my testimony or other witnesses' testimony. The crux of the argument between Ms. Boakley and myself is how to deal with the simple fact that regulated utilities are less risky than the entire market as a whole. In all the pages of calculations and analysis done by Ms. Boakley, she never expresses what she believes the appropriate or actual total market return is for the entire market. The simple fact is Ms. Boakley marginally discusses the total market return by suggesting that the equity risk premium of Kroll is too low. The discussion of the total market return is very important for this docket because of the well-established principle that Ms. Boakley also agrees with that regulated utilities are lower risk than the entire market. Ms. Boakley never discusses how her recommended range of 10.25% to 11.25% is just and reasonable when it is higher than the total market return. If the Commission accepts the position offered by the Division of Public Utility that the total market return is 9.08%, then Ms. Boakley's recommendation is at least 117 basis points higher than the total market return. The only justification for such a high return on equity is that Rocky Mountain Power, as a regulated electric utility, is a significantly higher risk than the total market. As a point of reference, Ms. Boakley claimed no adjustment was needed to Rocky Mountain Power's business risk because of Rocky Mountain Power's return on equity of 9.65% was well below the average return on equity of 9.80%. Ms. Boakley seems to suggest that a 15 basis point deviation is a significant one. Yet when it comes to her 65 basis point deviation downward to Rocky Mountain Power's requested 9.65% return on equity, she raises no concern about the justness or reasonableness of the company's request being insufficient to attract capital. This same idea applies to the 117 basis point deviation from Ms. Boakley's suggested range and the total market return of 9.08%. She's never discussed or tried to defend how her range is just and reasonable when it's that significantly higher than the total market return. In my direct and rebuttal testimony, I discuss how Ms. Boakley's model calculations are biased upward and do not reflect the investor required return. Let me illustrate another set of data that supports my claim that Ms. Boakley's model calculations are biased upwards. Ms. Boakley argues that the investor required return is in the range of 10.25% to 11.25%. This recommendation comes from her belief that those rates are where the financial model she uses overlaps. Ms. Bulkley, other witnesses, and I provided a range for return on equity for the Commission to consider. A simplified way to look at the ranges provided is where the witnesses would believe the Commission should set just and reasonable rates that would meet the standards set by Hope and Bluefield cases. If the Commission was to set a return on equity outside the range of 9.20 to 10, if the Commission was to set a return on equity outside the range of 9.20 to 10.10%, I would argue that those rates were not just and reasonable because it did not meet the standards set by the Hope and Bluefield cases because it was falling outside of what I felt was the range of reasonable rates. Ms. Bulkley never indicated if she agrees with my simplification of ranges and what they would suggest, but I believe Ms. Bulkley would argue that just and reasonable rates for Rocky Mountain Power should be between her calculated range of 10.25% to 11.25%. I have a difficult time understanding how Ms. Bulkley can accept the company's number of 9.65% when it falls outside of her recommended range. Hypothetically, if an investor in regulated hypothetically, if I was an investor in regulated utilities, and it's definitely hypothetical here, I would be very interested in the cost of the company and how the regulated utility was going to recover all of its prudent and just costs. If a regulated utility was recommending its cost of capital below the appropriate range of costs for the utility, as this hypothetical investor, I would be concerned about the decisions of the regulated utility and more than likely would invest in another utility that was recovering all of my required return as an investor. With my hypothetical shared above, if the actual equity costs of a company are within the range of 10.25% to 11.25%, a rational investor is not going to invest in a utility that is recommending a return on equity of 9.65% because that lower return on equity will not cover all the costs of the utility. If Rocky Mountain Power's actual capital costs are in the range of 10.25% to 11.25%, as suggested by Ms. Bulkley, then a 9.65% return on equity will impact the utility's ability to attract capital. Rocky Mountain Power has been able to attract debt investors who will invest in the company at a return on equity of 9.65%. Ms. Koblia testified the company expects no further equity investment from its parent. Looking at all these different facts in total, it's hard to accept Ms. Bulkley's model calculations can give much direction to the investor required return. Rocky Mountain Power in this case has spent a lot of time discussing capital attraction and how the Commission needs to provide regulatory support to ensure it can attract capital. When discussing attracting capital for Rocky Mountain Power, in reality, we are discussing issuing bonds in the credit markets. In 2024, Rocky Mountain Power issued $3.8 billion in first mortgage bonds. This bond issue was fully subscribed, and Rocky Mountain Power did not have any apparent issues in finding debt investors who are comfortable investing in the company. As discussed multiple times by Commissioner Harvey, Rocky Mountain Power has one equity investor. The only way for Rocky Mountain Power to attract equity capital would be by a cash infusion of Berkshire Hathaway or selling the entire company to another company. Rocky Mountain Power does not have the ability to go to the equity markets and issue additional shares of stock to investors. The division is not sure if there is any level of return on equity the Commission could set that would allow Rocky Mountain Power to raise equity capital. On February 24, 2024, Warren Buffett, CEO of Berkshire Hathaway, in his letter to shareholders when discussing utility investments, stated that the company would not knowingly throw good money after bad. Ms. Koblia reinforced this position in her testimony. The company's parent seems committed to withholding further equity while the company's legal problems concerning wildfires continue. This may not be consistent with the utility's obligation to provide safe, adequate, and reliable service. Of course, as discussed by Ms. Bulkley, the Commission is not setting rates for the entire Pacific Corp footprint. Instead, the Commission is setting the appropriate rates for Utah ratepayers and should look primarily at Utah. When looking at capital attraction, it appears that Utah is the state that Berkshire Hathaway Energy would be interested to invest its capital. Does that mean my time's up?
No, I mean, I rushed this morning and didn't turn my phone off.
Oh, okay.
I apologize.
No, you're okay.
I'd probably rebuke anybody else. I'll rebuke myself.
So I'll just go back. No, you're okay. When looking at capital attraction, it appears that Utah is the state that Berkshire Hathaway Energy would be interested to invest its capital. Greg Abel, CEO of Berkshire Hathaway Energy, suggested that Utah has set the gold standard when dealing with wildfire liabilities. It appears the equity investor of Rocky Mountain Power perceives the potential exposure to wildfire risks is lower in Utah than most, if not all, states it has set because of the gold standard. As discussed in my rebuttal testimony, an optimal capital structure is an important piece of information to determine if a lower credit rating or higher interest rate on bonds will actually lead to higher capital costs. Rocky Mountain Power argues its actual capital structure may be insufficient to maintain its current credit rating. Rocky Mountain Power claims that a credit rating downgrade will increase the capital costs, increasing the cost to ratepayers. This statement is hard to assess without an optimal capital structure calculation. Rocky Mountain Power makes the same claim about interest rates, that an increase in the interest rate in the market will increase the capital costs. Again, this statement is only correct if Rocky Mountain Power is at its optimal capital structure. The reality is that no party has provided the calculation of an optimal capital structure, so the Commission should put little weight on the premise that overall capital costs will always increase when interest rates decrease or credit ratings are downgraded. To end, I want to refer the Commission to Ms. Bulkley's Phase 1 rebuttal testimony, lines 1230 to 1240, which I'll quote directly. I'll give you a minute to get there, though. It's Ms. Bulkley's Phase 1 rebuttal testimony, lines 1230 to 1240. And just to give a little bit of context, Ms. Bulkley is talking here about wildfire risk and kind of how the Commission would potentially want to look at wildfire risk or use that determination to understand how Rocky Mountain Power compares to a proxy group of companies. I think that's enough time. So this is what she said. I'll still wait. It looks like Mr. Sabin is still waiting to get there. Okay. The enactment of Senate Bill 224 says nothing as to the company's wildfire risk relative to the proxy group, which is essential in determining the cost of equity for the company. In the current proceeding, the development of the investor required return is based on a proxy group of risk comparable companies. While the proxy group is generally compared to the company, it is always the case that the proxy companies do not have exactly the same risk profile as the subject company. As such, the company's risk factors must be compared to the risk factors of the proxy group to determine the appropriate placement of the return on equity within the range of results established using the proxy group companies. Therefore, it is not reasonable for Mr. Coleman to conclude that the company's business risk is reduced by a change in regulatory policy alone. What I would suggest, although Ms. Bulkley is talking here about wildfire risk, I believe that same process is what the Commission would want to go through when evaluating risk and looking at the totality of all the risks that Rocky Mountain Power has faced. What determination I think the Commission is making, and again, I'm always uncomfortable telling the Commission what thoughts they have to have themselves because you know better than myself, but in reality, what I believe is happening is the Commission is looking at each individual risk factor and saying, where on this range is Rocky Mountain Power compared to a group of similar regulated utilities, proxy group, or the total market? The division's position through all of this is when you're looking at a range, because of the business risk, which is much lower than the proxy group of companies, when you look at the regulatory risk, which is similar or slightly lower, and you look at all of the other elements in totality, the conclusion that can be drawn is that Rocky Mountain Power is a less risky company, a less risky utility than a comparable proxy group of utilities, and absolutely is less risky than the total market. And so I believe, just like Ms. Bulkley is talking about there, that evaluation of risk and where does Rocky Mountain Power fall on the risk scale is vital to the commission. And when you look at the totality of all of the different conditions, Rocky Mountain Power is less risky, and that's why we recommend as a division 9.30% as the appropriate return on equity for Rocky Mountain Power and a weighted average cost of capital of 7.0%. And I hope the plot was exciting enough, but that finishes my narrative.
Thank you, Mr. Coleman. Ms. Schmidt, do you have anything else before we turn him over to Mr. Saban for cross?
I do. Mr. Coleman, do you recall earlier in your summary that you discussed Oregon wildfire litigation?
Yes.
I believe that you may have stated RMP when you should have said Pacific Corp, and I'd like to just ask a couple specific questions to see if that is correct.
Okay.
Do you agree that the Oregon litigation, of which you are aware, involved Pacific Power and Pacific Corp, not RMP?
Yes, that is correct.
And so those things should be corrected.
Yes, in that instance, if I use Rocky Mountain Power, that would have been me using it incorrectly. It should have been Pacific Corp and or Pacific Power. That's where the litigation has been happening, is in jurisdictions that are not in Rocky Mountain Power. Okay, Power's footprint.
Thank you. That is my only question. Mr. Coleman is now available for cross-examination and questions from the commission.
All right, Mr. Saban, we'll turn to you for cross.
Thank you, Mr. Chair. Mr. Coleman, I'd like to start with something just a question about something you said right near the beginning of your statement, where you talked about an elephant in the room, and you noted that there would be some discussion in Phase 3 regarding wildfire risk and insurance cost increases. Do you recall that part of your statement?
Yeah.
I want to understand, are you saying that when you did your ROE and capital structure analyses that you did not factor in or did not already take into account any of those risks? In other words, that you've excluded them for purposes of your financial metrics?
I think the appropriate way to look at that is prudent risks. We recognize that all utilities are going to have some wildfire risks. They're going to have liability risks and other elements as that as well. I don't know what the prudent amount is going to be. The commission is going to set that in Phase 3. And so what we have said all along is, as a prudent utility, I have tried to evaluate what the risks are and what the appropriate capital costs and financial elements would be looking at a prudent risk. So to say that I excluded all of them would not be accurate, but I don't have any way to quantify, which we haven't done, and I don't know that anyone has, and I believe those quantifications are going to come in Phase 3. But no, to say that I completely didn't include them wouldn't be accurate. But I'm not saying that all of those costs probably should be included either. That will be determined in Phase 3.
My question is, did you consider those risks as part of your ROE and capital structure analysis at all?
Could you be more specific on those risks? We've talked about a lot of risks, so I would
The elephant in the room risks that you started your summary with.
Well, yes, and in fact, I appreciate you bringing that up. I think I did in my rebuttal testimony talk about the wildfire risks, which is one thing that Ms. Cobley had brought up. I would also like to refer in looking at the wildfire risks, where she tries to say that that Rocky Mountain Power is more risky by using the FEMA Wildfire Risk Index. I already talked about that a little bit, how I don't think it's accurate. But if you look in my Sir rebuttal testimony, and I can give you the exact lines here in just a second.
Yeah, just so you're clear while you're looking, and I'm happy to let you answer that the way you want, but my question was, did you, not did others, not were you responding to others? I'm just asking if in your, let's say, direct testimony, you present ROE figures, you present capital structure testimony, did you factor in to any degree, any of those risks, the risks of wildfire liability or the risks of insurance, or did you, for purposes of calculating your numbers, entirely exclude it? That's just what I'm trying to get an understanding of based on your statement in your summary.
Okay, and I answered that before you asked the follow-up question, which is that because looking at prudent risks, we evaluated some of those prudent risks, but you asked me to go further with it, which is what I'm trying to do right now.
I guess I didn't understand that. So are you saying that you've made some determination of prudence that you?
No, I didn't.
Objection. I believe that the question has been asked and answered.
I don't think it has. I'm going to overrule the objection. I think, but I do think he was trying to elaborate upon the question you asked, and I don't think he's giving you a yes or no answer, if that's what you're asking. He's trying to answer the question wherever he was headed when we had an interruption.
Yeah, let me make sure. I'm really actually just trying to understand what you did and didn't do at this point, because then it might help me know whether I need to ask more questions. If you took into account some portion of insurance or wildfire risks, what I'd like you to tell me is what portion you did take into account and how you determined what portion to use. If you didn't take into account any of that risk and you've set it aside waiting for the commission to make a determination, that's what I'm trying to understand. Does that make sense, Mr. Coleman?
It does.
Okay.
I want to get back to what I was saying before, but I will answer what he's asking right now as well. To say we didn't consider it would not be accurate, but to know how to unravel that is not fair or accurate. And the reason why, in looking at that in the capital costs of the company, I will give one example. In 2024, Rocky Mountain Power issued $3.8 billion in debt. In our testimony, we talked about how we believe that debt was a result of wildfire risk. How do I assess that? How do I say, well, that wildfire risk doesn't happen? Did we evaluate it? Yes, I have to, because Rocky Mountain Power has issued that debt, which I don't believe they would have issued absent of the wildfire risk and the things that are going on right now. So did we evaluate it? Yes. Did we look at it? Yes, because there are decisions that have been made by Rocky Mountain Power. Ms. Colby had talked about this as well with the credit downgrade. The Treasury spreads increased because of that. So to say that we haven't evaluated or looked at it is not accurate because of actions by Rocky Mountain Power that affect their financial situation, their capital structure, and other things. We have looked at it. Now, can I say to what amount?
Yeah, you can, but let me just make sure you understand. I'm not suggesting one way or the other for you. I didn't say that you didn't take it into account. I was asking whether you did or didn't, and I ask you to explain how you did if you did.
Okay.
And go ahead and provide the rest of your answer, and then we'll come back to that.
I will. And my answer was, as far as the total amount of what that would be, is I believe going to be discussed in phase 3. We know that those things are going to be discussed there. I had to look at some of the things because of decisions made by Rocky Mountain Power. So to say that I didn't look at it is not accurate. To say that I looked at the total cost is also not accurate. There are some risks in there. I don't know how you unravel all of those things to say this specific element was looked at in our ROE to say yes or no. But what I will say, and this will get to what I was going to say to Mr. Sabin as well, I do not believe that the wildfire risk for a prudent utility, and especially Rocky Mountain Power, I believe that they are less risky than the entire market and definitely less risky than utilities. And the information that Ms. Bulkley tried to provide in that does not support that. And that's where I was trying to get to of what I pointed out in my sur rebuttal testimony.
Okay. And again,
And which I would still like to be able to comment on whenever you're done with your question.
please, go ahead and get it all out, and we'll get good to my questions.
Okay. Well, you brought it up. I'm not.
No, I didn't bring that up. I didn't bring that up at all. I asked you just to identify one thing for me, whether or not you did.
Wildfire risk and whether I did or didn't. And now
Yes.
I'm illustrating what I looked at and what was in my sur rebuttal testimony dealing with wildfire risk.
Okay.
Mr. Saban's already indicated you could answer
Go ahead.
Give the example or the
Okay.
further commentary.
You're in your sur rebuttal testimony, you say?
Yes, I'm
Okay,
going
where-
to,
where in
starting
your
at
sur rebuttal
lines
testimony?
994.
Sorry, 994, you say?
Yes.
Okay. All right, go ahead, whenever you're ready.
Okay. Here's what is happening is we looked at the FEMA's risk index that Ms. Bulkley tried to use to suggest that the wildfire risk for Rocky Mountain Power was higher than the proxy group of companies, which I said I don't agree with. I don't believe that using this index is the appropriate way to show that. I want to look specifically now. It's going to be starting, it looks like about line 998. I've indented, this is coming directly from the FEMA website. And this is going to talk about natural hazards. Natural hazards are defined as an environmental phenomena that have the potential to impact societies and the human environment. These should not be confused with other types of hazards, such as man-made hazards. For example, a flood resulting from changes in river flows is a natural hazard, whereas flooding due to a dam failure is considered a man-made hazard and therefore excluded from the National Risk Index. When looking at that and what I evaluated with wildfire risk, I don't know how you can support what Ms. Bulkley said, because any of the wildfires that would be created by an electric utility, in reading that definition of a natural disaster, would not fit into the criteria that FEMA is using, because all of them would be man-made. If a electric line goes down, that is man-made. That is not a natural disaster according to FEMA's information. So I don't know how to take what Ms. Bulkley gave to us to say that that is somehow showing that Rocky Mountain Power is more or less risky. I am saying, and I do also say this in my sur rebuttal testimony, if you're looking from an investor standpoint, as far as the risk that they want to understand, they would like to know what is their limit of liability dealing with wildfire risk. House Bill 224 by the state of Utah limits the wildfire risk for a potential electric utility. And so that lowers, in my mind, the risk of Rocky Mountain Power, because Utah has the gold standard, which was said, I've already talked about that in my summary, has the gold standard. So that means that Utah is higher than any of the proxy group companies. And if you go back and you listen to Ms. Bulkley when she was being questioned on the stand, she basically said a company that has defined risk versus a company that has open-ended risk, an investor is going to invest in a company that does not have the open-ended risk. They are going to invest in a company who has defined risk. When looking at wildfires, which is what we did we say that wildfire risks is less for Rocky Mountain Power? Yes, because the state of Utah, which Ms. Bulkley tries to argue in her, and I'll let you read what she says so you can determine it. Our opinion is because the state of Utah has put into place some ways to limit the risk to investors, in investors' minds, which again, Berkshire Hathaway Energy is the primary equity investor in the state of Utah, has said to them that that lowers the risk for the utility. So did I evaluate that? Yes.
Okay.
To what amount? I can't give you that number because I don't know how.
So to be clear then, you don't, you couldn't point to us in your analysis how the numbers may have moved based on what you just talked about. Is that correct?
No, that's not what I said. I said when you understand the risk, again, when you refer back to Ms. Bulkley and the words that I quoted from her, you have to do an evaluation of what the risk is. Is it higher or lower? I think I've consistently said when looking at wildfire risk, we believe the division is lower risk than a proxy group of companies. So can I give you an exact amount that says it should go up by 1 or 2 basis points? No, but in the range, they are less risky. So looking at that one component compared to totality says the risk of Rocky Mountain Power is lower, therefore they should have a lower return on equity than a comparable group of proxy groups. I think that's what I've said.
Okay, I think I understand where you're at. So now, I want to talk about that risk that you're just talking about. You keep switching between Pacific Core and Rocky Mountain Power.
Sorry, you're right, I do.
That's not, I wasn't chiding you for
Okay.
that. I was going to ask a question about that. You realize, of course, that Rocky Mountain Power, to the extent it operates in Utah, is not a legal entity that only operates in the state of Utah, correct?
Yes,
So we're not, when assessing the appropriate ROE for this company, we can't draw a line around the borders of the state of Utah and say that is the only risk that they're exposed to, is whatever they're exposed to in the state of Utah, correct?
I'm not sure how to answer that because your own witness talks about standalone risk and says that the commission must look at the standalone risk for the state of Utah. That's what Ms. Bulkley said.
Okay.
I'm
happy to let Ms. Bulkley talk about that, but what I want
okay.
to understand is, in your risk analysis, did you, in looking at what we just talked about, what you just spent 10 minutes talking about, is that focused only on the state of Utah?
Yes, and if you look at the business risk that I did,
It was just a yes or no question. Yes, you looked only at the state of Utah, correct?
I don't understand. Other witnesses have had an opportunity to explain their foundation for the answer to what they said.
I'll let your
But-
counsel, I know, but I don't, we're gonna,
Yes.
it's gonna take us 3 hours if
We've
we
already
if we
done a
do
week
that.
and a half of hearings, so I don't know why I would be limited in doing the same thing that others had had, but the answer is yes.
Okay, so in that respect, I want to talk about your statement about prudence and fires being started by, quote, "the company." First of all, as it relates to the wildfire that you're referring to, I think, in James, in your statement, is it your testimony that Rocky Mountain Power started that fire, that you know that, and that that's what the jury determined?
I think if you look in my testimony, I will say the words that came from the legal document itself. I'm not an attorney. I looked at what was said in there. I'm not putting any type of legal element forward because I have to deal with the financial risks and what are known by investors and other people out there.
Do you know whether or not the determination was that the company was grossly negligent for failing to turn off the line or not?
Objection, I believe that that's going further into the details of the case than Mr. Coleman has gone. And it's asking for more of a legal opinion than he is qualified to give.
Mr. Coleman just pointed us to FEMA and said that it was a man-made caused fire. I think it's pertinent to know whether in his assessment of responding to my witness, whether he made a determination of it that was man-made or not.
I'm going to overrule the objection. I don't think it's calling for a legal conclusion. That's not what you're asking for. You're asking for him to give his understanding of the wildfire that occurred.
So you just referred us in your surrebuttal testimony to lines 996, and you read a quote that had to do with natural hazards versus man-made hazards, correct?
Yes.
Do you know whether or not the James fire was a naturally caused or man-made caused fire?
All I can say is I know in the hearing that the verdict was read by different witnesses, and the wording that I used in my testimony is wording that came from the legal document. I can't say any more to that aspect of it because I didn't go, I'm not a legal attorney. Me reading through that is not going to provide a lot of value. But what I will say, when you're looking at investors, they are very aware of those risks, and they are trying to evaluate for them what is going to be a place that they should invest or not invest. That's how I evaluated it, because I come from a financial standpoint and background. I don't know the legal aspect, and I think that gets back again to what I said in Phase 3. I believe a lot of those elements are going to be discussed in Phase 3 by people who are more familiar than myself. But in Phase 1, we're dealing with the financial aspects and what is the appropriate return on equity for Rocky Mountain Power. And so that's why I gave the statement before.
So other than reading the verdict itself, you don't know?
I didn't read the verdict. I heard what was said in the docket here, and having having others in our office who are helping me to understand that, they said, this is where, and I cited that information in my testimony, this is where the verdict came from, and this is verbiage that is used in that hearing. I don't know the proper term, but we'll go with hearing. That's the extent of my knowledge.
Okay, so again, you don't know, as you sit here and as you did your analysis, whether or not Pacific Core was deemed to have started the fire or not, right?
I'm going to object here. I'm here. I'd like to lodge an objection just on the basis of relevance. I think that the jury verdict has been entered into the evidence, and the jury verdict speaks for itself.
I agree with that, and I don't think, I think he's already testified he doesn't know anything about the specifics of the James case, so I'm going to sustain the objection. Let's move on.
For the record, I'll just say it's relevant because he made it relevant by pointing me to the FEMA paragraph he's relying on for purposes of his ROE calculation and his capital structure calculation. He made it relevant.
I understand the relevance. I think he's answered the question that he has lack of knowledge as to the specifics of the James case.
That's fine. If you don't know one way or the other, then we'll have other witnesses speak to that. That's fine. Okay.
Well, let's make sure that I didn't misinterpret what he was saying, but that was my understanding, is all you know about the James case is what the jury said with respect to the findings of gross negligence, willful, and reckless. Is that what you were saying, or do you know more about it that you could answer Mr. Saban's question?
Here's what I would say. There was a vast amount of information provided in this docket by the company. I tried to focus on the financial aspect of it, which kept me plenty busy, so I didn't have time to go look at the legal opinions or anything else other than what was expressed or stated in this docket. I spent the time on what my area of expertise is, which is capital markets, financing, debt, bond, those type of things. That's where my primary focus was.
Okay, let's move on to another line of inquiry.
I'm sorry, Mr. Chair. I think he just did not agree with your characterization of his, and I think I'm entitled to know whether he does or does not assign some, whether in reading this and whether in his analysis, whether he assigns any fault for starting the fire to the company. And if he doesn't know, that's fine.
All right, answer the question that was asked as to whether you know and can assign, did you assign any fault as ask the question again, Mr. Saban, and then we'll see if there's still an objection. Ask it.
Just my simple question is beyond what you heard, did you, in coming up with your assessment here and the FEMA information you're reading, did you assume that this was a fire that was caused by the company, or did you not assume that?
If you're referring to the FEMA information, I'll peel back a little bit there because I don't know with what they're talking about I'm not trying to deal with liability. What I am saying, though, is that FEMA, I believe, if you read that, would say anything that's created by a man would be a man-made disaster and would not fit in the FEMA index. That's what I said.
And my question to you is just, do you know whether it was or was not man-made?
If a jury is saying that Rocky Mountain Power was those different things that we said, they've already said what their position is. I'm just saying that the risk for Rocky Mountain Power is significantly less because what Ms. Bulkley tried to show as far as the wildfire risk doesn't apply. It's not accurate. It's not appropriate. I don't know all the other aspects that's going on out there, but she was trying to talk about wildfire risk and using that as some way to move the return on equity higher. And I'm saying it's not possible to do that because looking at FEMA and what they talked about, if it was a risk that happened because of an electric utility, their index isn't even capturing that. So the way that they do the reds and the blues and the yellows isn't even capturing that. And so her analysis to try to prove that the ROE should move a different direction is faulty. And that's all I'm trying to say.
So just, you don't know anything beyond, you know, as far as causation, you don't express
I've never
opinion
talked
one
about
way.
causation. I said what the jury has decided. I've never talked about causation. If that's
That's perfect, thank you. I'll move on then.
Thank you.
All right, as it relates to the risk assessment you're just talking about, though, that does beg the question, you agree that Rocky Mountain Power or Pacific Core Utah was not named in that particular lawsuit, correct?
You'll have to help me connect the dots. I'm not sure when you're talking about risk assessment and who's in there, how I'm supposed to respond to that.
I'm just trying to get a clarity on the entity. When you keep talking about the risk assessment, which entity are you talking about?
I am talking about when I'm looking at the return on equity in this proceeding. Sorry, I haven't been more particular. I would, in essence, be saying Rocky Mountain Power, Utah, because I believe the risks that the commission is trying to evaluate, which Ms. Bulkley, it appears, agrees with me, is the standalone risk, which is specific to Utah. So when I'm saying Rocky Mountain Power, sometimes I'm talking about it generally, but when I'm talking about the return on equity in this situation, and I'll try to be more clear and say Rocky Mountain Power, Utah, if that will help going forward, but I am talking about the specific risks that are appropriate for the electric utility that is serving customers in the state of Utah.
Okay, so when you did your ROE and capital structure analysis, you're only looking at Pacific Core, Rocky Mountain Power in Utah, not Pacific Core writ large. You've not taken into account the broader context of the risk exposed to Pacific Core. You're focusing only on the Utah component. Do I correctly understand that?
No, Mr. Saban, and my testimony even talks about that. Sometimes I have to look at, because again, we're looking at credit agencies. I reviewed the credit reports for Rocky Mountain Power, which are not filed by state jurisdiction. They're filed for Rocky Mountain Power. So to say that I can only look at Utah is not accurate, which everybody in this proceeding knows, because I pointed out, and Ms. Bulkley tried to again to use credit reports as a way to show the Rocky Mountain Power was somehow more risky. But I said in there specifically, quoting the credit reports, that investors believe Rocky Mountain Power, because they are in this 6-state grouping, and because of some other elements with that, view them as a less risky utility than any other utility within the electric market. So no, I can't say that I only looked at Utah-specific risks, because sometimes it's not possible to do that. When I can, then I try to look at that. What the commission needs to do, though, is try to look at it specifically for that Utah risk, and good luck, have fun with that. I don't know exactly how you can do that, especially with the way this is, but that's what you're supposed to do, is look at it for the Utah risk.
So so next question then. So when you say the company is less risky than proxy group people, other proxies or other vertically integrated utilities, are you looking at the entirety of Pacific Core, or are you looking at Rocky Mountain Power Utah?
With which evaluation?
With the analysis where you say that they are, in your estimation, less risky than others. When you say they, who is the they that is less risky than the proxy group or the other companies you're looking at?
Okay. Again, I said this before, but I'll try to say it again. When I'm talking about the return on equity for this proceeding, and I'm saying they, I am talking about Rocky Mountain Power Electric Company that is in the state of Utah. That entity, which I know is not an individual entity because of the way we're set up, but because of what the commission needs to do, which your witness points out numerous times again, and I know I'm beating a dead horse, she said the same thing. You have to look at the standalone risk of Utah. So when I'm saying they, as far as they are less risk, in Utah, the risks faced by Rocky Mountain Power's assets, whatever you want to say, in Utah, the customers in Utah are facing less risks because of a variety of different risks than the proxy group or comparable companies, comparable group of companies as well. I'm not always able to say just Utah, because sometimes the things we're dealing with is Rocky Mountain Power information. So I will try to, again, I probably won't do very good, but I'll try to be more particular, specific about that. But I think the commission understands my position. When I can and when it makes sense, I'm talking about specific Utah information, like what I bring up as far as business risk and looking at the economy of Utah, I don't look at, okay, let me start over. I looked at the other states, but Utah's economy is stronger than any other economy. Did I look at Utah-specific risk? Absolutely, because Utah is the strongest economy. So where I have data and information that is available where I can assess just Utah, I evaluate that. But every time, no, because I can't, because that information isn't there or available.
Thank you. Last question on this issue of risk. Have you any place in your or at least I should say, I'm not aware of any place in your testimony where you, like Ms. Bulkley and others, have done a complete risk assessment of the totality of risk conditions vis-a-vis the proxy group and the company. Do I understand correctly that you've not done that?
I'm glad you bring that up because I wanted to actually point out a few things. So can we look at, which is business risk, can we look at?
Can you answer my question first, and then I'll let you go further. Can you just answer whether you've done that or not?
I believe I did because, again, if you're looking at the economy of Utah and comparing that to the proxy groups, Utah is the only, Rocky Mountain Power Utah is the only investor-owned electric utility in the state of Utah. So when I'm evaluating the economy of Utah, absolutely I'm comparing that to the proxy group of companies, to the entire United States as far as utilities in the total market. And when I say that Rocky Mountain Power Utah is less risk than the proxy group of companies, I have evaluated that according to, do I put a chart up there that shows every other one? No, because it seems to me that the commission is smart enough that when Utah is the strongest economy, I don't need to put up a chart showing all 49 states because they're going to be below Utah in that evaluation. So any other utility operating in those states, by that definition, are going to be more risky because of that aspect of business risk than the other companies.
So in saying that, you're doing it on a state economic basis, not on a utility by utility basis or a proxy group comparison, correct?
No, I am. I just said that I was because there is no utility operating in the other states and I think this is a fundamental difference between ourselves and Rocky Mountain Power's position. They don't recognize the importance. Let me peel back. It appears that they don't seem to recognize or agree with the importance of business risk, which I point out in my testimony where Dr. Morin says one of the most important elements of business risk is the regional economy. They never once discuss or bring that up or say, you know what, the regional economy of Utah is strong, so maybe we need to tweak or adjust our ROE recommendation because of that. So I am looking at business risk. I am trying to understand that compared to all of the utilities, but I would also like to point out where I have some difficulties with Ms. Bulkley and what her, when you're done with your questioning, but I would like to show where I'm not entirely sure what Ms. Bulkley is trying to get at with her assessment of business risk and what she provided in the record.
All right, I'm going to switch topics. Can you pull this document up?
Can I answer? I want you to have your opportunity, but this is important for the commission.
Oh, we'll let your counsel pursue it. That's fine.
Yeah,
Let's go to
I
this.
think that you need to respond to Mr. Saban's questions, and on redirect, you can have
Okay,
Mrs. Schmidt
all right.
ask you those questions. So we'll go forward with what Mr. and I'm going to just give you just one other caution. Where Mr. Saban is asking you a question that can be answered with a short answer, and then he's allowing narrative, and he's allowing you to expand upon your answer. If you can answer yes or no, do so, or if you need to
Okay.
qualify
All
it,
right.
do so. But I
Okay.
think that will help move the cross along. That's
Okay,
Would you pull this document up, please, that you talked to the commission about real quickly?
sure.
Firstly, I just want to make a couple of points. The bottom line there that you show is total market return. What does that represent, that line, in your chart?
That represents basically the calculation of a risk-free rate of 4.08%, which is also in my direct testimony, and the equity risk premium of Kroll, which I talk about extensively, also in my direct and sur rebuttal of 5%.
Okay, and so that's not a representation of the market return from 2009 through 2024, correct?
No, and I don't know that that's trying to say that that's a market return. If you look at the top of what I put in there, it's S&P Global Market Intelligence Electric Utility Average ROE versus Integrated Average ROE from 2009 to 2024, which is the two trend lines there. That's what the chart basically says. That's what those two trend lines are there.
Yeah, well, we can disagree about what it looks like it's presenting. You're not saying that from 2009 to 2024, S&P Global Market Intelligence is showing that there was a market return of just above 9% from 2009 to 2024, correct?
No, but I can point in information provided by Dr. Woolridge that actually shows what the risk-free rate and the equity risk premiums were for Kroll for that time period. Right now, I'm calculating in what they're suggesting would be 9.08, but it has varied over time, and that information's there. So I'm not saying that for all of those time periods it was there, but in what's important for now, 9.08 is what the total market return is for what we're dealing with the company and this proceeding.
Okay, secondly, the green line, I think you made this point, but I want to make sure it's clear. That green line is your own, you're not suggesting that Ms. Bulkley throughout 2009 to 2024 somehow was always advising or taking the position that that ought to be the return, whatever that number is, 10.3, I think you said, that somehow that's been her recommended return for from 2009 to 2024, correct?
Correct.
And you're also not saying that that is a position she's taken in this case, right? She did not recommend 10.3, right?
Correct.
So you just arbitrarily put that number there yourself, correct?
I tried to use some reasoning as far as what felt acceptable, so arbitrarily, that's your word. Did I put a number there? Yes.
You chose what you wanted to reflect as her ROE, correct?
At the lowest end of her range.
Okay. Is that the lowest end of her range, 10.3?
10.25 would be the ultimate lowest end. I think I said that repeatedly, and it's the range 10.25 to 11.25.
All right, lastly, the yellow and blue lines that actually do move over the period from 2009 to 2024, are you saying that is S&P Global Market Intelligence?
Yes, I pulled that information from their site. I would believe that the information should fairly correlate with what was in my direct testimony, and then I added, like I said, the additional from 2021 to 2024 just to try to provide that information to the commission.
That's fine. We'll let Ms. Bulkley address that. All right, next. Want to talk about, you focused on 9.65% being not within the range of Ms. Bulkley's results. Did I understand that right?
Ms. Bulkley's range is from 10.25 to 11.25%. That she says overlaps. Now that she has some model calculations that are going to be less than that, but what she says as far as her overlapping, and I believe the range that she recommended, where she says it overlaps, is 10.25% to 11.25%.
Understand. So let's go to, do you have, let's see, do you have Ms. Bulkley's exhibits with you?
Yeah.
Would you open up her exhibit? It's AEB-1R.
Give me a second to get there. And this is rebuttal testimony?
Yes, I believe it's the first exhibit to her rebuttal testimony.
Okay, maybe I thought I had copied over enough, but I am not getting to it quickly, so maybe if someone has a paper copy of it, I apologize.
While you're looking for that, let me just ask counsel. It appears that Mr. Coleman's cross will continue for some time still, and I want you to be able to continue your cross until you think there's a good point to take a break. So, but we will need a morning break.
If you want to take a break now, that's fine. I can get the exhibit and give it to him, and that's fine. No
Okay,
problem.
we'll come back at 10:45. We will resume our Mr. Saban's cross-examination of Mr. Coleman.
All right, Mr. Coleman, just to try to speed it up a little bit, I've given you AEB-1R in the exhibits. This is the first exhibit to Ms. Bulkley's rebuttal testimony. And I just want to confirm, and all you need to do is confirm or not, whether the 9.65 is within the results of her DCF mean and medium.
Yes.
Okay, thank you. All right, now I want to switch topics for a second and just talk about your recommendations in this case. You're recommending an ROE of 9.3, is that correct?
Yes.
And your range that you base that on is a 9.2% to a 10.10%, correct?
Yes.
Can you just briefly tell us how, in that range, you decided to put 9.3 as opposed to any other point in that range?
Yes, because of the risk analysis that I looked at and believing that Rocky Mountain Power, which I stated in direct and rebuttal testimony, Rocky Mountain Power, Utah, is less risky than the comparable proxy group of companies. I believe they should be at the low end of the range, which would be 9.3%.
Okay, and so that, if I'm understanding you, the 9.3 and the reason you're at the low end is tied to the risk analysis that we just talked about before, correct?
My risk analysis, yes.
Okay, thank you. All right, and you got there to the 9.3 as between the 10.10 and 9.2. You talk about and we can go there if you want, it's in page 34 of your direct, you talk about, you add 40 basis points to one of the figures, and you subtract 50 basis points from the average authorized ROE to get to the 9.7, which is kind of your median point there. Is that right? Maybe we'll just go there. I feel like I'm confusing you.
No, I know what you're talking about, but the way you characterize it is not how I would have done the analysis, so I'm not sure how to answer that.
Well, let's do this. Go to page 34 of your direct, please. Let me know when you're there, sir.
Do you have a line number as well?
Sure, yeah. We're going to go to the very bottom of the page, and there's a Q&A at the bottom of the page. Do you see that? My understanding, and we can read this quote, but my understanding is to get your range, you took the RRA average for utilities, and on the one side, you added 50 basis points, and on the other, you added 40 basis points, and on the other side, you subtracted 50 basis points. Is that correct?
Yes.
Okay. So, and that is how you developed your range from 9, what did we say? From 9.20 to 10.10, correct?
Yes.
Okay, so on the lower end, you subtracted 50 basis points, and on the upper end, you added 40 basis points. Can you tell me why you did that in an asymmetric way? Why did you add less than you subtracted?
Just with my own personal knowledge of the markets and what I felt was going to be an appropriate range to look at, using that theory from RRA as far as standard deviations. I felt the range 9.2 to 10.1 was appropriate. I don't know that there's any specific that would be the reason why.
Okay. You testified in the last rate case as well, isn't that right?
The last Rocky Mountain Power rate
Yes,
case?
excuse me.
Rocky
Yes,
Mountain
thank you.
Power Utah rate case?
Correct.
Yes.
That was in 2020?
Yes.
And there you recommended an ROE of 9.25, correct?
Yes.
Okay. Dr. Woolridge testified, as well as Ms. Bulkley testified, that in their view, since 2020, the cost of equity has increased. I want to make sure I understand your position on that point. Do you believe the cost of equity has increased from 2020 to 2024?
Are you talking on a totality basis, or are you looking at just one element of the risk?
I'm not looking at the risk per se, I'm just looking at the, whatever market factors you're looking at. Do you agree? I mean, Dr. Woolridge looked at a number of factors, Ms. Bullock looked at a number of factors, and both of them believe, I'm not saying they agree on the numbers, but they both have testified that the cost of equity since 2020 has gone up. And I'm just wondering if you believe, whatever factors you've looked at, if you agree with that assessment.
As of 2020?
No, from 2020 to the 2024 period.
Sure, but that, you want me to use 2020 as the reference point, saying if cost of equity has gone up?
Yes, and all I mean is from 2020, if I take that as a point in time and I look at where we are today, has the cost of equity gone up in your mind?
There's so many different elements as far as the risk that goes into that, that a simple yes or no is not easy, but if you look at my answer, 9.25 to 9.3 is higher. Now, if I am able to give the background as far as why I would say those elements, I think those things have drastically changed, and a lot of those things are brought out in my rebuttal and direct testimony, rebuttal and direct testimony.
I understand there's factors. For now, all I'm trying to understand is whether you, in gross, believe the cost of equity has gone up or gone down.
My recommendation from 2020 was 9.25. My recommendation in this proceeding is 9.30. I'll let everybody else determine what they believe that means going forward.
So you have no opinion from a utility standpoint, the utility industry or a proxy group of companies? You're not expressing an opinion about whether the cost of equity has gone up or not?
The cost of equity is not one point. I wrote, and I think Chair Fenn said this, 87 pages of direct testimony and 40-some-odd pages of rebuttal testimony. He might have said it was voluminous. I can't answer that specifically because my testimony is in there saying as far as why cost of equity should go up or should go down, looking at 2020 versus 2024.
I was just trying to find the cross-exhibit number we're on. I believe it's 5 for Rocky Mountain Power cross-exhibit. So, yeah, I believe that's right. Okay. All right, Mr. Coleman, I've handed you Rocky Mountain Cross Exhibit number 5, which is your testimony, your direct testimony, I should say, from the 2020 Rocky Mountain rate case. Do you see that?
Yes.
Would you, can you confirm that that is your testimony?
It looks like what I have put together, so I'll say, famous word, subject to check, it looks great.
Okay, thank you.
If I may, are there exhibits that are not included here?
This is, I wasn't going to be referring to the exhibits.
Perfect, that's fine. That is fine, just
Sure,
checking.
yep.
Thank you.
Yep. All right, I move to admit Rocky Mountain Cross Exhibit number 5.
Without objection, that exhibit is received.
All right. Could you turn with me to page 5 of that testimony, please?
Okay.
And that's where, that chart at the bottom of the page confirms that's where you state your 9.25 recommendation in the last case, right?
Yeah, I see that there was a recommendation of 9.25%.
Okay. And then now if you'll skip to page 10 with me of that testimony.
Okay.
Are you there?
Yes.
Okay. What we're going to do now is, I want to just focus on the Q&A that is about halfway down the page.
Okay.
Starts on line 184 to 186. Do you see that?
Yeah.
So there you say, using the average year-to-date ROE of 9.55% and a 40 to 50 basis point variance as determined by RRA, the reasonable range for an electric utility would be 9.05% on the low end to 10.05% on the high end. Do you see that?
Sure.
So first of all, you agree with me that the range you used back in 2020 was lower than the range you're using here. And again, to remind you, the range here is 9.20 to 10.10.
Yes, and that's because the average ROE was lower to begin with.
In 2020, right?
Yeah.
And so average ROEs have gone up since 2020, correct?
Yeah, I had that in my direct testimony.
Okay. Now, in this case, the 2020 case, instead of doing an asymmetrical adjustment, you did a symmetrical adjustment. You did 50 on the one end and 50 on the other instead of doing an asymmetrical adjustment. Can you
Yes.
tell me why you did it there symmetrical, but here you're doing an asymmetrical adjustment?
I think it comes back to what I said in my summary. I believe when you're looking at the range that is recommended by an expert witness, part of what they're saying is what they believe is going to be the just and reasonable rates for an electric utility. So back in 2020, when looking at the information and I had to come up with a range, that's what I felt was an acceptable range, considering all of the market factors and different things that would be appropriate. In this case, looking again at the range of information that's available and what I would feel comfortable in recommending that would be an appropriate rate of return, I felt that this time 9.2 to 10.1 would be the acceptable range that I would feel comfortable potentially recommending, depending on the risk of a company and where they fell on that risk profile of a return for that hypothetical company.
What has changed since 2020 to 2024 that caused you to apply a different approach to calculating your range than you did here?
I don't believe that I applied a different approach. What I did is I looked at what the average return on equity was for the electric utilities at that time, and then using the premise from RRA as far as one standard deviation away could be within 40 to 50 basis points. That could determine a range up or down. I did that same process again with this one. I looked at what the average return on equity was that was calculated, and then I looked at 40 to 50 basis points. I happened to do 40 on one end and 50 on the other end, but I think my process was the same. I didn't do 40 on the low end and only 10% on the high end or something. I did 40 to 50, which is what RRA said. So I believe my process was the same. Did I not do exactly 50-50, but the process and the way that I got there, I believe, was the same.
Okay, but and had you done a symmetrical one, you would have, on the upper end, ended up at 10.2%, correct?
If I did 50-50 on both sides, it could be 10.2, yes.
Okay. Now, same page 10, that sentence below, you say, even when looking at the vertically integrated electric utilities, the range would be 9.17% on the low end to 10.17 on the high end. Do you see that?
Yes.
And that's because you had different ranges there because it's true in your mind, vertically integrated utilities are higher risk than non-vertically integrated utilities, correct?
I think I was going off of the reference point of the average return on equity there. The vertically integrated companies that was provided there was higher. So if you go through the same analysis, that would increase the range for the vertically integrated companies.
And that's true, generally speaking, that the returns for vertically integrated utilities, the average at least, runs higher generally than non-vertically integrated utility numbers, right?
I think my I can't say it. This chart thing that I put together doesn't always show that that's true. The orange line is sometimes underneath, and the blue line is sometimes above. So I don't know that I could definitively say that that's true or not.
Well, certainly since 2021, that's been true, right?
Sure, but you didn't give me a time frame.
I'm with you. I understand your point that you're making. You didn't, in this case, though, do a vertically integrated utility analysis, right? You didn't go get the ROEs for, the average ROEs for vertically integrated utilities and do the same range that you did, as you did it down in 2020, excuse me.
I think if you, I don't know that I specifically differentiated between vertically integrated and when I was looking at it. I had a reference point of what that would be. I'd have to go back and check and see if it was average for electric utilities or vertically integrated. I don't remember that point.
You don't remember, so you don't know what the number would be if you took the average RRA number for a vertically integrated utility and then did the adding of 50 or subtracting 50, however approach you would do. You don't know what that range would be?
You're asking me today if I know that?
Yes.
I can get to that point.
Do you know?
I have the information.
Do you know what
'cause
the average RRA for vertically integrated utilities would be for the time frame you used here?
I can pull that up because I have the information in the
Okay,
chart.
go ahead.
Yeah, give me 1 second.
Thank you.
It appears, according to the information that I had, and this will only be quarter H1 is what RRA was saying, that number is 9.74%. And so at that point, the ranges would be, if you're doing 50%, it would be 9.24%, and it would be 10.24% if you're doing both 50 to 50, or 10.14% if you wanted to do it instead of the 50-40 like I did for this one as well.
Thank you. Could you now open to Ms. Bulkley's rebuttal testimony to page 8, please?
You said page 8 of rebuttal?
Yes.
Okay. Give me 1 second. Okay, I believe I'm there.
So do you see the top of the chart there that Ms. Bulkley has provided the average for 2024 at 9.82%? Do you see that?
Sure, but I don't know if above or below this, it's telling me the time period that we're looking at for 2024.
I'm sorry, I'm not sure I understand.
You're showing 2024. I don't know what frame of reference. Is that 6 months? Is that only the quarter? Is that the entire year?
It's, the footnote she provides at the bottom says it's data through September 30th, 2024, so cumulative from January through September 30th, 2024 is my understanding.
Okay, then that's her calculation.
So if I were to do your adjustment now, and I took 50 basis points down, that would be outside of, that would be above your 9.3%, isn't that right? The low end of the analysis would be above where you ended up.
Yes, but as I talk about in my testimony as well, there's always adjustments and changes that are going to happen because of information that's coming at a different time. I did my analysis. I also did the range for what I believe is reasonable. But there's another element of what I think is being missed here that I try to bring out. We look at the models to come up with the cost of capital, and then we have to use a judgment and evaluation to say, what do we think is the appropriate return on equity that is appropriate for the utilities? So because Rocky Mountain Power is lower risk, I believe that they would be on a lower end of the range there. And I would have to look at the models and to see if they accepted that as well with as far as the analysis with that. So if you take one data point, I may be two basis points off with my recommendation of 9.3, and it's not in 9.32, but I don't think that's significant in the scheme of what we're dealing with today and looking at a return on equity for Rocky Mountain Power.
Well, I think my point's a different one. My point is that for you to develop your range, you take the average market returns for vertically integrated utilities or non-vertically integrated utilities, depending on the year. But you did that in this case, and you did it in 2020 to develop your range. And if I do what you did here with the 9.82 as the average, your range doesn't, your 9.3 recommendation falls outside of the approach you have used for purposes of setting the range. That's right, isn't it?
Sure.
Okay. Give me 1 second. I think that's it. Thank you.
Thank you, Mr. Saban. Does anyone else have cross? All right.
I have some questions.
Please, Mr. Moore.
Mr. Coleman, do you remember a brief discussion regarding wildfire hazards and whether they should be looked at through the 6th state, Pacific Core, or the 1 state of Utah?
Yes, we had discussion about that.
Do you have Mrs. Buckley's direct testimony?
Yes.
Could you please turn to page 51?
Okay, I'm there.
Could you read the sentence on line, starting based on the FEMA rankings on line 1021 and ending on group operations on 1024?
Sorry, Robert, I'm not following where you are. Where are you at?
I'm on direct
52?
testimony of Buckley,
Yes?
page 51.
Oh, 51, okay. I don't see what you're reading on 51 or 52, but maybe or where you're referencing. Do you have the right page?
Yeah, page 51 of direct testimony. Sorry, I probably shouldn't interject, but that's where I'm at.
Yeah, that's where I'm at
Direct
too.
testimony.
Maybe I just misunderstood.
Maybe I'm sorry, I have problems with dyslexia. I might have stated something wrong. Do you see the question? Have you considered any analysis to evaluate the wildfire risk in Utah as compared to the jurisdictions in which the companies in the proxy group operate?
Yeah, I see that, and what I show in front of me is page 51, direct testimony of Annie Bulkley. It's lines like 1021 to 1025-ish or so is where that conversation happens.
Could you read the the first sentence is yes. Could you read the sentence that comes after the yes?
Based on FEMA's rankings of the expected annual loss associated with wildfire for each state, I have conducted an analysis to compare the wildfire risk of Utah to the jurisdictions in which the utility operating subsidiaries of the companies in the proxy group operate. Specifically, I have applied a numeric
That's
rank-
fine. I just wanted that first sentence. Thank you. So it's clear that Mrs. Buckley's analysis deals with Utah, not the 6 states.
Objection. This is an incomplete, he's only representing 1 page of the whole analysis that goes on for 20 pages or so. I'm just noting, I don't think that's a fair characterization of her full testimony on this point.
I think your objection is noted. I'll overrule the objection in this sense. We can look at the context of the testimony as we're evaluating this. We'll give this whatever weight we choose to give it, but you can answer Mr. Moore's question to the extent you can.
Sure. From what I read there, it looks like Ms. Bulkley conducted an analysis to compare the wildfire risk of Utah to the jurisdictions in which the utility operating subsidiaries of the company and the proxy group operate. If you look at her attachments, which she also goes through that analysis as well, she's comparing Utah to the full proxy groups of companies as well.
Thank you. That's all I have.
Okay. Any others? Okay, let's turn to Ms. Schmidt for any redirect that she has.
I have very limited redirect. Mr. Coleman, do you recall that you and Mr. Saban had a lengthy discussion in which you said you considered some wildfire risk in your analysis of the company's cost of capital, but that you didn't precisely quantify what share of the company's risk was due to its imprudence? Do you recall that?
Yes.
How does the wildfire risk that you considered in setting the cost of capital for Rocky Mountain Power appear?
So part of the analysis that we did looked at not only Rocky Mountain Power, Utah, and the wildfire risk there, but inherent in the proxy companies are going to be some companies that are located in the West. They'll be located in other parts of the United States. And so we were looking at the comparable wildfire risk for those companies compared to the situation in Utah. And so I believe that we tried to look not only specifically at Utah, but at the wildfire risk for these companies and the potential wildfire risk that's just out there for that's known in not only the Western region, but any other parts of the United States as well.
That is my only question. Thank you.
We'll go back to Mr. Saban for recross.
Very, very quickly, I just want to make clear I understand your position. Are you saying that the relative risk for the company is not higher from a fire standpoint, fire mitigation or fire exposure standpoint, than the utilities in the proxy group?
When you're looking at the financial risk, which is what I believe I've been determining with this as well, I believe that in the state of Utah, so Rocky Mountain Power, Utah, has some elements in place, House Bill 224, that limits the risk, the liabilities, the potential costs to investors in the state of Utah. Because that is in place, I believe that the wildfire risks in Utah are lower than the comparable group of proxy groups. And I don't know that Ms. Boakley's analysis, I don't believe that anyone else has shown information. I talked about the wildfire risk that Ms. Boakley tried to put forward as far as the index. I don't believe that anyone else has provided information that sways my opinion in the fact that there is less risk to Rocky Mountain Power, Utah, from a financial investor's perspective than other proxy groups or companies.
And I just want to be clear, did you go state by state for the proxy group and look at the fire risk exposure to the utilities in those states? Did that happen?
Are you suggesting, say, like the same thing that Ms. Boakley did? Like
No,
in
I'm
her-
asking whether you've looked at the legislation in Utah. Did you go and look at any of the other risk, in making the statement you just made that you think it's lower risk? What information did you look at in the states where the proxy utilities resided to come to that conclusion?
So I looked at two different subsets. First, I looked at other Rocky Mountain Power, for lack of a better way to say it, affiliates. So companies that are in Wyoming, Idaho, Oregon. My understanding is none of those states have any legislation or any the similar type of support that is provided by House Bill 224 in the state here. I also am relying on the statement of the equity investor of Berkshire Hathaway Energy that talks about, again, what the legislature did in the state becomes the gold standard for other states to go towards as far as wildfire risk. I don't know. I mean, I reviewed this. The only other place that I'm familiar that has a fund, and it's vastly different than Utah's fund, is California. And other than that, I don't know of other states that have that. So or other jurisdictions that have that. So, again, did I do a chart showing, I don't know that every state has this? No. But in my expert opinion, and there wasn't any information provided in this docket that says anyone else has that type of legislation. Rocky Mountain Power hasn't provided, no one else has provided it to change my opinion that the wildfire risk, as far as the financial part of it that investors are looking at, is different because of, again, I believe that the wildfire risk is lower in Utah because of House Bill 224 and some of the steps they have taken to limit the financial exposure to investors with that fund.
I
Or,
guess,
sorry, that legislation.
so setting aside the jurisdictions in which the company does business, you didn't look at the other states, is what you're saying then, to see if they have that?
Myself and no one else in this proceeding.
Just wanted to make sure I understand the basis for your statement. And the last question, did the level of, did the DPU and in your work make any assessment of prudence or imprudence, and did that factor into the analysis, the ROE or capital structure analysis you did?
The only way that it factored in is that we believe that a commission needs to set the rates according to what would be prudent for a utility to do that. So when we're making our recommendation, the ROE is going off the premise that the utility is acting in prudent ways that are in the public interest.
And again, we may not be connecting. I'm just trying to find out, did it affect did you take that into account, prudence or imprudence, in your recommendations in your testimony and what you came to for an ROE and a capital structure?
I think my answer is it depends, and that's exactly what I said before. It would depend on what the prudent costs and risks and other elements of a prudent utility would be. So did we look at those things? Yes. So the answer is it depends. We looked at a certain level of prudence in trying to determine what would be the appropriate return on equity that should be set for Rocky Mountain Power Utah.
So which wildfires did you determine to be prudent versus imprudent for purposes of your analysis?
I don't think that I went to that level because, again, what I said is we were trying to determine what would be the prudent expenses and costs for all costs. I mean, we're talking about wildfire, but as a utility and what we do as far as the Division of Public Utility, we are trying to assess and determine what expenses are just and reasonable and which expenses are prudent. And so in my area, when I'm dealing with finance, I looked at what would be appropriate for a prudent managed utility as far as the return on equity and what the risks are for that prudent utility.
I see. So the numbers you've come to assume a prudent utility. Is that what you're saying?
I think I've stated that in my testimony a few times,
Okay.
but
Thank you. That's, I think I now understand. That's all. Thank you.
Thank you. We'll turn now to Commissioner.
Pardon me, could I just have one moment?
Sure. You can have one moment.
Based on Mr. Saban's questions, I do have one more question I would like to ask, if I may.
Well, we'll ask, this is unusual, but we will allow redirect for the one question that you have, or follow-ups as necessary.
Upon reflection, I don't think it's necessary anymore. Thank you. No question.
Thank you. All right, we'll turn to Commissioner Harvey.
Hello.
hello, Commissioner.
Just want to start with a few clarifying questions and then dive into hopefully some substantive things. But referring to this handout
Yes.
that was the S&P Global Market Intelligence, et cetera.
Yes, yeah.
Based on the answers that you gave to Mr. Saban, I would ask you if this is correct. I would characterize a more accurate way of doing this as having point estimates for the 3 horizontal lines at the far right-hand side of the diagram, with possibly 1 point estimate at the general rate case on the blue center line.
Yes, that would have been more accurate to do the point estimates for the total market return, and for my suggested recommendation of Ms. Bulkley within her range. Point estimates would have been a much better way to illustrate that.
All right, thank you. But then, just to make sure I'm clear, the lines that do move, as you and Mr. Saban discussed, your representation is those are data that you didn't do any adjustments or modifications to. You're simply relaying the information that you got from the S&P Global Market Intelligence.
That is accurate. The only difference for 2024, and I think I brought this out and Mr. Saban did as well, would just be timing. This says I believe it's the first quarter of 2024. It doesn't go all the way through September, so that's why there would be some differences between what Ms. Bulkley and I recommended. But that's what I had at the time, what I could see as the most accurate information.
All right, thank you.
You're welcome.
Then the second thing you handed out, I think you referenced in your summary that was sort of a preemptive effort in response to questions I had to ask of other witnesses.
I remember you asking this to 2 or 3 others, so I thought I could maybe come up with an answer.
All right, thank you. So I appreciate that. I'm assuming the fact that you've put on yellow paper is the DPU is considering these numbers confidential.
Yeah, I can give a little context as far as where they came from, just so everybody knows and is comfortable, but they are confidential. Or Rocky Mountain Power deemed them to be confidential. They came from one of their exhibits.
Okay, that's fine. And yeah, and I think they're pretty self-explanatory. I just wanted to make sure I didn't get in trouble there.
Okay.
All right, turning to more substantive things here. You started out your summary by responding to witness Lynn about bias, and you mentioned that in your opinion the DPU was not biased. I'd like you to explain just in a little more detail what you view the statute as requiring DPU to consider in broad terms when it makes recommendations to the commission.
Thank you. I believe that as the division, we have a balancing act. We have to make a recommendation that is going to be just, fair, and reasonable for ratepayers, but also not go so far on that pendulum that we're not able to allow the regulated utility the opportunity to cover their costs and also provide a return to investors. And so when the division is doing their analysis, myself, and you'll hear from a number of different witnesses today, when we're doing that analysis, what we believe our statutory requirement is to provide the most complete and accurate information to the commission so that you can make that determination as far as what is just and reasonable for the company and or for ratepayers. And the division is the only one that I'm aware of in this proceeding that has that responsibility or that balancing act. And it's not always easy, but we do try to avoid bias as much as possible.
All right, thank you. All right. There's been a lot of discussion about I guess you should say the corporate structure of PacifiCorp. I'd like to just clarify a tiny bit there. In terms of the Certificate of Public Convenience and Necessity, I guess actually there's a lot of them, but but thinking of that as a general concept, it is PacifiCorp, the 6-state utility, that actually holds those certificates in Utah, right?
I'll be honest with you, I don't know for sure, but that's my understanding. I believe that they do have the CPCN, but I didn't review that, so If someone told me different, it wouldn't break my heart, and I wouldn't be surprised, but I believe that's true.
Okay. And do you remember, Mr. Saban referencing that RMP and that Rocky Mountain Power and Pacific Power are not corporations, they're divisions within Pacificor?
Yes,
Okay, and you agree with that as being your understanding?
yes.
Okay. So when you refer to RMP Utah, and I understand, I think, why you might use that term, but clarify for me what it is you're trying to express with that terminology.
Thank you. I guess the best way to probably try to explain that is, again, from a ratepayer's perspective. Going back to the discussion of bias, we know that we have to look at both the company and ratepayers. But I believe when I say Rocky Mountain Power Utah is what is going to impact and affect ratepayers in the state of Utah as far as the costs that are appropriate for those ratepayers to pay. I understand that there are different assets that are going to be in different places, Wyoming, other places like that as well. And there may be some allocation factors that come into play with that as well. But ultimately, when I'm saying Rocky Mountain Power Utah from my investor's perspective is what are the appropriate risks that Rocky Mountain Power Utah faces that is going to help us have an understanding of the appropriate return for the risk, the opportunity risk that those investors are taking. So that's kind of how I would characterize it.
So your understanding clearly is that the commission, the Public Service Commission of Utah, is responsible for setting rates for Utah customers with a few little tiny exceptions on the borders, correct?
Yes.
Okay. And so when you're thinking about those just and reasonable and the DPU mission, you feel that statutorily your focus is purely on those Utah ratepayers in terms of the ratepayer portion of the just and reasonable?
Yes, I believe so.
Okay. But then when we look at Pacificor, the company, RMP Utah can't issue bonds, correct?
That's my understanding, yes.
The bonds would be issued by Pacificor.
That's what's happened in the past, yes.
Okay. So when we talk about balancing investor and ratepayer interests, my characterization of what I think you've said is that on the ratepayer side, it's pretty straightforward. We're looking at Utah, but on the investor side, you have to, in some aspects, think of the whole company.
If there isn't some way to get the information specific to Utah, then yes, there will be times when investors are going to look at the whole company, or investors look at the whole economy or the whole market, which will play into what is happening in Utah as well.
Okay. And in rough measure, what percentage of Pacificor customers are located in Utah? What percentage of the total Pacificor customers are located in Utah, approximately?
I'll probably get this wrong, and so you may want to ask someone else, but I think it's 44%. But that's just me going off of conversations, and so subject to check. I believe that's what it is.
And your understanding is that Utah is the largest jurisdiction within the six-state utility?
Yes, I know Utah's first. I believe Oregon is second, and then the other ones come in an order after that.
Okay, all right. Turning to wildfire risk, and I know we have a phase 3, so this is going to be very short, but it has come up in cross a lot. Tell me if you agree with this characterization or not. In my mind, I think of there being two types of wildfire risk. One is Mother Nature, lightning strike, something like this that causes a wildfire, and it might damage utility property. as the first type. A second type would be, as was brought up several times, the idea of the man-made, where there would be a human-caused risk. And I don't see there being a lot of other possibilities, but does that seem reasonable to you? Or
That seems like a fair characterization, yes.
all right. And so, in terms of impacting ratepayers, in terms of potential future rates, it would be the second category that we worry about a lot, relative.
Yes.
Okay, thanks.
And the second category was your man-made, I believe, right? Okay,
Yes.
then yes.
Okay. All right. Then turning to the range of reasonable ROEs that was discussed a fair bit. Do you view the actual recommendation that you have provided to the commission or the range that you've provided to the commission as being the more important piece of information?
That's a good question. How I would say is I believe the range gives the commission the ability to kind of look at, in my opinion, what I think would be the right boundaries or the right area, but I think the 9.3% recommendation is what I'm saying. In my expert opinion, looking at all of the different factors, that's the most appropriate number that the commission should use. But having done utility regulation for a while, I recognize that there may be some give and take, and other people may not see it exactly as myself. But I believe the return on equity, and then also another element of that would be the weighted average cost of capital. Those are two important elements, and those spot points I think are important.
Okay. And the division's recommendation, that final recommendation, is not centered in the range, right?
No.
So if, for whatever reason, you had decided to do a symmetric range instead of the asymmetric, that wouldn't necessarily have changed your recommendation.
That's correct. My recommendation was off of the risks that I evaluated and where I felt was appropriate, giving all of the totality of information. So if my range was at 10.10 or 10.20, would not have changed my overall point recommendation of 9.30, which I think is what you were asking.
Okay, let me just double check a couple things. And then the very last area, you have mentioned that you feel, to use your terminology, RMP Utah is less risky than a number of other alternatives, including even other Pacificor states, the reference group, and utilities in general. Have I got that right?
Yes, and I think that my direct testimony and rebuttal testimony goes through a number of reasons why I feel that way. But yes, I would say that fairly characterizes the testimony I filed in my position today.
And a large part of that is the legislative changes that have been done recently?
That's part of it. I think another element that's a big deal is the economy of Utah, and that the economy is growing. Rocky Mountain Power is dealing, so that element of the business risk is, to me, an important element as well. But wildfire risks and the legislation is definitely important, given the other aspects of the business risks with Rocky Mountain Power. So I think there's a totality that you look at, but those are two important elements that would be, I think, making me comfortable to have the return on equity at the lower end of the range.
Thank you. That's all the questions I have.
Thank you, Commissioner Harvey. We'll turn to Commissioner Clark.
Thank you. I don't have any questions. Thanks, Mr. Coleman.
Mr. Coleman, I just have a couple of questions to clarify. First of all, I think I want to say I did refer to your testimony, your direct and your survey rebuttal as voluminous. I don't want that to be interpreted as a derogatory comment, however. Without stating whether I agree or disagree with your testimony and conclusions, I will say that I found it very interesting to read, and the comments and the quotations and lengthy sometimes quotations from experienced authors in the finance field, Parcell and Kroll and Moran and others. I found it interesting, so I just state that so you don't misunderstand my comment about your voluminous testimony.
I appreciate that. The division also believes it was voluminous, and I got an internal award for the longest testimony, so I think they'll agree with you, so.
Okay, well, I'm not sure I should offer congratulations or not.
Condolences might be appropriate
Yeah,
as well,
yeah.
so, yes.
The second thing I want to mention is with respect to this chart and this is not confidential, I'll hold that up. The chart that we had a fairly lengthy discussion about whether this was prejudicial or not, and I allowed it to be used for illustrative purposes. I just want to say I think the commission won't give much weight to these years before the 2020 period and forward. And I just also want to note that I think that we understand that these three horizontal lines that appear to be static clearly are not so. That's for whatever purposes you held them constant, they're not constant in reality, and so this is not an accurate representation, at least as to those three lines. So,
And I agree with you completely. And like I said, Commissioner Harvey, it would have been better if I would have done a spot point. I didn't, but your way you're representing that is what I was hoping to illustrate. So.
Sure, and we'll give it whatever weight we choose to give it in our deliberations. I also have a clarifying question, and I may just not understand this, but on page 34 of your direct testimony, Mr. Saban asked you some questions about the determination of the range, and you started with the 9.70% and used that data point, and then in line 866 and 867 it says, using this data point and the 40 to 50 basis points in variance as determined by RRR, and we see the citation to the footnote 67 below. I'm trying to understand, is the 40 to 50 basis points those are your numbers, or is that determined by RRR?
RRA, but
RRA,
I can
I
explain that
misspoke.
for you. That's okay. So in previous testimony, I talked about this study that they did. So RRA basically is the authority out there that is tracking return, allowed rates of returns for utilities. And so they went back, and that's what my direct references, and did a study and said, okay, according to the allowed rate of returns, where has utilities fallen within this, just plotting all of these different points. And they came up and saw that using a regression analysis that generally most utilities fell within that one regression point, which ended up being about 0.4 to 0.5 basis points higher or lower wherever the average return on equity was. And it didn't matter which year, it didn't matter where that average return on equity was at. So that's RRA's number, but I feel comfortable in using their study to say, okay, if I'm looking at a range, this is kind of what they've done. I don't think ROE necessarily has to determine the overall outcome, but at least gives me a starting point to say, am I comfortable with the results that I'm getting that is within what would be an acceptable range?
I think you didn't mean to say 0.4 basis points. You meant 40 to 50
Sorry,
basis
yes,
points.
sorry if I said 0.4, I meant
Yeah.
40 to 50 basis points, yes.
Okay, all
Sorry.
right, I think I understand that now, but then let me ask, so if the 40 to 50 basis points in variance is determined from the study in RRA, was it your analysis that then used 50 basis points higher than the 9.70 and 40 basis points lower, or is that what the study indicates? Or could it have been flipped?
Well, it's flipped, so I went 50 basis points lower and I think 40 basis points higher.
Yeah, I'm
That,
sorry, I
that's,
misspoke there
that's
again.
me trying to determine, okay, I've got the study, they've given me some numbers, they said 40 basis points to 50. If I'm looking at the range and if I had to say what would I be comfortable with, I went down to 50 basis points and up to 40. But that was using that study as a reference point, but it was my decision ultimately of which way to go with the ranges.
Okay, that's what I'm trying to understand, and I guess I was inartfully trying to describe that and reverse my numbers. But that brings up the point. Could you have gone the other way? You could have had, instead of being 40 basis points higher, you could have used 50 basis points higher and 40 basis points lower?
Sure, or you could have done 40 and 40. They don't specifically say which way to go, they just say it's within that amount.
This is the range?
Yeah,
Okay.
they say, from what they've seen, it's usually been 40 to 50 basis points is one regression, and so you could go either way, yes.
Okay, thank you. All right, I have one other question about your business risk analysis and your conclusion that because of the economy, because of, I think you used HB, but it's SB 224. You just, like I just misspoke, it's SB 224. You've read SB 224? Have you read the terms of the provisions? in there?
Generally, yes. I mean, I wouldn't say I'm an expert, but I've generally, for this case, reviewed it.
Okay, all right, and so with your 9.3% ROE and your analysis that because of lower business risk, that's justified, do you think that without that specific legislative enactment, you would have evaluated your prospective ROE higher, or would have had any impact at all?
So I think if you're talking about wildfire generally, there is a risk there. All utilities in the West have a risk with that. So would I say that Rocky Mountain Power is any riskier than all of the other utilities within the state? I don't think I would make that determination. But what I was saying is specifically looking at Utah, it lowers the risk and can move it down because of limiting the potential liabilities for investors and saying this is like a cap that will help them to minimize what their exposure is on that as well.
So the caps on damages, those limitations on liability, that was a factor that impacted your determination of what was the appropriate ROE in this case?
When looking at business risk, I believe all the business risk shows that Rocky Mountain Power is less. That's one portion of business risk, but again, you have interest rate, liquidity, business, a variety of different risks.
Strong
that will move
economy,
it.
things the other point that you point out in
exactly.
your
So, oh,
I'm sorry, strong economy that you point out in your testimony and other factors. All of those combined together were relevant in your determination that Utah has a lower risk factor, business risk factor that justifies in part, at least it justifies in part your analysis on where you came up with an ROE.
Yes.
Okay, I'm sorry. Did we get it now? Okay. All right, I have no further questions. Mr. Coleman, thank you so much for
Thank you
your
very much.
nearly 3 hours on the witness stand, and
That might get me another trophy internally as well, so we'll see.
boy, I wish that could translate into more money, is what it should be. All right, thank you, you can be excused. All right, the next witness, we'll move to the 3 witnesses that need to be finished today. And I don't know if we want to take them in the order that it's listed, that there's very little cross for any of them. So I would like to do another witness before lunch. So, Ms. Schmidt, let's call your next witness.
The division calls Mr. Tom D'Ambrosia as its witness and asks that he please be sworn.
Okay, Mr. D'Ambrosia, would you come up? Welcome, Mr. D'Ambrosia. We'll let you set all your stuff down, and then we'll swear you as a witness. Thank you for being here today.
Thank you.
All right, will you stand there for just a second while okay, raise your right arm, let me swear you. Do you solemnly swear the testimony you're about to give in this matter pending before the Public Service Commission of the State of Utah shall be the truth, the whole truth, and nothing but the truth, so help you God?
Yes,
Thank you, you may be seated.
thank you.
Good morning.
Good morning.
Could you please state and spell your name for the record?
Sure. My name is Thomas A. D'Ambrosia, D-A-M-B-R-O-S-I-A.
By whom are you employed and what is your position with that employer?
I am a utility consultant for Daymark Energy Advisors, Inc.
Have you been retained by the division to assist it in the preparation, explanation, and testifying for this case?
Yes,
And you have participated in this docket on behalf of the division doing those things, correct?
correct.
Have you testified before the Utah Commission before?
No, I have not.
Because you haven't, could you please give us a brief summary of your education and relevant work experience?
Yes, I am a CPA. I have a Bachelor's of Science degree from St. John Fisher University, and I worked as a regulator for 35 years, the last 5 as a chief of the Office of Accounting, Audits, and Finance for the New York State Public Service Commission. After that, for the last 9 years or so, I've done a variety of engagements for Daymark as well as other clients.
Thank you. Did your participation include reviewing filed testimony, drafting, reviewing data requests, analyzing issues, and discussing those things?
Yes, it did.
Did you prepare and cause to be filed what's been marked as DPU Exhibit 9.0-DIR with 2 exhibits, and that was filed in redacted and confidential form? Rebuttal pre-marked as 9.0-R in confidential and redacted form, and surrebuttal marked as 9.0-SR, again in confidential and redacted form, with 2 exhibits.
Yes, I did.
Do you have any changes or corrections to those?
Yes, I have a few.
Could you walk us through them, please?
Sure. Turning to the direct testimony, on line 7, I'm sorry, page 7, excuse me, lines 124 to 126, please strike the sentence that starts with the annualized December 2023 through the sentence, that same sentence that ends on line 126 to December 2025. The line is copied twice.
Thank you.
Next, on page 13, line 268.
Pardon me, also in your direct?
Yes, I'm sorry, I will switch,
Okay,
there's 3 sets here, I'll switch, I'll let you know.
thank you.
Okay, yes, I'm sorry, page 13, line 268. The second last word says June 2025. It should say June 2024. And finally, on my direct testimony, page 23, line 497, there's an extraneous letter T after the word Utah and before the word and that should be stricken. And finally, with regard to the direct testimony, there's an exhibit TAD 9.2. If you refer to that. Ms. McCoy pointed out that I had a typographical error in that exhibit on line 4, which is entitled O&M Expenses, Injuries, and Damages. The number that appears there is $17,159,000 in the total column. That should read $17,139,000 in the total column. And in the Utah column, same line, the amount should be $7,585,721 instead of $7,594,573. So that concludes, I'll mention as well that I've picked up that correction on the exhibit TAD 9.2 SR. So that's reflected in my rebuttal, just for,
So the correct number is in your rebuttal on Exhibit 9.2?
SR, yes. So now turning to the I'm sorry, let's go to the rebuttal testimony first. Page 7 of the rebuttal. On line 180, there's an extraneous closed paren after the word direct testimony. That should be stricken. And that's it on the rebuttal. And in the rebuttal, there's only 2. Page 19. There's some words missing from the sentence on line 400. It should read, in such cases, it would be appropriate for these routine and relatively immaterial per incident costs to be recovered using the SO factor. And let me know if you'd like to repeat that. And the last one is on page 34, line 765. The word not is missing, so the answer should read, no, that information was not provided in Mr. Owen's rebuttal test filing. And that concludes my corrections, and if there's any that I went too fast, just let me know.
With those changes and corrections, if asked the same questions today as in your pre-filed testimony, would your answers be the same?
Yes, they would.
Do you adopt the pre-filed testimonies and exhibits as corrected as your testimony here today?
Yes, I do.
With that, the division would like to move for the admission of Mr. D'Ambrosia's testimony and exhibits as previously identified.
Okay, thank you, Ms. Schmidt. We will admit without objection the corrected direct rebuttal and surrebuttal testimony with the exhibits including the corrected exhibit. You may continue.
Do you have a summary to present today?
Yes, I do.
Please proceed.
Thank you. Good morning, Chair Fenn, Commissioner Clark, and Commissioner Harvey. Thank you for the opportunity to address certain operating and maintenance expenses, which I call O&M expenses, and taxes on behalf of the division. Much of the company provided information in my areas was classified, just want to give a note here, much of the company provided information in my areas was classified as confidential and in some cases highly confidential. I do not disclose confidential or highly confidential information in this summary. So, starting, the rate case used 2023 calendar year amounts, which were normalized to reflect known changes in their operations, estimated to be in effect during 2025, the year for which rates will be in effect. Those types of things would include normal things like union wage increases, inflation, forecast capital additions, very standard items in a rate case. In addition, 2023 amounts were adjusted to remove, or what I call normalize, certain costs that were expected to change. For example, the Jim Bridger Generating Station operating and maintenance expenses were reduced to reflect the conversion of 2 of the 4 units from coal to natural gas. So as part of my analysis, I conducted a high-level review of Pacific Corp's O&M expenses for the period 2018 to 2025, to observe any trends inherent in their expenses. I found that the 2023 expenses were abnormally high. The data showed that Pacific Corp's 2023, what I'll call controllable O&M expenses, which are things like labor, contractors, outside services, benefits. Those expenses, after fuel and purchase power costs are removed and excess liability insurance and related wildfire expenses were removed, those controllable costs increased 19%, or $247 million over the 2022 amounts. That's a pretty big increase, so I observed that initially. This increase in their controllable O&M expenses was significant when compared to the cumulative growth in those expenses over the previous 4 years, 2018 to 2022, which represented about an average 3.4% increase as compared to the 19% increase just in 1 year. After that, they then increased their already high 2023 controllable expenses by another $51.8 million, or about 5%, to arrive at their forecast controllable operating and maintenance expenses. Those totaled $1.1 billion. As a result of that high-level analysis, I was concerned whether O&M expenses, as well as taxes, were properly normalized to reflect any aberrations inherent in the 2023 results. I found that many expenses were not properly normalized and should have been reduced. In fact, each of my proposed adjustments is what I consider a normalizing adjustment to reduce 2023 expenses to a what I'll call a more business-as-usual level. In its rebuttal filing, RMP agreed to several of my adjustments. Still outstanding, however, are my adjustments for property taxes, legal expenses, injuries and damages expense, overtime labor, and coal inventories. I will touch on each of those briefly. First, concerning overtime payroll, I observed an $8 million increase in 2023 overtime labor from around $88 million to $93.6 million compared to 2022. This represented a $28 million or 43% increase between 2018 and 2023. When I inquired about the large increases in overtime, the company pointed to things like emergency response, storms, and repairs as causes. The exact causes were not quantified, so I couldn't really analyze the particular data that was driving this increase. I also, as related to overtime, I also asked about programs and processes the company had implemented to control these growing expenses, and they indicated that overtime was reviewed as part of a, quote, monthly review process, unquote. To address and normalize this increase in spending, I proposed that a 5-year average percentage of overtime pay to base wages be applied to the 2025 base wages. This reduced the Utah piece of the overtime expense by $2.17 million, net of the cost of incremental union hires, and related benefits. Next, I reduced property taxes in my SURE rebuttal update. This updated amount was based on the most recent 2024 property tax assessed values inflated to reflect a 3-year average percent increase using 2020, 2021, and 2023 increases. I excluded the 2022 increase, or it was actually reduction, because it was an anomaly. As it relates to legal expense and injuries and damages expense, I was also concerned about the impact of major wildfires on RMP's operating expenses outside of their effect upon excess liability insurance and the cost of wildfire mitigation plans, since those are being examined in the Phase 3 piece of this case. In my research of RMP's major wildfires, I found that RMP's 2023 historical expenses included significant increases to its extensive litigation relating to its liability for major wildfires in California and Oregon. I propose to normalize these significant costs out of Utah's rates, as they are not what I call business as usual costs that should be borne by Utah's ratepayers. As it relates to the allocation of these significant costs of major wildfires, I generally reviewed the 2020 Interjurisdictional Allocation Protocol, called the 2020 Protocol. I am not an attorney, so I'm not giving legal opinions concerning that protocol. This protocol establishes the accounting allocation of costs among the states that Pacific Corp serves through its business units, Rocky Mountain Power and Pacific Power. As it relates to wildfire-related costs, such as legal costs and injuries and damages expense, and excess liability insurance, the 2020 protocol would use the system overhead factor, which I call the SO factor, to allocate these costs. The SO factor generally allocates overheads based on the size of the RMP operations in each state, and those are based on 1/3 weightings of the system capacity, the system energy, and the system gross distribution plant factors. Using that SO factor would allocate approximately 45% of all system overheads to Utah customers. In my opinion, the allocation of these wildfire-related costs using the 2020 protocol is not just or reasonable. As it relates to wildfire costs that have emerged in significant amounts since the 2020 protocol was established, the use of that protocol seems stale to me. Allocating these wildfire costs to Utah based on size violates what I could call the cost causation principle. Utah's customers are not causing these costs, nor can they control them or avoid them. These costs provide no tangible benefits to Utah. These costs are being driven exclusively by events occurring in other states. In my 45 years of experience as a rate-making expert, I have worked extensively on developing and analyzing cost allocations on entities ranging from major international electric utility holding companies to major telecommunications companies, and I have never seen an allocation process that is so out of balance and out of line with cost causation. Cost causation, sure. It is simply unfair to charge Utah customers for these costs based on the size of Utah's operations. Consistent with cost causation, they should be charged to the states that caused them, not Utah. Finally, I want to briefly respond to statements made by RMP witness Ryan Fuller, James Owen, and Shelley McCoy during their witness summaries last week. First, Mr. Fuller asserted that RMP was surprised by my rebuttal testimony about transparency concerning its filed federal tax returns. The record should simply reflect that the filed consolidated tax return addressing the companies under Berkshire Hathaway Energy Company was requested by the division, was not provided, but it should have been. Second, during Ms. McCoy's cross-examination regarding legal expenses and injuries and damages costs, she asserted that under rate-making precedent, the 2023 actual expense levels were a proxy for the 2025 rate year. She further asserted that the company is not seeking recovery of a specific expenses. Ms. McCoy also indicated that she was not aware of the specific cases and lawsuits the 2023 legal and injury and damages expenses were related to. Her stance seems to imply that it does not matter what the historic expenses were related to or what they were for, just that the money was spent. If historic spending is the bedrock for 2025 rate levels, then it's pointless for anyone to audit their expenses in a rate case, regardless of past precedent or spending levels. It does matter what the historic spending was for, and I address how it is not reasonable to assign most of these costs to Utah. Finally, during his summary, Mr. Owen stated that in his rebuttal testimony, he had updated his coal inventory levels for Jim Bridger Units 3 and 4 to account for certain contingencies. I agree that these inventory levels should reflect the contingency factor, and the levels I recommended were based on the highest inventory levels over the 2018 to 2025 time period, increased by a contingency factor to account for contingencies. I believe the historic base trend, as adjusted for my contingency, is a reasonable level. Next, and finally, I'll address Mr. Owen's proposed update to the Hunter coal inventory balance. Mr. Owen claimed that the company's 2025 coal inventory forecasts were developed in January 2024, nearly a year ago, in contemplation of an April 2024 rate filing. However, the filing was not made until the end of June, and that filing was not updated to reflect a coal contract that was entered into regarding Hunter in February 2024. As early as March 11, 2024, before the rate filing, in its review of coal inventories, DPU was provided a report by Rocky Mountain Power noting the coal inventory concerns. Next, on September 5th, 2024, the division submitted data requests concerning Jim Bridger coal inventories. These data requests should have alerted RMP to communicate an update concerning the Hunter inventory levels based on the new contract it signed in February, yet it did not do so. A timely filed updated coal forecast in the June rate case filing and a more comprehensive response to the September data requests would have provided a reasonable amount of time for the division and others to examine the inventory levels for Hunter as well as the other coal facilities. Between not filing an updated forecast in its June filing and its response to its division's data requests in its June filing and its responses to the division's data requests, RMP failed to disclose a large discrepancy in the Hunter coal inventory in this case. Utah ratepayers should not be harmed, and the Hunter adjustment should be removed because of this lack of communication. This concludes my summary. Thank you for your time.
Mr. Chair, contrary to what we told you earlier, based on the summary that was provided, my colleague would have a few questions for this witness. If you want to do it now or later, I just thought I'd alert you to that.
Okay, thank you. Do you have an estimate of the amount of cross? 5 minutes? Let's do it now. But let's go back to Ms. Schmidt. Do you have any follow-up for your witness before we have cross?
I have no follow-up. Mr. D'Ambrosia is now available for cross questions and questions from the commission.
Thank you.
Okay, it looks like Mr. Kumar will conduct the cross. Please go forward.
Thank you, Mr. Chairman. Mr. D'Ambrosia, in your summary, you mentioned that you were not provided with the BHE consolidated tax return. Is that true?
That's correct.
Isn't it true that it is actually the Berkshire Hathaway, Inc. consolidated return?
I believe that's correct.
And that consolidated return would include tax returns from not just Pacific Corp or other BHE entities, but everyone from Dairy Queen to See's Candies?
If that, I can only answer in an abstract. I don't know what that would include because I've never seen it. So if you're stating for the record it does, I'll accept that, but I've never seen it, so I don't know.
It is almost likely to include that information because those are also BHI subsidiaries.
Again, not having seen it, I can only speculate, but I would assume it would, yes.
Isn't it true that you also met with the company on at least 2 occasions to ensure that you had the information you needed to conduct your review?
I met with them 2 or more occasions, actually, I think. And with regard to the consolidated tax return, it was discussed, I think, in July.
Isn't it also possible that with regards to the specific issue with regards to AFUDC, there would be no information in that consolidated return regarding the AFU-CDC tax issue?
I can't really agree to that.
Okay, well, I think that's all the questions I have.
Thank you.
Okay, thank you, Mr. Kumar. Anybody else have cross? Ms. Schmidt, any redirect?
Did you receive all the tax information that you thought would be necessary for you to complete your analysis?
No.
Thank you, that's my only question.
Okay, thank you, Ms. Schmidt. We'll turn to Commissioner Harvey for any questions he may have.
Hopefully just a few quick ones. On your normalizing adjustment for overtime, you mentioned you talked about a 5-year average to base wages.
Correct.
And my understanding from the way you explained that, and because of the way the future test year was calculated, that would automatically include the inflation adjustments already, right?
Yes, it would include the wage increases and so on, which I think are a little bit greater than inflation, but that's how they inflate these things.
Okay, but it would include the adjustments they had made, that the company had made to what they felt their best estimate of their wages would be.
Correct.
Okay, thank you. And then you mentioned on the coal inventories that you had already included a contingency factor in your recommendations.
Yes.
And what contingent, how large was that factor?
Well, I was going to say it, but in
Is
light
that-
of the discussion yesterday.
Is the percentage factor confidential, or
I-
the amounts?
I do not know, is there a reference in your testimony that you could refer to so we don't have to say the number out loud?
Yes, I can.
If we could do that and
Yeah.
identify it that way, that would
Yeah, I've tried to stay
make me
away from.
happy.
Oh, okay.
I think
Confidentiality
I think that's
concerns.
a good solution. What page?
Yeah, let me give you a second. I'm looking at my direct testimony. Okay, yes, direct testimony,
Okay,
page 17, line 364 has the percentage contingency that I used. And I'm not saying it is confidential, I'm just trying to be extra careful.
okay. Sorry for having missed that.
No
but-
problem.
but thank
As
you.
am I, trying to be extra careful. So, thank you.
That's all the questions I have.
Commissioner Clark.
Good afternoon. I think I missed something in your summary, and I just want to make sure I understand how to interpret TAD 9.2 SR, the table that I think sort of summarizes and sums up your revenue requirement adjustments.
That's correct.
With respect to line 7, in the fourth column, there's no number, and I'm not sure what, I'm not sure how to interpret that, or what the message is there.
Oh, yes, thank you for asking. In my rebuttal testimony, I allude to the adjustment, and basically I withdrew it based on the additional clarification and information that was provided by Mr. Fuller in his rebuttal testimony, as well as some data requests.
Okay,
So
so
it's
that,
0.
in the next to last column on the page, there's a positive number on that same line. And so that represents you adding back in to your revenue requirement calculation what you had previously adjusted out on a Utah basis, I think. Is that right?
Yes, that's what it means.
Thank you. Okay, then I understand. Thanks very much.
You're welcome.
Mr. D'Ambrosia, I don't think I have any questions. I think I'm pretty clear on your testimony you filed. I do have a question, whether is he anticipated to be called as a witness in Phase 3?
I honestly don't know that.
Well, there's some data that he's provided in his rebuttal testimony that I think, I was just curious, it's in the record, I don't know that we need him as a witness, but on page 8 and 9 in this rebuttal testimony, that's something I see could come up in Phase 3.
I anticipate that he will be called as a witness in Phase 3, but I do not know that for sure.
Okay, well, I'm not going to ask any questions today based on that testimony. I think it's in the record, and we can ask him, or we may be able to ask other witnesses about it. So I have no questions, and you can be excused, Mr. D'Ambrosia. Thank you very much.
Well, thank you.
Where are you located? Where's Daymark located?
Daymark is in Worcester, Massachusetts. I physically live in upstate New York.
Okay. I used to travel to Worcester for a products liability case about 3 times a month for about 2 years. So I became very familiar with it. All right, thank you.
Thank you.
All right, I think it's a good time to take a break for lunch. Let's come back at 1:30. Any issues we need to address before Ms. Schmidt calls her next witness? Okay, apparently not. Ms. Schmidt, Mr. Greco?
The division would like to call Mr. Dan Kaler.
Okay, I want to make sure I pronounce your name.
Rhymes with Taylor. Nothing
Dan-
like it's spelled.
Dan Kaler. Okay, as I was going to call you Kohler, so I'm glad we've got that. Mr. Kaler, would you raise your right arm? Do you solemnly swear the testimony you're about to give in this matter pending before the Public Service Commission of the State of Utah shall be the truth, the whole truth, and nothing but the truth, so help you God?
Yes.
Thank you, Mr. Kaler. You may be seated. Mr. Greco?
Good afternoon.
Good afternoon.
Could you please state and spell your name for the record?
Dan Kaler, Koehler.
And by whom are you employed and what is your position?
I'm a vice president and principal consultant with Daymark Energy Advisors.
And what is your business address?
First gotcha question. 370 Main Street, Suite 325, Worcester, Massachusetts, 01608.
And have you participated in this docket on behalf of the division?
Yes.
Did you review the company's filed application, amended application, exhibits, and testimonies in this docket, as well as filings from the other parties?
Yes, particularly those related to net power costs.
Have you also reviewed responses to data requests?
Yes.
Did you prepare and cause to be filed your direct testimony and DPU Exhibit 7.1 and DPU Exhibit 7.2 on October 17th, 2024, along with your rebuttal testimony filed November 15th, 2024, and your surrebuttal testimony and DPU Exhibit 7.1 SR on December 4th, 2024?
Yes.
Do you have any changes or corrections to those filings?
No, I do not.
And if I ask you the same questions posed in that testimony today, would you provide the same answers?
Yes.
Do you adopt your pre-filed testimony as part of your testimony today?
Yes.
At this point, I'd like to move to admit Mr. Kohler's testimonies and related exhibits.
Without objection, we'll admit his direct and rebuttal testimony. Was there rebuttal testimony?
Correct.
Rebuttal testimony too, that's right. Okay, we'll admit all of those.
Thank you.
Thank you.
Mr. Kohler, have you prepared a summary to share today?
Yes, I have.
Please proceed.
Thank you. Good afternoon, Chair Fenn, Commissioner Clark, Commissioner Harvey. Daymark was retained by the division to assist in reviewing issues related to net power costs in this general rate case. My review focused on the reasonableness of the company's NPC forecast for the 2025 test period. I reviewed the various inputs, assumptions, and commodity forecasts, as well as the modeling methodology employed by the company to arrive at its NPC forecast. I did not consider long-term optimization issues. In other words, I took the company's resource portfolio of owned generation and long-term contracted resources as given for my analysis. My testimony relates to generalized approaches to forecasting and market conditions. It does not evaluate underlying company positions and efforts that have led it to the load and resource posture with which it now encounters the markets. Overall, I found the company's modeling to forecast NPC generally sound. However, I do recommend 4 adjustments that combine to reduce the total company NPC forecast by $117 million or $52 million on a Utah allocated basis. The 4 adjustments are related to 1, allowance costs for the Washington Climate Commitment Act, or CCA. 2, a modification to the day-ahead real-time adjustment. 3, lower forecast of Utah load supported by the testimony of Division Witness Karan Pol. And 4, updates of the official forward price curve, short-term transactions, and other inputs from March 29th, 2024 to September 30th, 2024 vintage. I discuss each adjustment briefly here.
So first, the Washington CCA. The Washington CCA law has been discussed extensively in this proceeding already, so I will forgo a summary. However, there is one basic policy point that was subject to apparent misunderstanding in earlier testimony by company witnesses that I wish to clarify for the record. The provision of no-cost allowances is a prominent feature of the CCA. It is not a part of the Clean Energy Transformation Act. The CCA law provides no-cost allowances for the explicit purpose of mitigating the cost burden of the CCA on Washington Electric customers. Under the CCA, every megawatt hour of generation at the company's Chehalis plant in Washington triggers both a cost, an allowance purchase requirement, and a benefit, a no-cost allowance allocation, tied directly and proportionately to that generation. The company's position is that the cost of allowances should be allocated like a generation tax to all customers, but that the benefit, the discount, tied to the same generation should be situs assigned to Washington customers only. Such an allocation is in contradiction to the fair allocation principles agreed to in the 2020 Interjurisdictional Cost Allocation Agreement, or the 2020 Protocol. The Washington CCA seems designed as an end run around the 2020 Protocol allocation principles, creating a revenue source paid for exclusively by customers in other states, while benefiting customers only in Washington. The company can cite no other example of a generation tax that offsets or exempts certain groups of customers. The allowance cost should be situs assigned to Washington, as they have been in most other jurisdictions already. Furthermore, the company's marginal dispatch economics should be based on the actual net cost of allowances required. Since the company is assured the provision of a no-cost allowances for about 22% of the total required allowances purchased to cover Chehalis generation, the dispatch adder should be only 78% of the estimated full price of allowances. The impact of these two changes is a decrease in total company NPC of $25 million. Excuse me. Okay. Second issue. Day-ahead real-time adjustment. The company has proposed an elaborate system of adjustments in its modeling of market purchases and sales. The purpose of these adjustments is to account for historical differences between purchase costs net of sales revenue compared to flat average trading hub indexed market prices. My concern is that the company's methodology includes multiple overlapping price adjustments that may double count and thus overstate such effects on MPC. Limiting such potential bias, however, is the final step that caps the total overall adjustment to historical levels. The key to such a limit is that it be applied to all day-ahead real-time market purchases represented in the Aurora modeling. The company's methodology excludes one category of supply that includes market purchases. Emergency purchases, or unspecified system energy, or USE, is a modeling construct that accounts for market purchases and generation that is needed, but for which inadequate levels of short-term transmission capacity are assumed in the Aurora model. The company has made no attempt to quantify the cost of short-term transmission represented in this USE model construct. Since USE represents generic system energy that likely includes day-ahead and real-time purchases, it should have been included in the overall adjustment cap. The impact on total company MPC from this methodology change is a reduction of $20 million. 3, load forecast. Division witness Karan Pol will testify to why the company's forecast of load growth for its Utah customers is overstated and should be reduced by 1.69%. I have not at this time calculated the MPC impact of this single change in isolation. It is included in my total adjustment. 4th, September 30th, 2024 updates. The division requested and the company provided an updated MPC forecast based on the September 30th, 2024 official forward price curve, or OFPC, as well as updates to other relevant inputs. The company provided an updated MPC forecast with the September 30th OFPC, as well as updates to executed short-term firm power physical, gas physical, and gas financial transactions. new or updated transmission and transportation contracts, and new or updated long-term firm purchase or sales contracts. The company also corrected a mistake in Cedar Springs 4 wind contract pricing, pointed out in the direct testimony of Division Witness David Williams. Though the timeline allowed only limited review, I was able to replicate and understand most of the company's key changes. All parties seem to agree that a more recent forecast of NPC is more likely to accurately reflect actual test period NPC costs. The drive for accuracy must be balanced against practical considerations to allow for reasonable time for the company to prepare and for the Commission and interveners to review and interrogate the updated forecast. I believe this limited September 30th, 2024 update appropriately balances improved accuracy while allowing for reasonable levels of review. The impact of the company's updated case is a reduction in total company MPC of $51 million relative to the originally filed case. Combining all adjustments just described, I produced a revised NPC forecast using the company's Aurora models and associated work papers. This case, labeled Daymark Sur Rebuttal, is summarized in my Sur Rebuttal testimony and DPU Exhibit 7.1 SR. The total company impact of all adjustments is a decrease of $117 million. The Utah allocated reduction is $52 million. I am aware that the Daymark Sur Rebuttal MPC is still higher than the NPC amount. Excuse me. We're going to get through this. I am aware that the Daymark Sur Rebuttal NPC is still higher than the NPC amount in the company's rate mitigation proposal. Regardless of how the Commission decides to treat the rate mitigation proposal, I believe the record is well served and rate-making decisions are best made from a reasonable forecast of NPC costs. This concludes my summary.
Thank you, Mr. Kaler. Do you have any clarification questions, Mr. Griku?
I don't.
All right, are we turning to Mr. Kumar for cross?
Thank you, Chair Fenn. I just have one or two questions based on Mr. Kaler's summary.
Sir, thank you.
Mr. Kaler, I appreciate your clarification on the Washington CCA that you provided and on the provision of no cost allowances. I just have a quick question about that. Isn't it true that the provision of no cost allowances under the CCA is tied to Washington's retail load?
So there's provision of no cost allowances for many factors beyond Chehalis generation, which is what we're.
I think your microphone is turned off. Would you turn it on, please?
Yes. Sorry, could you read back what I started?
Your direct testimony on page 24, and there you gave a dollar number. I think it's not confidential. I'm on line 533. This is a reduction to net power costs that he recommends. I say he because I'm looking at council. He recommends related to the Utah load forecast. So is I suppose there's no reason why we can't talk about that number explicitly. Is that right?
Is this in Mr. Kaler's testimony?
Right. Yeah, sorry.
I don't.
Line 533 on page 24.
Don't have an exact copy of it in front of me, but I doubt it's confidential.
Yeah, I wouldn't think it would be. So the number's 81 million. You're familiar with that number?
Yes, and that is posted on the website currently, so
Okay.
it's public now.
Okay. And is that, that's a total company number or a Utah allocated number?
That's a total company number, but bear in mind, if you're looking to reconcile that to the final Sur Rebuttal case, in direct testimony, we were making a larger reduction in load. Mr. Pohl's rebuttal testimony, or a subsequent round of testimony revised the load forecast adjustment to a lesser adjustment, so that number is not included in my final case.
Right. And can you describe the extent of the adjustment roughly in dollar terms? The 81 million would have been adjusted to what approximately?
Oh, in terms, estimating what the load, single load impact would be?
Yeah.
So generally speaking, I would expect there to be expanded, so a larger load reduction would have proportionally larger impact than a small one. So I would expect it to be less than, so 1.7 is, we call it a third of the 4 point whatever that we started at.
Right.
I would expect it to be probably less than a third of the 81 million. But that's a guess. Take that with.
Thank you.
That's a guess.
Okay. And I'm looking at your Exhibit 7.0 SR. And I'd just like to understand, you mentioned 4 categories of adjustment. And could you go through them and sort of just point me to which lines each one would be treated in?
Yeah, so it would be difficult to parse that precisely, right? So these are input changes to the whole modeling apparatus, and so it will result in a change in dispatch.
So they sort of trickle through?
Correct.
Okay.
Correct.
And that would include the choice one as well, right?
No, that would be the exception. Well, so one of the changes was the changing the dispatch signal, right? So the company put in a certain price per allowance assumed, and mine was less. So that will change the whole dispatch of the system. A fairly small impact overall, but anything could be impacted by that. The allowance cost itself, that would be a single line. And I know that the details of this, the whole thing I think is public. I know details sometimes are protected, but I think I can say which line.
I think all the information, are you talking about the allowance cost?
Yeah.
All the information used to calculate the allowance cost for the purposes of NPC is public. We relied entirely on public information there.
Thank you. And so that would come in the gas fuel burn expense. So row 185.
I can see that.
The Chehalis gas burn expense, that would be the difference there.
Okay. And now let me go back to where I started this. I was thinking about your adjustment that was, I'll call it load forecast driven, and other adjustments that other witnesses have discussed related to updating the forward price curve and working through those in very rough terms, and led me to conclude that when you updated the Aurora model based upon the inputs you received from the company, the cost drivers were going in both directions. There were some that were increasing net power costs and some that were decreasing net power costs because, and I'll tell you, the way I was thinking about it, the only changes that I could identify were all downward driven, and it seemed to me that the Aurora model would have predicted a lower net power cost than it did. So were you able to, is my reasoning correct about that? I guess is what I'm trying to understand or verify.
So let me just make sure I'm understanding the question and maybe take it in parts. So are you asking the single change of the September 30th update to the OFPC and the other relevant inputs, that single, or I know that single set of changes compared to the original filing, would there be movement both up and down?
Yes.
Yes, That is correct. So if you think about it, some of the items that would be in the net power cost calculation are, for instance, the mark-to-market losses or gains of hedges, right? So if whatever the number was in the original filing, if you are assuming lower gas prices, that's good on balance, but on the other hand, a hedge is going to have a worse mark-to-market now as a result of that. So similar with calculated energy imbalance market benefits, that those benefits, roughly speaking, are higher in magnitude when prices are higher. And so when we assume prices come down, the benefits from the EIM will come down. So there's a few examples like that, but on net, it is a reduction in MPC.
Right. And the Utah allocated number is 52 million roughly.
Correct. So that's the company's case. Or not that they're submitting that as a case, but their run of the model resulted in that number.
Their run of the model, but did that run of the model reflect your treatment of Washington CCA or the real-time day-ahead adjustment, day-ahead real-time adjustment that you mentioned, these other adjustments?
It did not, no. Yeah, so what I did was I was able to, I have been an Aurora operator. Our Daymark used to run Aurora on behalf of clients. We've switched to another model, but the muscle memory is still percolating around up there. And then I was also able to reverse engineer a number of the ancillary models, or I don't know, there's a number of spreadsheet models that the company has developed. Also, one, I believe it's a Python script, or a few various supporting models that are also run. And so I was able to create and validate that set of models that I could feel confident that I could basically run the models as they do if I want, and then make the input changes. So for my final case, what I did was I started with the files provided to me by them from that data request. So I knew that it incorporated their view of those input changes in September 30th. And then I layered on the 3 other adjustments discussed to get the full case.
And that's where the 52 million was produced, right? The Utah allocated.
Is that my final number?
Well, I think it is. Line 226 of
Yes.
of page 11. So
That's correct. Yes,
Okay.
the 52 million.
So now I understand, and thanks very much for your explanation.
Okay, Mr. Kaler, I have no questions. You may be excused. Thank you
very
so much. Safe travels back to Worcester.
Thank you very much.
All right, let's have the division call their next witness.
The division would like to call Karan Polt.
Okay. Mr. Pohl, will you raise your right arm when you get situated there? Okay, thank you. You solemnly swear the testimony that you're about to give in this matter pending before the Public Service Commission of the State of Utah shall be the truth, the whole truth, and nothing but the truth, so help you God? I do. Thank you, Mr. Pohl. You may be seated. Mr. Grecu.
Thank you.
Thank you.
Mr. Pohl, could you please state and spell your name for the record?
Yes, my name is Karan Pohl. That's Karan, last name Pol.
And by whom are you employed and what is your position?
I am employed by Daymark Energy Advisors, and my position is Senior Energy Analyst.
And what is your business address?
Business address is 370 Main Street, Suite 325, Worcester, Massachusetts, 01608. And someone will probably get me on the pronunciation of Worcester at some point.
And
The R is silent, just so we know.
And have you participated in this docket on behalf of the division?
Yes, I have.
Could you briefly describe your participation in this docket?
Yes. I was retained as part of the larger retention of Daymark to review the company's filing in regards to its rate case. I specifically reviewed the company's load forecast, focusing particularly on its residential and commercial sales forecasts. Any testimony associated with these topics, primarily by Mr. Kenneth Elder Jr., are the piece of testimony that I reviewed, after which I produced a direct and surrebuttal testimony.
Have you provided testimony to this commission before?
Yes. Or, sorry, excuse me, no.
Could you provide a brief overview of your education and relevant experience?
Yes. I have a Bachelor of Arts in Economics with a focus in econometrics and a Master's of International Policy, both from the University of Georgia. I focused on the econometric modeling of policy to evaluate its efficacy. Yes, sorry about that. I focused on the econometric modeling of policy to evaluate its efficacy, particularly looking at international environmental policy and domestic energy resource planning. Following a few years at a nuclear energy startup in Washington, D.C., and a brief career in the nonprofit sector, I joined Daymark in 2023 and have since focused my career advising regulators, utilities, and private organizations on load forecasting and its construction. Though this is my first time as a consultant to the division, I have worked as a consultant or expert witness in 4 jurisdictions across 17 cases and counting. I have specifically provided expert testimony reviewing a utility's load forecast in front of the Georgia Public Service Commission. Additionally, I have supported a utility in the review and development of its own internal load forecast.
And did you review the company's filed application, amended application, exhibits, and testimonies in this docket, as well as filings from the other parties?
Yes, I did.
Have you also reviewed responses to data requests?
Yes.
Did you prepare and cause to be filed your direct testimony and DPU Exhibit 5.1 filed on October 17th, 2024, and your surrebuttal testimony and DPU Exhibit 5.1 SR on December 4th, 2024 in this docket?
Yes.
Do you have any changes or corrections to those filings?
Yes, I provided some corrections and clarifications to confidential tables 5 and 6 in my direct testimony, and I have attached these corrections and clarifications as an exhibit to my surrebuttal testimony. I can attest that these edits do not impact the conclusions of my filed testimony or any of the recommendations therein. They're just the result of a small modeling error.
And if I asked you the same questions posed in that testimony today, would you provide the same answers?
Yes, accounting for the aforementioned corrections.
And with those corrections, do you adopt your pre-filed testimony as part of your testimony today?
Yes, I do.
At this point, I'd like to move for the admission of Mr. Pohl's direct and surrebuttal testimony as corrected and the associated exhibits.
Okay, without objection, we will admit Mr. Pohl's direct and surrebuttal testimony and the 2 exhibits referred to.
Thank you. Mr. Pohl, have you prepared a summary to share today?
Yes, I have.
Please proceed.
Good afternoon, Commissioners. My name is Karan Pohl. I'm a Senior Energy Analyst for Daymark Energy Advisors, testifying today on behalf of the Division of Public Utilities. I offer now a summary of my testimony in this proceeding regarding the company's load forecast for its customers in the state of Utah. In June of 2024, the company filed a load forecast in support of its application to increase retail electricity utility service rates. For Utah, the company forecasted a nearly 16% increase in sales relative to its 2021 forecast, driven by significant growth in the residential and commercial classes. This growth rendered a total sales forecast of approximately 28,826,512 megawatt hours for test year 2025. The company justified the significant increase in load as being driven by increasing residential customers, increased air conditioning. Sorry about that. Driven by increasing residential customers, increased air conditioning loads, and data center growth. The company failed to sufficiently demonstrate and justify this level of growth. I have 2 key concerns with the company's filing. First, I am concerned with the lack of transparency in the company's filing. The company failed to provide evidence that its commercial sales forecast was likely to materialize. It did not provide independent variable data for the commercial sales model, project-level commitments or ramp rates for its large commercial consumers, nor did it demonstrate that the large commercial customers in the pipeline are expected to come online on the timelines assumed in the model. Second, I'm concerned the company employs certain variable and data selection methods that are not sufficiently justified, which may lead to an overestimation bias in the residential sales forecast, though I do not ultimately recommend any sort of reduction therein. Throughout my direct and surrebuttal testimonies, I demonstrate reasonable cause for these concerns. Data center developers such as Google have indicated that data center projects often pursue multiple sites in parallel. Uncertainty regarding data center supply chains may further introduce project delays. The company has not demonstrated that its large load commercial customers are necessarily committed to developing in Utah, nor that these customers are expected to materialize on schedule. Further, as demonstrated in the direct testimony of DPU witness Doug Wheelwright, the company's load forecast for the Wyoming jurisdiction did not materialize as expected. Any methodological bias present in the Wyoming model may be replicated in the Utah forecast as well. An inaccurate load forecast ultimately distorts the company's net power cost forecast and may cause harm to Utah ratepayers. Ultimately, I recommend that the Commission reject any forecast of commercial sales increases that have been forecasted beyond historical growth rates on the basis of unsupported claims of future data center development. I propose a methodology to calculate this adjustment, but this recommendation does not preclude the Commission's decision to accept any other adjustment methodology. Additionally, this recommendation does not preclude any additional adjustments proposed to the company's load forecast by other witnesses. This concludes my summary.
All right, thank you, Mr. Pohl. Do you have anything else, Mr. Griku?
I do not.
All right, who's conducting the, do you have any cross-examination? No questions. Anybody else? Okay, let's turn to Commissioner Harvey, see if he has questions.
Just one clarifying question. You mentioned the company has a substantial level of growth forecasted from the 2020 to 2024 time period.
Correct.
I'm assuming you've looked at, well, I know you've looked at the actual data that exists to date, correct?
Correct.
How far off, well, let me back up, sorry. If we had a trend line between the 2020 and the 2024, you can have in mind sort of where you'd need to be along that trend line, correct?
Could you repeat that? Sorry.
All right, if we made a trend line from the 2020 time period to the 2024 that matched the company's predicted growth for 2024, you could construct where the actual load that we have data for would need to be to tell whether it was on that line or not?
So I have not performed that specific analysis, but I do recall while Mr. Elder was on the stand, I believe they said that actuals came in at something from 1% to 2% below forecast. So I would refer to that data point.
Okay, we'll take notice of that. Thank you. That's all my questions.
Commissioner Clark.
Thank you. Good afternoon.
Afternoon.
I believe in your direct testimony, you recommended a decrease in the total load forecast of 4.64%, and then in the surrebuttal testimony, you recommended a smaller level of decrease of 1.69%. For the transcript, would you just briefly summarize what drove the change in your recommendation between your direct testimony and your surrebuttal testimony?
Yes. So essentially, the data I was using to provide an adjustment in my direct testimony was not weather normalized. Mr. Elder, in his rebuttal, provided that data adjusted, which I adopted and used the updated data to make that adjustment again, which revised that number down from that -4 and change to the -169.
Thanks very much.
I have no questions, Mr. Pohl. You may be excused. Thank you very much.
Thank you.
Okay, this concludes the witnesses that needed to testify today. And we'll continue to try to get in as many as we can I don't think we're going to finish today, get all of the witnesses, but but hopefully we'll finish tomorrow and won't need the Thursday. Does anybody anticipate needing the Thursday day that's been reserved? No? Maybe? Okay, all right, we're not going to take that as a firm commitment. We'll let you think about it some more. I was just trying to figure out what our schedule could be for the rest of the week. Okay, let's go back to the division. They can call their next witness.
Thank you. The division would like to call Mr. Eric Orton as his next witness and ask that he please be sworn.
Welcome, Mr. Orton. Thank you. Are you really? Okay, all right. Thank you. Will you raise your right arm? Mr. Orton, do you solemnly swear the testimony you're about to give in this matter pending before the Public Service Commission of the State of Utah shall be the truth, the whole truth, and nothing but the truth, so help you God?
Yes, I do.
Thank you. You may be seated.
Good afternoon, Mr. Orton.
Good afternoon.
Could you please state and spell your name for the record?
My name is Eric Orton. That's O-R-T-O-N.
By whom are you employed, and what is your title?
I'm employed by the Utah Division of Public Utilities. I'm a utility technical consultant.
Your business address, please?
I'm here in the Heber Wells Building, 160 East, 300 South, Salt Lake.
Have you participated in this docket on behalf of the division?
I have.
Did your participation include reviewing the application, the amended application, filed testimonies, drafting and reviewing data requests, analyzing issues, and discussing these things with others?
Yes, to some degree. I didn't review every part of the application and testimonies and exhibits.
Did you read the parts that you believed were germane to your areas upon which you are testifying?
Those are the ones I looked at.
Did you prepare and cause to be filed what's been marked as DPU 15.0, your direct testimony with exhibit number 15.1 DIR, your rebuttal testimony identified as DPU exhibit 15.0R without any exhibits, and your surrebuttal testimony, which is 15.0 SR, that also did not have any exhibits. Did I repeat that correctly?
Sounds right.
Do you have any changes or corrections to that pre-file testimony?
I do, thank you. I have two in my rebuttal testimony. In line 30, it should read $19 million instead of $18.9 million. In line 108, I say 3 separate amounts. That should read 2 separate amounts. The rest is accurate as far as I know.
With those changes, if we asked you the same questions that are in your pre-file testimony, would your answers, along with the changes, incorporating the changes, be the same today?
I believe so.
Do you adopt your pre-file testimony as part of your testimony before the commission today?
I do.
With that, the division moves for the admission of Mr. Orton's pre-filed direct with its exhibit, his pre-filed rebuttal, and his pre-filed surrebuttal as corrected.
Okay, without objection, we will receive the direct, the rebuttal, and surrebuttal, and the exhibits that have been identified with the corrections that Mr. Orton has made to his testimony exhibits today.
Thank you. Mr. Orton, do you have a summary to share with us?
I do.
Please proceed.
In my direct testimony, I offered 2 adjustments to the company's proposed revenue requirement. The first was to reduce the amount of the 2025 annual incentive plan paid by customers based on the reasoning that some benefit flows to shareholders as well as to the ratepayers. And as such, the captive ratepayers should not bear the entire burden of these discretionary bonuses. My second proposed adjustment was a recommendation to reduce the projected allowed working capital expense to be more in line with past rate cases. In my rebuttal testimony, I commented on the direct testimony of other parties that addressed the topics I spoke to in my direct testimony. As a result, I modified my recommended incentive adjustment, suggesting that the adjustment Mr. Gorman from FEA offered makes sense, as well as the adjustment proposed by Mr. Higgins of UAE does as well. That the proper adjustment amount could reasonably be bookended by Mr. Higgins' adjustment and mine. I also supported the notion by Mr. Fitzhenry from FEA that the more recent natural gas price forecasts are the more one could reasonably rely on to be representative of what the price turns out to be. In my SIR rebuttal, I tried to point out first that I was not suggesting the company's employees should be paid less, and second, that Utah ratepayers should not be burdened with the entire amount of the company's working capital projection. Also, I point out that what the natural gas price forecast is called by the company was not the issue. Rather, the range of that forecast was what I thought was worth mentioning. I also tried to clarify what I meant regarding the Gateway South project. That concludes my summary. Thank you.
Thank you, Mr. Orton. Anything before we go to cross?
No, Mr. Orton is now available for cross-examination and questions from the commissions.
Okay. Does Rocky Mountain Power have cross? No questions. Okay, thank you. Anybody else? All right. We'll see if Commissioner Harvey has any questions.
Well, I'm going to add one more to the column of surprises, so I'll pass. Thank you.
Okay, I'll make no comments on that. Thank you.
Although you want
Commissioner Clark.
Could you put in dollar terms your recommendation with respect to the incentive plan expense that I think you said is bracketed by your recommendation and Mr. Higgins, I think?
That's right.
And is that something you have handy?
Yes.
The range of adjustments that you'd propose to be reasonable?
Mr. Higgins, as I recall, was about 400 and something thousand. Mine was about 7 million.
That's a
a
close
big
enough
range.
number for my use, but it is a large range. And with respect to your adjustment, are you focused on the goal that relates to supporting, these are my words, but reasonable regulation and achieving the authorized ROE, or I think a separate category of of goals that relate to the company's financial performance? I think those are two separate categories of incentive, if I'm correct, and if you'd verify whether my understanding's correct, and then describe which of those are influencing your recommendation, or maybe they both are, and how they fit together in your mind.
Thank you. Those are two of the 6. Those are two of the 6 pillars that they call them. And those are certainly heavily weighted as I looked at this. There were other pillars that had similar subjective descriptions that could easily be construed in my mind to benefit shareholders as well. So yes, it included those, and that's where I took the, I don't know, it could be how much benefits the shareholders, how much benefits the ratepayers. I couldn't tell. That's where I came up with my half. Half benefits them, half benefits the ratepayers.
And when you speak of half, you're, half of what?
Half of the AIP.
The total
annual
AIP
incentive payment.
expense?
Yeah, yeah.
Excuse me.
I don't know.
I think you, you were saying half of the total AIP expense, correct?
Yes.
Okay, thank you. That's all the questions I have, thanks.
So just a clarification of what Commissioner Clark just asked you. I'm looking at page 6 of your rebuttal testimony where you describe your recommendation is to lay some of the AIP costs on shareholders. Is my recommendation is 1/2. Now, as I understand it, the 6 components of that program are equally weighted at 17.5% each. Is that your recollection?
That's my recollection.
Okay, so you would reduce the entire AIP program by 1/2. Is that your testimony?
That's right.
Okay. But you've indicated that shareholders should pay for the parts of compensation contingent on financial performance from the gains made in that from financial performance. And the piece of AIP based on financial performance should be that component paid by shareholders, right?
That's right.
So that's 17.5% of the total AIP program.
If you only look at that one pillar.
Okay, and you're looking at other pillars that should also be reduced and essentially be laid off on shareholders, to use your words.
That's accurate.
Okay, which of those other pillars? Is it all the other 5 pillars to some proportionate amount, or is it, clearly you think that the last pillar on financial performance should be laid off on shareholders? I'm just trying to figure out how you come from that 17.5% to your 50% altogether. Is it just across the board for the other 5 pillars, or is there some one of the ones that you would focus on?
I did mention in my testimony 3 or 4 others that I thought were easily categorized as benefiting the company, shareholders. But that's where I came up with the half, was guessing that each of them had about half to help the company as well as help the shareholders. I mean, the ratepayers.
Okay, do you recall what those were that you mentioned? Did you mention all of the other 5 pillars you just mentioned? You said 3 or 4 of them, but do you remember where that was in your testimony?
No, I can find them if you want me.
We can take just a second. Go ahead.
They start with a question on line 78 of my rebuttal.
Okay, please.
I mentioned pillar 1, customer service at fair prices. Fair prices without a clear definition could be a benefit to shareholders. Pillar 2, employee commitment, committed employee in my mind, benefit shareholders. Pillar 4, whatever a favorable regulatory outcome and legislation, those certainly benefit shareholders in my mind.
Okay, thank you. That's very helpful, and that answered my question.
Good, thank you.
Appreciate it very much. Mr. Wharton, you can be excused. Thank you for
Thank you
your
very much.
testimony today. Appreciate it. Let's plow forward just a little bit more before we take a break. At the rate we're going, we may get some of tomorrow's witnesses. Are your witnesses that are scheduled for tomorrow, are some of them available today?
I believe so. I have asked them to be.
Okay. There are 5 left. So, all right, you may call your next witness.
Thank you. The division would like to call Mr. Gary Smith as its next witness, and may he please be sworn.
Yes, Mr. Smith, welcome. Mr. Smith, will you raise your right arm? You solemnly swear the testimony you're about to give in this matter shall be the truth, the whole truth, and nothing but the truth, so help you God.
Yes.
Thank you. You may be seated.
Thank you.
And Ms. Schmidt.
Thank you. Good afternoon, Mr. Smith.
Good afternoon.
Could you please state and spell your name for the record?
My name is Gary Smith. I'm a utility technical
Oh,
consultant for
pardon
the
me, could you,
division.
even though your name
Oh.
is relatively standard, could you please spell it? Because some people spell those things differently.
It could be
Right.
spelled S-M-Y-T-H, correct?
Correct.
Correct.
Okay, all right, so that was a legitimate question for you to ask. All right, go ahead.
GarySmith, and I'm a utility technical consultant for the Division of Public Utilities.
Your business address, please?
It is 160 East, 300 South, Salt Lake City, Utah.
Have you participated in this docket on behalf of the division?
I have.
Has your participation included reviewing the application, amended application, filed testimonies, drafting and reviewing data requests and responses, analyzing in issues, and discussing these with others?
Yes.
Did you prepare and cause to be filed what's been marked as DPU Exhibit Number 6.0 DIR, your direct, with 2 exhibits that I believe are confidential? And your surrebuttal, which has been marked as DPU Exhibit Number 6.0 SR with some exhibits. Is that correct?
That's correct.
And is it correct that you did not file rebuttal testimony?
That is also correct.
Thank you. Do you have any changes or corrections to the record?
I do not.
With that, if I were to ask you the same questions that are in the pre-filed testimony, would your answers be the same as they are as stated in that pre-filed testimony and in the exhibits?
Yes, they would.
Do you adopt, as your testimony today, what has been said in those pre-filed exhibits and testimonies?
Yes.
With that, the division would like to move for the admission of DPU Exhibit Number 6.0 DIR with its exhibits and DPU 6.0 SR with its exhibits.
Thank you, Ms. Schmidt. That means that you have moved for the admission of Mr. Smith's direct and surrebuttal testimony and the exhibits, and they are admitted.
Thank you. Mr. Smith, do you have a summary to share with us today?
I do.
Would you please present that?
Thank you. Good afternoon, Chair Finn and Commissioners Harvey and Clark. Thank you for the opportunity to address the elimination of the Energy Balancing Account, or EBA, included as a division recommendation in this general rate case. On June 28, 2024, the company filed an application to increase its retail electric utility service rates. The company requested an increase of approximately $667.3 million, of which approximately $570.4 million, or over 85%, was an increase in net power costs, or NPC. As others have indicated, this is by far the largest increase ever requested. On August 28th, the company filed an amended application increasing its total requested recovery amount due to an increase in insurance premiums and also removing $285.2 million in NPC. This removal of approximately half of the company's NPC from its request was viewed generally by the public as a reduction in the amount the company was ultimately seeking from customers. However, as the company has indicated, it expects full recovery of this portion of NPC through EBA surcharges with interest. The company's requests that approximately $280 million of NPC be collected in base rates approved in this matter commencing in 2025, and $285.2 million be recovered by EBA surcharges commencing in 2026. Although this helps mitigate the rate shock of a large increase in base rates following a large increase in the EBA surcharge, it ultimately increases customer rates with the required interest due on the deferral amount. As detailed in my direct and surrebuttal testimony, the EBA has shown itself to be beneficial to the company with little benefit to ratepayers beyond the mitigation of rate shock due to consecutive large rate increases. For the following reasons, the division finds that the EBA is now implemented is not in the public interest. The EBA allows unreasonable cost shifting to future periods, fails to properly align management incentives, allows company manipulation of proceedings and public information, are exceptionally difficult to audit, charges ratepayers with costs of errors for which an unregulated firm would be unable to recover, and allows significant unilateral policy changes that impose significant costs before any meaningful commission review. The division concludes that the EBA, as now implemented, misaligns the company's incentives in managing the costs within its ability to control, contributing to the large increases in customer rates. The statute appears to prohibit the commission from reinstating a sharing band. The division recommends that the EBA be eliminated. If the commission decides not to eliminate the EBA, the division recommends the adoption of the Office of Consumer Services proposal that the company file a rate case at least every 3 years while the EBA is in effect, as detailed in the surrebuttal testimony of Allison Anderson. This concludes my summary.
Okay, thank you, Mr. Smith. Anything before we turn to the cross?
Nothing before he is tendered for cross.
Okay. Cross-examination by Rocky Mountain Power.
Thank you. We have just a few questions. Good afternoon, Mr. Smith.
Good afternoon.
First, would you agree with me that in your testimony that rather than comparing the benefits with the detriments of the EBA, your testimony focuses solely on the detriments of the EBA? Is that fair?
Yeah, that would probably be a fair statement.
Does the does the DPU contend that there are no benefits to the current EBA?
As I stated, as it is currently implemented and structured, it bears little benefit other than rate mitigation or mitigation of rate shock, as we've seen applied in this rate case.
Okay, so you would concede one point is it allows for the smoothing of rates and to mitigate rate shock. Is the DPU stating that that is the single only benefit to the EBA as currently constituted?
So if the EBA were to only allow the variable costs that the company cannot control as a pass-through and not the costs that the company can control, it would make a big difference in our perception of it. As I stated in my direct testimony, the DPU has in the past made certain conditions upon which it allowed or supported in the past the EBA.
Then is it fair to state then that the DPU is not taking the position that per se a balancing account mechanism is always detrimental? It's really concerned with how the current one is being managed. Is that fair?
For the most part, yes.
Okay. You read the rebuttal testimony of company witness Mr. Mitchell, where he outlined what was in his mind 7 advantages of what he called an ACC or ACC. AAC. I'm going to call it an EBA, but
Okay, I get
you
it
read the
con- I
testimony.
get it confused too. so
All right.
It's okay.
In your surrebuttal, you stated simply that his comments were too broad to be convincing. Do you recall that
I
testimony?
do.
Let's go through just a couple of them to see if there's any specific benefit that we can pull from his testimony. I don't think you need it, but if you want to have it in front of you, I'm looking at pages 27 to 29 of his surrebuttal.
What pages again?
Pages 27 to 29 of Mr. Mitchell's surrebuttal testimony. Sorry,
I think
pages
you mean-
27 to 29. It was your surrebuttal where you said it was
Do you
too
mean
broad.
his rebuttal testimony?
Correct.
Okay,
Thank you.
you bet.
The first benefit that Mr. Mitchell identified was protecting the financial health of the utility during periods of rapid increases of power costs. First, would you agree with me that protecting the financial health of the utility is a worthy goal?
I would say it is a worthy goal, but as you are aware, the company has other goals, I'm sure, including customer rate affordability.
Well, sure, so I'm not saying it's the only thing, but you would agree with me then that protecting the financial health of the utility is a worthy goal for the commission?
There are lots of ways to protect the company's financial conditions, including, maintaining certain things and certain decisions that cause liability issues
Okay.
that we've seen recently.
And
Sorry. Issues recently.
And you would agree with me that the EBA accomplishes that goal, correct?
The EBA, if it was structured, or an EBA-like mechanism, if it allowed only the pass-through of costs that were not controlled by the company, would be in line with that, yes.
So that would be yet another benefit to an EBA-like mechanism that you would concede exists, would be protecting the health of the utility.
If it were structured that way, yes.
Another benefit of these mechanisms that witness Mitchell refers to is protecting customers in periods of rapid decreases in power costs, refunding power costs to the customer. Now, would you concede that that is also a worthy goal?
Returning costs that were more than what was actually incurred to the customers is a worthy goal. However, it's only occurred once in all 13 years of the EBA.
So is it fair to say then that you concede, yes, that is another benefit of the EBA, you're simply saying it doesn't come around very often?
It hasn't happened but once.
Okay? But you don't dispute that in those circumstances when there is a decrease in cost, that in fact it does happen and those costs are refunded to customers, correct?
In theory, yes, if it operated that way, yes.
The next benefit that Mr. Mitchell talks about is that the existence of an EBA helps the utility find low-interest bonds. That's not an issue that you disputed in your testimony, is it?
No, I did not.
Were you here in the room when we heard from witness Mr. Coleman?
I heard Mr. Coleman's
And
statements. Yes.
you heard him state that, words to the effect that capital infusions are largely occur by virtue of bonds that are procured by the company, correct?
I don't recall that specifically, but I don't deny it probably happened.
And you would agree with me that it would be a worthy goal for the commission to facilitate the company being able to acquire low-cost bonds for the benefit of its customers?
Of course, anything that would benefit the company that way, and there are other issues, many other issues that contribute to that as well, as you probably are aware, which Mr. Coleman, I think, also brought up.
And you did not in your testimony dispute the assertion by Mr. Mitchell that an EBA mechanism helps achieve that goal, did you?
I probably did not address that directly.
So if I'm understanding you correctly, if we were to assume a hypothetical in which only prudently incurred costs that themselves are prudent, meaning it's a prudent cost and it was incurred in a prudent manner, if those were the only costs that were allowed to be recovered in an EBA-type mechanism, in that instance, the DPU would not oppose it? Is that correct?
If it was only costs that the company could not control, that were
Okay.
prudently incurred, I would agree with that.
Okay. Well, then let's turn to some of the reasons that you identify as being problematic. In your testimony, you list 6 reasons that you contend the EBA is not in the public interest, and I'm looking at page 17 of your testimony. You recall reciting those 6 reasons?
That would be my direct, right?
Correct. You make the same list in your SIR rebuttal, but
Right,
I'm
that's what I
looking
was
at
asking.
page 17.
Okay.
The first that you identify is that the EBA shifts costs to future periods, correct?
That is correct.
But you would agree that if the company only has a rate case every 4 years or sometimes more, that even without an EBA, there is a regulatory lag time before rates go into effect to send signals to customers, right?
Yeah, and that's why we supported the 3-year commitment that was proposed by OCS.
Okay, so let's assume even a 3-year thing, a 3-year window. You would agree with me that if NPC stays flat for 3 years and then the entirety of NPC is forecast and put into a new rate, that the customer is going to experience a more severe bump in rates than with the existence of an EBA. Would you agree with that?
So that depends a lot on the details, doesn't it? I mean, it depends on what's going on, what the costs that are being proposed by the company. For example, this last proposal almost doubled the NPC that was from the last rate case. So in those kind of scenarios, yeah, the rate shock would be huge, as we experience now.
And you've, I think, agreed in your summary and at our outset that smoothing of rates is yet another benefit to an EBA-type mechanism, correct?
Yeah, but there's also mitigations that include sharing bands. So a sharing band can be considered a mitigation of rates in per se, and there are also other mitigations that could occur. EBA is not the sole one.
Okay, I'm not asking you to go through the list of every way you
Yeah,
can
I'm
mitigate
just making
rates.
sure you understand. Sorry.
I'm simply asking if you agree that the EBA mechanism, in fact, accomplishes that benefit.
It can.
Okay.
Yeah.
The second thing that you refer to, and where I think we're going to spend a little more time, is your claim that the EBA fails to align or it misaligns management incentives. Okay? Now, again, you've read Mr. Mitchell's rebuttal testimony, correct?
Correct.
He, in his rebuttal testimony, I'm sure you saw, stated that the perception that the EBA provides inadequate incentives to the company to manage NPC is not accurate. Do you recall that?
I do recall that. I also recall him providing a document that gave a listing of states, and it also, I also remember him making a claim that only in Pacificor rate cases, or Pacificor states, do we see sharing bands, which is inaccurate. I did some research. I looked into the document that he provided, the S&P document, which is dated September of 2017, which is not what's on his thing. He's got the wrong date, but in that
appreciate
document.
that, but that's not what I'm asking about right now.
Oh, okay.
I'm not asking about that. I'm asking about whether you contradict his statement that the company, its decisions that it makes regarding its NPC, how it's impacted by the EBA. That's the topic that we're talking about. And I asked, didn't he make the statement that you read in his testimony that in fact it is inaccurate to claim that the EBA does not provide an incentive to the company to manage their NPC?
So does the EBA provide incentives for the management to control it?
Well,
Did I get that
close.
question?
My question is, you saw where Mr. Mitchell
Yes.
made that claim. You may
Okay.
dispute it, but you recall that in his testimony,
Right.
correct?
Okay.
Isn't it true, as Mr. Mitchell points out, that even with an EBA-type mechanism, utilities are still incentivized to manage NPC. You would agree with me, wouldn't you, with that?
I think there are other factors that if the company considered those, would, incentivize. But I also think, and I know it's been shown with other states, adoption of sharing band mechanisms, because there is concern. In fact, it was raised in the initial approval of the EBA that there are things within the company's control. So,
Well, wouldn't you agree with me that even in an EBA, with the EBA, the company does not recover costs if it cannot prove them to be prudently incurred? Isn't that correct?
I would say it differently. I would say the default is that they are proved prudent unless being proved imprudent.
Now, when you state that, are you saying that that's the legal standard, or that's your
No, that's
perception
the,
of how
no,
the
that's the
commission has
reality
ruled?
of it. Sorry. Oh, sorry.
Is it the DPU's position that the company by default gets any costs it puts in an EBA filing?
I would object to that to the extent it calls for a legal conclusion. I believe that Mr. Smith is not the appropriate person to ask this question of.
I don't think he's calling for a legal conclusion here. I'm going to overrule the objection.
I'm sorry, ask your question.
I was just repeating back what I heard you state to me. I heard you state that the default is to just give the company what it files unless somebody can prove imprudence. And I'm stating, is that the DPU's position as to what the standard is?
No, what I mean to say with that is there's so much that it takes to reconstruct the past, to evaluate it in the perspective that it needs to be evaluated in. So by default, if we were to look at the recommendations that the companies proposed in the EBA in the past, compared to what has been adopted, it's a very small portion that we're talking about right now. So it's not a huge amount. And so
if I'm understanding, the complaint is that when the company makes an EBA filing, only a little bit is disallowed and the bulk of it is passed through? Is that the concern?
yeah, for different reasons. I mean, and what it means, all I'm saying by that is the company is receiving its almost 100%, almost every year. And so,
Well, is it the DPU's contention that the commission is not properly evaluating EBA filings?
no, it's just that the process, and I brought it up when I mentioned the difficulty of auditing it. The process is a difficult one to prove it, that the company is imprudent.
So is it the DPU's position, and I thought we clarified this, but that if the company prudently incurs costs, the DPU doesn't have a concern with the company recovering those costs? Is that correct?
As it states, if we're talking about past history,
Mine's not a historic before or after, it's just conceptually, is the DPU taking the position that in fact the company should not recover costs even if they are prudently incurred?
according to the EBA, it's allowed 100% recovery. So whether we have an opinion on it or not, it doesn't really factor in right now, right?
But I guess what I heard you say just a minute ago is the concern of the DPU is that in all of these filings, only a little bit is getting shaved off of the company's request, and the bulk of it is being passed through.
Correct.
And that's a concern of the DPU, right?
No, it's not that we're trying to disprove all that's presented before us. It's just that we hire consultants every year. They go through thousands and thousands of trades. We plow through so many records. Obviously, 85% of your company's costs are the NPC. So it's a cumbersome process that is difficult.
We're going to talk about the difficulty in auditing, but I just want to make sure we land on this conceptual piece. I've understood you to say that the DPU does not have a problem with the company recovering its prudently incurred costs.
Right, that's
okay?
true.
And I've also heard you state that the DPU is not taking the position that the commission is not properly making prudence decisions in EBA filings. Is that the division's position?
I'm sorry, ask that again?
Does the DPU have a position about whether the commission has mishandled past EBA filings?
No, I mean, obviously they rule it for a reason, right?
Okay,
They have ruled the way they have for a reason.
which means that the commission has found that the costs that it allowed were prudently incurred, correct?
Correct, they didn't disallow them.
Okay, and so if the DPU states it doesn't object to the company getting those costs in an EBA if they're prudent, and if the DPU states it doesn't take issue with the decisions that the commission has made in previous EBA filings, stating that those costs, in fact, have been prudent, then putting the two together, the DPU should not have an issue with the historic EBA process, correct?
You're asking me to put two, I mean, so could you clearly just ask your question? I'm sorry, you're connecting two things that.
All right. Let's talk about your contention that the company manipulates proceedings via the EBA. Do you recall making that claim?
Proceedings?
So I'm looking at page 20 of your direct testimony.
Yeah.
And at line 428, you ask yourself the question, how does the EBA allow manipulation of proceedings and public information? Do you see that?
Okay.
And then you go on and you explain your rationale of how you believe the EBA causes or allows the company to manipulate information, correct?
Correct.
And is it correct that the bulk of the narrative that you provide is related to the August 28th, 2024 amendment filing that the company made to remove the proposed second step increase, correct?
Correct, as an illustrative example.
And the DPU accuses the company of manipulating these proceedings and the commission by not clarifying its true intent to recover its step 2 increase via the EBA, correct?
Correct.
Now, in your rebuttal, you say that the company, and this is a quote from lines 24 and 29, that the company, quote, conveyed its intent in a way that was unclear, leaving its audience to decipher that it intended to collect the same $285.2 million increase it claimed to remove starting in July 2026, assuming no change in established schedules through the energy balancing account to avoid the rate shock of its 30.5 base rate increase following an already approved 11.82 increase in the EBA, close quote. Do you see that?
Which line again?
24 to 29 at your rebuttal.
The one that says it conveyed its intent but was unclear?
Yeah, I'm just trying to say, this is where in your testimony you are stating that the company is using the EBA to manipulate proceedings, correct?
I'm saying that it allowed that to happen.
Okay.
If there wasn't a second ability to remove up half of the NPC in a rate case, that this wouldn't have happened, so.
Okay, and we're gonna look at what the company's filings were, but I want to direct your attention to your testimony here on the same page, starting at line 33 and going through line 39. That's where you point to a press release by a Mr. Eskelson, where he said prices may go up in the future. And on line 38, you cross that may out and state prices would still go up, close quote, as an EBA surcharge. Do you see that?
I do.
Mr. Moskin, let me just interrupt to ask if you will clarify. I think Mr. Eskelson is in the Public Affairs Department of the company. He's a spokesman for the company. I just want to identify. You said I'm Mr. Eskelson. I just wanted to identify that.
Thank you. Yes. So the testimony that we're referring to identifies company spokesman David Eskelson, and it references a Utah News Dispatch of August 29, 2024, if that helps. Okay. And going back to this exchange, Mr. Smith, you contend that that was incorrect, that the company should not have said prices may go up. They should have said that the prices would or will go up. Is that correct?
I think they should have relayed their expectations better.
Okay. Now, you would agree with me, wouldn't you, that, as we've just said, that it's not automatic, right? If the company puts costs in an EBA filing, the commission may reject some or all or a part of that filing, correct?
That is correct. With the elimination of the EBA, that could also happen.
And so if Mr. Eskelson had in fact said the prices will go up in the future because we're going to get that money, that in fact would be presumptuous because they may not have recovered that from the EBA. Isn't that correct?
Did you not expect to get anything?
So the concern that the DPU has with this whole thing is that Mr. Eskelson used the word may rather than would.
I think it lacked the clarity that the company could have provided if it chose to do so. Chose to do so?
Okay. Let's flip the page to page 4 of your rebuttal. And this is where you continue to go on and describe, and this is my word, not yours, but that the company has been not transparent with its intentions. Is that a fair paraphrase of what's happening at this part of your
this is
statement?
a data request that we often get this response from the company when we ask for certain items.
Okay. Let's look at your testimony to the commission here. Let's first go to line 45. You state that the company is, and I'm at line 45 on page 4.
Yeah.
And here's the quote, required to transmit to each of its consumers and its regulators a clear and concise explanation of existing rates, surcharges, and new rate increases applied for. Do you see that?
Yes.
And then you put as a citation footnote 3, and you cite to Utah Code 54-4A-6. Do you see that?
I do.
And is your purpose for citing that you're telling the commission that the company had a legal obligation to be forthright and it breached, I don't mean that in a legal way, but it failed to meet its statutory obligation in failing to do that. Is that correct?
I don't know. I mean, if you want to take it to that conclusion.
Well, I mean, that's your, let me ask
I'm
this. What is
stating
your
that that's what it says, so you can interpret that, I guess, how you will.
May we approach and pass out a copy of 54-4A-6, Mr. Chair?
Yes, you may.
Thank you. So this is a copy of 54-4A-6, which you'll see is the statute identified in your footnote 3 for your premise that the company is required to transmit to consumers and regulators its explanation for its rates and surcharges and new applied for increases. Do you see that?
I do.
Would you show us where on this document that I've just handed out it states that?
So what you're saying is that it's got a wrong citation? Is that what you're trying to tell me?
Well, I'm not stating that. I'm simply stating that what you've put forward to the commission is not the way I understand this obligation, and that the citation provided does not state what's put here. So I'm asking if I'm mistaken.
I mean, you could interpret parts of that with that. It basically says the objectives, right, which is to provide exactly what it says. Consumers should have a clear and concise explanation of existing rates, surcharges, and new rates increases applied for.
But Mr. Smith, look at the very first paragraph. Isn't this the obligations and responsibilities of the Division of Public Utilities?
Correct.
So this is not a statute saying the obligation of the company. This is a statute saying what the DPU's obligations are, correct?
So you would disagree that this is an obligation for the company?
I'm simply asking you if the citation you provided actually states what you've indicated to the commission it states.
I think it indicates that there's a wrong citation here.
Okay? You started bringing up this DPU, or sorry, not DPU, the data request that's here on this same page, page 4 of your SIR rebuttal. That's farther down. Starting on line 50, you state, the company was not transparent with the division as it sought to understand the company's amendment, period. Right? Did I read that correctly?
Excuse me, let me read before that. Okay, so this is, yeah, we did seek this information.
Okay?
Okay.
And you state on line 52, the following is the company's entire response to the division's data request 49.5A, seeking information on the company's amended application, removing the $285.2 million proposed step 2 increase. And then you cut and paste an objection there. Is that correct?
That's your response, yes.
Okay.
Now, note that it's 49.5A.
We approach with, we're gonna have
may.
handed to you DPU data request 49.5 in its entirety and the company's responses in their entirety. While
Correct.
that's coming around, you would agree with me that the purpose of your statement here is to illuminate, as you call it, that the company was not being transparent with the division as it sought to understand the company's amendment, right?
In regards to that specific question, it was looking for information that the company provided to the public.
Okay,
That was specific to that question.
okay, so let's first look at the question. So on this piece of paper, you'll see some information is highlighted in yellow and some in blue. The top yellow is the question and the bottom yellow is the response to that question, and then same with the blue. So omitted from your testimony is what was asked, right? You don't say how the company, or excuse me, how the division asked its data request. You just say the company objected, right?
That is correct.
So if we look at A, the actual request was, please provide any internal emails, documents, or other communication discussing RMP's case update, removing $285.2 million in net power costs from its requests. These should include communications concerning any change in NPC estimates after June 30, 2024, discussions concerning public statements about the update, and communications with any governmental officials concerning the update. That's the question, right?
That is correct.
And in sub A, the company objected to this being overly broad and burdensome to respond to, right?
Correct, but it could have provided some information, correct?
And you would agree with me that in a litigated proceeding, it's not unusual for companies to object to overly broad document requests, is it?
I'm sorry, what was your question?
Has the DPU frequently seen objections to data requests that it thereafter is able to rephrase or restate?
It does occur.
Okay. Now, but more to the point about whether the company was hiding what it was doing, would you please read to the commission subpart B, the question from 49.5 that you omitted from your testimony?
I'm sorry, you want me to read B?
I want you to read 49.5 paren B, the question.
Assuming its full NPC forecasts prove accurate, please confirm if Rocky Mountain Power expects to recover the $285.2 million it removed in its revised application through its existing energy balancing account.
Okay. And going down below, would you please read the company's response to 49.5B?
Please refer to the amended direct testimony of company witness Joelle Stewart, specifically page 4, lines 65 through 66, which states, the company would continue to recover the differences between the level of base net power costs, NPC, and actual NPC through the energy balancing account.
So it's not true, as you state here in your testimony, that the company was not telling the division what it intended through the amendment, and it in fact did answer a data request indicating that, yes, it intended to recover these step two costs through the EBA. Isn't that correct?
It is correct, but it didn't answer the question that was asked to any degree. Any degree.
So this was, I look at this back in October of 2024. You agree with me, don't you, that the DPU had any opportunity to ask follow-up questions if it had them, didn't it?
Yeah, I mean, we could have.
Okay, thank you.
You bet.
And in fact, you would agree with me, wouldn't you, that as quoted in this answer to 49.5B, that the company referred back to testimony that had already been filed by Ms. Stewart, in which Ms. Stewart stated this, that in fact the company intended to collect the difference between the level of base net power cost and actual NPC through the energy balancing account, correct?
Correct, but the question was surrounding what the company provided to the public, not necessarily what the company provided to the DPU. To the DPU.
So
That was the heart of A.
your data request actually specifies internal emails and communications, correct? It's not external facing communications that you're looking for, right?
No, it's both. It says, well, discussions concerning, we want to know what you guys had talked about as your approach to present to the public.
Let's assume for argument's sake that that the company could have stated this better, that instead of saying may, they should have said would in their press release. For whatever reason, let's just assume that the commission agrees that could have been stated more clearly. You would agree with me, wouldn't you, that that concern that the DPU has no bearing on the rate increase that the company has proposed in this proceeding?
Does our concern over this affect?
Does the fact that Mr. Eskelson used the word may rather than would change the prudency of any costs that were incurred or that have been forecast in this proceeding?
Not the prudency of cause.
Let's turn to your contention that we identified earlier that EBAs are too difficult to audit. First, let's just start with a baseline. You agree with me that utility operations are complex, right?
Yes, they are, especially yours.
You agree?
Yes, especially Rocky Mountain Power's.
You agree with me that no matter the procedure, meaning whether it's in an EBA, a general rate case, or anything else, that trying to understand the company's costs in the context of a constantly changing environment is complex, correct?
Correct.
Can I interrupt for just a second, Mr. Moskin? Do you have a rough estimate how much longer you're going to go on cross? I wonder, we haven't had an afternoon break, and I'm just concerned we ought to do that at some point in time.
I'm happy to take a break anytime it pleases the chair.
All right, let's do that. I don't want to truncate your cross. You can do whatever you want to do on cross. Before we take a break, with respect to the statute that you referred to, we can take judicial notice of that. I am wondering if you want to mark the DPU data request.
Yes, please,
as
let's
an
make that
exhibit.
Rocky Mountain Power Cross Exhibit 6, and I move to admit it.
All right, any objection? Okay, it is admitted. Let's take a break. Let's try to take a 10-minute break, just if we can, till 20 after the hour. And
Thank you.
that's short, but I think that'll be appreciated by some.
Thanks.
the record, I'll represent that I had a discussion with Mr. Moskin and Ms. Schmidt for just a moment about schedule. We'll put that on the record at some point in time. I wasn't trying to exclude anybody on that, but we're not going to do that now. We're going to return directly to the cross-examination of Mr. Smith. Mr. Moskin.
Thank you. Mr. Smith, we were focused on claims in your testimony that EBA proceedings are too difficult to audit. Do you recall that?
I do.
General topic?
Yes.
You concede with me, don't you, as pointed out by Ms. Stewart, that in fact the statute gives the commission 300 days, which is approximately 2 months longer, to conduct an EBA review than it does a general rate case review, correct?
That is correct. It takes a long time to go through thousands and thousands of trades, let alone all the other components of the NPC.
But you would agree with me that if we eliminated, well, let me back up. The EBA are actuals, right? That's
They
not
are.
a forecast.
They're supposed to be.
And so you're agreeing that in an EBA, you have a longer period of time to focus on fewer matters which are actual compared to a rate case in which you have a shorter period of time to look at the entirety of the company's operations in a shorter period of time, correct?
That is correct. But like I said, it takes a long time to go through and not only take what you've done, the company has done as far as transactions, but also put that in context with what was going on, the decisions made at the time to, so in prudence is difficult. It's basically it's assumed that everything is prudent unless proven otherwise. And so to go through and to identify, sorry? Unless proven otherwise. That means that we have to plow through all of your transactions, everything, and that's just impossible to do. So it's really hard to say that everything that you've done within a period of time, 300 days, is evaluated as prudent.
Would you agree with me that the DPU has undertaken no analysis as to what abolishing the EBA would do to the company's lending relationships? Has it?
We looked at what happened in the last time that the EBA was adopted, and we didn't notice any change in the ROE or the rating agencies didn't have any mention of it. There were other mentions of other things that happened within the company, but nothing to do with that.
Okay, but we've now gone a decade and a half approximately with the EBA, correct?
That is correct, 13 years.
And so the DPU has not undertaken an analysis as to what the company's current lending relationships, what impact there would be on those relationships if the EBA was eliminated, has it?
How would you propose that we would do that analysis?
I'm simply asking if the DPU did that.
Not to probably what you're referring to. Did we consider the implications of it? Yes.
And same question as to you mentioned the company's credit rating, about looking at what happened in 2009. The DPU has not specifically identified an analysis as to what could happen to a credit rating if an EBA is abolished and those opportunities to collect those costs are deprived of the company, have you?
We have looked at different reports within rating agencies, and there is no mention of the EBA specifically.
But that's potentially...
That we came across, that we found.
But wouldn't you agree with me that that's likely the case? If it is in fact true that over 90% of peer group utilities have a mechanism, it's less likely to be acknowledged because it's kind of just it's a commonality, correct?
Well, I'd like to address that if I could. There has been some statements by the company that said that all of the states have something. And when you were saying that, I was just to clarify, we were talking about adjustment clauses, and nowhere was there any comparison to specifically the EBA. We looked at even the filing that supposedly was done by Buckley, and she provided value line statements. This is what was considered the state-by-state analysis, which are just value line pages that have nothing to do with sharing bands or EBAs. And then I also looked sharing bands and EBAs. I also looked at the footnoted S&P article from 2017 and noted that 13 of the states have abolished their EBAs, and that's mostly due to generation that they had gotten rid of. In the remaining ones that were there, it was noted that the Rocky Mountain Power or PacifiCorp's states were the only ones with sharing bands, which was incorrect. According to the S&P article provided, there was at least 13 states that had an incentive structure to organize to align the company's incentives with the customer's incentives. So those alignments include caps and sharing bands, and sometimes they had both. And so, to further state, Idaho, not only is PacifiCorp something with sharing band, but Avista Corp, Idaho Power, and also in Washington, Puget Sound and Avista Corp. And those are just without going too far looking. There are more out there, I'm sure, but that's what we found. So the statements that have been made have been incorrect. That have been made regarding this is incorrect. Sorry. Okay. Thank you.
If you can give me just 1 minute, I want to find the actual quote, because I don't think that we are fairly stating what Mr. Mitchell had reported. Isn't it true that, in fact, what Mr. Mitchell reported is that in those states in which the utilities had not deregulated the generation, that they had such a mechanism? Not in every state, but in the states in which generation had not been deregulated.
Oh, he did clarify that, but that's incorrect also, because 13 of those states that are not included in the ones that have gotten rid of their generation assets, 13 of those had either caps or sharing bands, and included in that were, like I said, Idaho and Washington.
Okay, I want to clarify though. He didn't state that they didn't have caps or sharing bands. That's still a type of a mechanism.
In the hearing, he said, oh, sorry.
Let me just jump in for just a second. Mr. Smith, make sure that Mr. Moskin has finished his question before you answer, and Mr. Moskin will accord you the same courtesy.
Mr. Smith, I am looking at what I believe is the statement of Mr. Mitchell, in which he states that in every state in which electric utilities have not divested their generation resources has adopted an ACC, or an automatic adjustment clause, like the EBA. I do not see in his statement anything about
Yeah, it was in the
sharing
hearing.
bands.
Oh, sorry, I did it again.
Okay, so I'm going to ask you both to stop for just a second. Mr. Moskin, first, would you give us the reference to Mr. Mitchell's testimony, please, since you've referred to it directly?
It's in his footnote 60, which, in his rebuttal, which is on page 25.
Okay, I think that's sufficient.
And he himself is not, just to be clear for the record, he is not saying, this is my analysis. He's actually citing an S&P Global state-by-state overview that he's relaying.
Which is also in the footnote.
Yes, correct.
Okay, would you now please ask your question again of Mr. Smith? Or we can read it back did you get the whole statement?
No.
Or do you want to? Okay, if she didn't get the whole statement because we were talking over each other, so would you repeat your question, Mr. Moskin?
Okay.
I'm going to read the actual statement that he makes and
Okay.
see if you have facts that you can demonstrate to refute this.
Okay.
What he actually states is that across all traditionally regulated states in the nation, meaning that states that are vertically divested utilities, he says, are not comparable to vertically integrated utilities in traditionally regulated states. And so that in the traditionally regulated states, every one of those has an AAC that recovers at a bare minimum fuel and purchase power costs for relevant electric utility under its jurisdiction. And he cites that study for that statement.
Yeah, and I believe that's what the study does say.
Okay. One. Well, I'll finish. There's the note proffer.
Well, while you're finding that, can I just clarify something? Or, oh,
Council is going to have all kinds of good redirect for you.
thank you.
You know, I'm actually going to conclude with that, but before I pass the witness, I will indicate for the chair if it would be useful to the commission, to the extent that this is anything relevant to them, that as part of the Idaho filing, the company actually did an exhaustive analysis of every state and jurisdiction and who does or doesn't have it that can be filed if it's a question that the commission has.
But the company hasn't filed that yet here?
I don't think,
We haven't traditionally filed it. We filed it, I believe, in Oregon in 2020. We filed it in Wyoming in 2020. And we updated it in both Wyoming and Oregon in 2022. And we have filed it in Idaho, in our current Idaho rate case. We traditionally haven't filed it here because of the nature of the EBA that has, it's rarely been, the structure of the EBA hasn't really been an issue. And
Okay, I'm not going to rule on that right now. I'm going to let but you can give it to Ms. Schmidt, and then she can examine it, and then we can come back to that as to whether we think that would be helpful or not. All right, so but do provide that to her, and then if you want to revisit that, and we'll talk about whether we think that would be helpful as well. Okay, so you've concluded your cross.
thank you.
Thank you, Mr. Moskin. Ms. Schmidt, redirect.
Good afternoon.
Good afternoon.
Do you recall a discussion with Mr. Moscon about the burden of proof in regulatory cases and in this case?
Yes.
I'd just like to clarify a couple of things. I believe it's already on the record that you are not an attorney, correct?
That is correct.
I believe that it's already on the record that your statements regarding the burden of proof were not offered as a legal statement. Is that correct? Is it, do you agree with me that, because you've been asked this, I'm going to ask this. Do you agree with me that the burden of proof in a regulatory case like this GRC lies with Rocky Mountain Power, the applicant?
Correct.
You were next asked questions about difficulty in auditing the EBA. Do you recall that?
I do.
Mr. Moscon asked you questions seeming to imply that it shouldn't be hard. I'm sorry, I'm not going to characterize his words. Mr. Moscon asked you questions and asked you to agree that the audit period for the EBA is longer than the 240 days allocated for a general rate case.
That is correct.
Is it still your opinion that the EBA is difficult to audit?
Yes, it is very complex.
Could you elaborate on that a little bit more?
Well, as I have stated before, we're presented with all of the company's transactions for the year with regards to net power cost. So just trades alone, the company goes through thousands, I don't know the count. So it's difficult for us to certify or to present that all of those costs have been prudently incurred, just given the volume, the sheer volume of it, not necessarily the complexity as well.
Is the EBA process difficult to understand? I understand that the company has represented, it's met with us several times and things like that, but is the EBA process, the actual purchase and sale process, hard to understand?
The purchase and sale.
The trades, are the trades hard to understand?
Oh, they're very hard to understand. We're not getting the information that makes it comprehensible. I mean, it lacks, and we've been going through that, and the company has been accommodating. We're trying to work through some issues with that, but we don't have the information to even start a valid, really, review of it.
And were you here when there was a discussion about the company's hedging program changing in 2021? I believe that was with Mr. Jones.
Yes.
I'll object. This goes beyond the scope of direct. We didn't get into hedging at all in the direct, or in my cross, I guess.
You got into the difficulty of auditing, and I believe that my questions relate and provide valuable information, how it is difficult to audit the EBA, and my question is going to ask whether or not that difficulty has increased since the company changed its hedging program in 2021.
Okay, with that explanation, I'm going to overrule the objection and allow you to proceed.
Thank you. Mr. Smith, I'll restate my question. Do you agree that the company changed its hedging program in 2021?
Yes.
Do you agree that since that time, it has been even more difficult for the DPU to audit the EBA?
Yes. In fact, I presented a list of the requests the company had next to the power costs purchases that they made. Within that, there are some hedgings, and it's hard to determine how that program has actually impacted the kind of recovery that the company sought.
And you mentioned submitting requests. Do you agree with me that on numerous times the division has had to ask its question again for various reasons, seeking to get the information that it needs?
Well, for example,
Objection vague and overly broad, lacks foundation.
Yes, could you be a little more specific, Ms. Schmidt? And maybe give an example or two, or just try to phrase the question with more specificity. I think it was vague and overbroad.
I'll rephrase. Has the division always received the answer it needs in a data request the first time it has asked the question?
Well, same objection.
Overruled.
I'm sorry, has it always received?
The information it has requested?
Not sufficiently. I mean, I know that the company, it's really hard to tell what's going on, but that what you saw is not uncommon, the statement that was addressed.
And do you agree with me that because of the 240-day clock and the data request deadlines that are included in the schedule, that there are times when the DPU does not or has not received the information that it has requested?
Yes.
Just for clarification, I think Mr. Moskin indicated with respect to the EBA, it is a 300-day clock rather than the 240-day clock for a general rate case.
That is correct. Sorry, I switched back to the general rate case. I should have said in the EBA process.
Okay,
I
all right,
apologize.
just for clarification. All right, thank you.
I'll move on. My last,
Was there an answer to the question
Oh,
given? I'm sorry.
I thought I answered, but
Maybe you did.
maybe-
Did you get the answer? Okay, all right, I apologize.
no, it's okay.
Thank you. Move on, thank you.
my last redirect question, or hopefully my last redirect question, addresses regulatory lag. Do you recall a discussion of regulatory lag while you were on the stand today?
Yes.
Would you agree with me that regulatory lag serves as an incentive for a company to make efficient management decisions?
Yes. I believe it incentivized lean decision-making, which enables prudency and cost incurrence.
Thank you. Those are all my redirect questions.
Mr. Moskin, any recross?
No, thank you.
Okay, we'll turn to the commission. Commissioner Harvey, do you have any questions?
I do. But I'm going to ask you to do a little bit of general history with respect to regulation of utilities in the U.S. And if you're not familiar with some particular topic I bring up, feel free to just let us know that and we'll move on.
Okay.
But going back sort of to the regulatory dawn of time, okay. Well, not the very first, because we started with actually canals and then to railroads, but when we first started regulating electric utilities, is it true that commissions came up with this idea of what we've generally referred to as regulatory lag as an attempt to align incentives of management with the general public?
That's my understanding.
Okay. And is the mechanism there the idea that as a company attempts to maximize its profits after its rates have been set, that it would find opportunities to do things more efficiently, and therefore it would earn profits in the short run, but then as it had to come in and open its books, those efficiencies would be exposed to the regulators and they could then adjust the rates to match those efficiencies?
Yes, that's my understanding as well.
All right. And so in a time of, say, a trend upward in cost, regulatory lag would provide a benefit both to the company in the short term and to ratepayers in the long term.
Yeah, I believe so.
Okay. But in a time if costs were decreasing due to technological change or whatever, changes in resources, those types of relationships might be flipped.
Yeah, I would agree with that as well.
Okay. So now moving to more recent history, one of the justifications, not the only, but one of the justifications that is often proffered for an EBA type of regulation is that the resource mix and the way that the utilities are actually providing electricity service has changed.
Correct.
And specifically that there's now more volatility in fuel costs, and there are different types of resources that make the process more difficult for the utilities themselves.
Correct. Also market purchases in there as well.
Indeed, and primarily the fuel prices driving different
Market prices up,
yeah.
yeah.
And so one of the features that's often mentioned is the volatility in those purchases, correct?
Correct.
All right. So in terms of regulatory lag, the advantage of regulatory lag under the previous system was it was a straightforward way of aligning incentives of both the company, well, aligning the incentives of the company towards the general good.
Yes.
Is that correct? All right, so now in an environment of volatility and much more uncertainty, the EBA, as has been mentioned, EBA-type mechanisms have been adopted in many jurisdictions throughout the country.
Yes.
Is that correct? It's the DPU's testimony that that at least some companies outside of Pacificor do have some type of incentive structures in their EBAs
Yes,
or
they-
equivalent mechanisms.
Yes, they do. Do you want me to expand on that a little bit? Or-
If you could give a few examples, but
So what I've seen is there are different types of ways that they do that. You're probably familiar with the dead bands, earnings test, caps on recovery, earnings tests, caps on recovery or increases. And I've, just in what they presented with the S&P article, there was at least 13 companies that had that.
okay, thank you. So thinking about that regulatory lag mechanism and how it interacts with an EBA like Utah has, meaning there is no sharing, it's a 100% recovery, correct?
Correct.
Okay. To the extent that an EBA allows Pacificor to avoid frequent rate cases, does that increase the likelihood that Pacificor would be able to capture excess returns as it finds those efficiencies and works to reduce costs over time between those rate cases?
Yeah, I believe so.
Okay. Now I'm going to turn to the cross exhibit that was just introduced by the company in the previous cross. I believe it was number 6, mark number 6. Anyways, it's the data response that you
Yeah,
are
I
familiar
put
with.
it here somewhere, sorry.
All right.
Go ahead.
I can give you my copy
you
and I'll
mind?
borrow my
Sorry,
fellow
I might have
commissioners.
left it in the other room. Go
That's
ahead.
fine. All right. Would you read under the question section, Part D?
Would Rocky Mountain Power have removed the 285.2 in net power cost for rate mitigation if it did not have an energy balancing account or another method of recovery for these net power costs?
And just in your own words, please give us a little bit more explanation of why or what the DPU was seeking there in terms of what it was hoping to find out.
I think it's kind of along the line with all of it is we're just trying to understand if they did not have an energy balancing account, what would the results have been? I mean, they removed, half their net power costs. So without that, I mean, they typically would not have done that because that says we're not seeking recovery on that.
So in effect, you were attempting to build a counterfactual history of what would have happened if the EBA didn't exist with that portion of the question.
Yeah, I would.
Okay.
Yeah.
All right, and then can you read the answer to Part D?
The company objects to this request as overly broad, vague, and not reasonably calculated to lead to the discovery of admissible evidence in this proceeding. Without waiving any objection, the company responds as follows. Each proceeding presents a unique set of facts, circumstances, and the exact nature of the company's request in a proceeding depends on a multitude of factors. So it is not possible to determine what actions the company would take given a different set of circumstances and factors.
Based on your answer to what I had you clarify on the question for Part D,
Yeah.
are you confident in stating that you are doubtful the company would be willing to forego collecting $285 million?
Correct. We didn't see, I mean, we've never seen it in any, except for this time.
All right. Okay, turning to the auditing of the EBA. In my mind, there seem to be sort of two different levels of auditing that might take place, and I'm sure there's others, but one of them would be, did the actual transactions take place?
Correct.
What we might think of just verifying the receipts, in a sense, right?
Right, exactly.
And that is not conceptually difficult, is it? Or is it?
Well, it is, because there are just so much to look at. I mean, so we do reconcile a lot of different accounts to different things. Of accounts to other accounts, right? So FERC accounts to their book accounts. There's just a number of things like that we look at, that we have to go through and check. And the model itself, which is great because it funnels everything into a calculation, each step you kind of have to follow it through just to make sure that, nothing's gone awry somewhere. We have caught times when, things weren't calculating right or whatever, or misapplied interest, so forth.
All right, I will stand corrected. Apparently, even the first part isn't
Yeah,
simple.
I mean, there is a lot to it.
Okay. The second part, though, is then examining the prudence
Correct.
of the transactions.
Now you get to the difficult part.
Okay. And in order to understand the prudence of any given, even just one, you not only need to reconstruct what happened, but in a sense you need to reconstruct why it happened.
Right, in context with the historical background.
Now, my understanding is that the division has been working with the company for several years in an attempt to establish some type of record keeping that would help with the why, but that's an ongoing effort.
Yeah, each step that the company makes a change, there's all these repercussions that happen. Like, what does it mean? How do we evaluate it? If it was static, it would still be difficult. When they make changes or propose changes, it exponentially grows in difficulty, potentially.
Okay, thank you. All right, a different topic. One of the benefits that is claimed for an EBA is that it reduces the number of rate cases.
Correct.
That's often claimed as a benefit. If the commission followed the DPU's recommendation of eliminating the EBA, would you anticipate that the number of rate cases would tend to increase in today's volatile world?
We would probably be spending the holidays with you again.
So we talk about, I think the term they use is pancake rate cases.
We would anticipate more rate cases, yes.
Okay. And would that increase the cost that the company incurs?
I'm sure there is a cost to that. I don't know, what that is. But in the flip side, are there cost savings or cost somehow recouping or reining in something, I don't know, that could happen if the company really is inefficient in how it's applying the EBA?
Okay. Let's see if there's... I think I'll conclude with that. Thank you.
Thank you.
Commissioner Clark, do you have any questions?
Just a couple. I'd like to know a little bit more about the 13 companies that you identified that have some incentive element in their in their structure. And because I do recall, I could be wrong, we don't have transcripts yet, but it seems like Rocky Mountain Power's witness, Mr. Mitchell, was skeptical that there were many, if any, outside of Pacific Corp's companies.
Correct. He called it a curious coincidence that only Rocky Mountain Power companies had a sharing band or a sharing mechanism.
So of the 13, how many of those are companies within the, utilities within the Pacific Corp family?
Oh, those were states.
Oh, it's 13 states.
13 states.
So do you have any idea how many utilities there are?
I can tell you that within Idaho, there are at least 2 that have sharing bands outside of Pacificor. And in Washington, there are at least 2 that have a sharing mechanism, a sharing band, actually. And there are others, like I said, the other 13 states. I don't know the number. A lot of these states are smaller, so they only have probably 1 or 2 at the most.
Do you have the states in front of you?
I do.
Could you just read them into the
Yeah.
record, please? And,
So-
and provide the source for your information.
The source is the document that Mr. Mitchell provided. It's an S&P article from 2017, so it's a little dated. It's entitled, well, it's an S&P, but it's the RRA Regulatory Focus, Amendment Clauses. And so in there, it lists Arizona as having a cap, Colorado cap, Idaho sharing bands and cap, Indiana sharing, Maine caps, Minnesota sharing and caps, Missouri has a cap, North Dakota has sharing, Pennsylvania, there was something there, I didn't quite understand that one, sorry. And then Washington and Wyoming, so.
Thank you. And the cap would be a cap on the recoverable net power
Yeah,
costs above what's currently in base rates, is that?
Correct.
Okay.
Yeah.
Those are all my questions, thank you.
Thank you.
I have no questions, Mr. Smith, and you may be excused.
Thank you.
Thank you for your testimony today.
Thank you, appreciate it.
All right, I'd like to get through at least one other witness today if we can. We'll see how it goes, and we'll make a decision whether we want to do more than one witness. So let's have the division call their next witness.
Thank you. The division would like to call Ms. Shauna Benvenu Springer as its witness.
Welcome. Is it Miss Bienvenue Springer? Welcome. If you'll raise your right arm, please. Do solemnly swear the testimony you're about to give in this matter pending before the Public Service Commission of the State of Utah shall be the truth, the whole truth, and nothing but the truth, so help you God.
I do.
Thank you. You may be seated. Okay, Ms. Schmidt, we're ready when you are.
Thank you. Good afternoon.
Good afternoon.
Could you please state and spell your name for the record?
My name is Shauna Benvenu Springer, Shauna, last name Benvenu, Benvegnu-Springer, Springer.
Thank you. By whom are you employed and what is your title?
I'm employed by the Utah Division of Public Utilities, and I'm employed as a utility technical specialist or consultant.
What is your business address?
The business address is Heber Wells Building, 4th floor, 160 East, 300 South, Salt Lake City, Utah, 84114.
In your conjunction with your employment at the division, Have you participated on behalf of the division in this docket?
Yes, I have.
Does your participation include reading the application, pre-filed testimonies, writing and reading data requests and responses, and identifying issues and discussing these things with other people within the division?
For the areas that I was assigned to, yes.
Did you prepare and cause to be filed what's been pre-marked as DPU Exhibit Number 18.0R, your pre-filed rebuttal testimony that was filed on November 15th?
Yes,
Do you have any changes or corrections to that testimony?
I do not.
If I were to ask you the same questions today that are presented in that testimony and exhibit, you have no exhibits, in your testimony, would your answers be the same?
Yes,
Do you adopt your pre-filed rebuttal testimony as your testimony here today?
I do.
With that, the division moves for the admission of Ms. Benvenue Springer's rebuttal testimony pre-marked as DPU Exhibit Number 18.0R.
Without objection, her rebuttal testimony is received.
Do you have a summary to present today?
I do.
Please proceed.
Good afternoon, Chairman Finn, Commissioner Clark, and Commissioner Harvey. When Rocky Mountain Power, or the company, filed its application seeking commission approval to increase rates, in my rebuttal testimony, I discussed three specific areas. One was the Klamath regulatory asset adjustment, 2, the Fall Creek fish hatchery adjustment, and 3, the Klamath dam removal or Klamath-related transmission adjustment. First, the Klamath regulatory asset adjustment. The company's witness, Ms. Shelley McCoy, stated in her direct testimony that FERC approved the company in 2022 to transfer the ownership of the 4 hydroelectric plants to Klamath River Renewal Corporation, also known as KRRC. The company did so in 2023. The plant's remaining net balances were transferred to a regulatory asset to be amortized over 5 years, specifically for 2023, 24, 25, 26, and 27. She makes an approximate price change adjustment of $949,787 reduction in the Utah revenue requirement. UAE's witness, Mr. Kevin Higgins' direct testimony states that in the 20-35-04 general rate case for Rocky Mountain Power, that the company was allowed to recover in Utah rates $3,300,339 in depreciation expenses, $4,268,426 in regulatory asset amortization expenses, and $1,756,467 in projected capital additions to the Klamath facility. This totaled $9,365,232. These costs were outlined again in the 2035-04 general rate case and recovered through 2022 when the obligation ended. Utah ratepayers have confirmed to pay these costs in rates from 2023 and in 2024. A normalizing adjustment to the base year for 2023 towards the test year 2025 going forward is fair and just. The division recommends an adjustment of $630,034 to reduce the revenue requirement for this particular issue. Second, the company proposed to include the Fall Creek fish hatchery at the cost of $36.5 million in rate base for the total company, with $16.4 million allocated to Utah. In the 2012 settlement stipulation, paragraphs 58 through 60, it states, Rocky Mountain Power may not recover from Utah ratepayers in this or any other proceeding any dam removal or removal-related costs associated with the Klamath Hydroelectric Settlement Agreement, again known as the KHSA. In the next paragraph, though, it does state that they may apply for future costs. The Klamath project stopped generating power in January 2024. The Fall Creek Fish Hatchery was constructed and operated after the removal of the Iron Gate Dam. The company witness, Mr. Timothy Hemstreet, stated before this commission that the hatchery project was known prior to the 2012 settlement stipulation. The division recommends 5 adjustments to remove operation and maintenance expenses, related depreciation expense, rate base of the $16.4 million, and the accumulated depreciation and the ADIT, or accumulated deferred income tax, all totaling $2,495,835. Again, the $16.4 million is the rate base, and so it's only the investment that would be depreciated because of removing that amount from rate base. These costs that Utah ratepayers should not continue to these are costs that Utah ratepayers should not continue to pay since they were required as part of the dam removal. Third, the company proposed Klamath-related transmission costs. The division recommends an adjustment to remove amortization expense, rate base for a net plan adjustment, and the accumulated deferred income tax totaling $54,247. These costs are for one-time expenses related to the Klamath project for disconnecting transmission lines from the hydro plants and reconnecting to the grid, and this should not continue to be in Utah rates. The division recommends that the commission accept the following normalized adjustments to the base year. 1, remove the amount of $536,352 for amortization expense in FERC account 407 for the Klamath regulatory asset, which is the Utah portion. 2, remove $1,318,533 from the rate base for the Klamath regulatory asset in FERC account 182M. 3, remove the amount of $324,183 from accumulated deferred income tax in FERC account 283. Number 4, remove the amount of $7,356 for amortization expenses in FERC account 207. FERC account number 207 for Klamath-related transmission costs. 5, remove $739,831 from the rate base for the net plant adjustment as a contra asset in the FERC account 182M. 6, remove $324,183 from accumulated deferred income tax in FERC account 283 for the Klamath-related transmission accumulated deferred income tax. Sorry for the duplication. 7, remove the amount of $613,024 from operation and maintenance expense in FERC account 535 for the lower Klamath Fish Hatchery, which is the Utah portion. Number 8, remove the amount of $452,595 from related depreciation expense in FERC account 403 HP for the lower Klamath Fish Hatchery. Number 9, remove the amount of $16,363,000 $1,473 from rate base in the FERC account 332 for the Fall Creek fish hatchery plant. Number 10, remove the amount of $584,602 from the accumulated depreciation in FERC account 108 HP for the Fall Creek hatchery. And number 11, remove the amount of $118,916 from accumulated accumulated deferred income tax in FERC account 282 for the Fall Creek fish hatchery. The division finds these adjustments to be just, reasonable, in the public interest, and this concludes my summary. Thank you.
Thank you, Ms. Bienvenue Springer, for your summary. Anything from the division? Okay, do you have cross, Rocky Mountain Power?
No cross.
Okay, anybody else have cross? Okay, we'll turn to the commission. Commissioner Harvey, any questions?
Just two, I think. What's the total amount of the adjustments you were recommending?
The total amount?
Oh, if you have that.
I
If
don't
not-
have
Oh,
the
okay.
total amount. I just have them itemized out.
That's fine. I can add them up later.
Because you have to put them in separately into the JAM model, because depending upon what their rate of equity and rate of return is, impacts what other adjustment goes in there.
So there would be interactions that would make just a straight sum inaccurate.
Correct.
Okay, that's good. Thank you. With respect to the Klamath regulatory asset adjustment that you were mentioning, is that an adjustment to recoup overpayment or to stop overpayment in the future?
To stop overpayment in the future.
Okay. All right, thank you. That's all I have.
Commissioner Clark, do you have any questions?
No questions, thank you.
I don't have any questions either. Thank you, Ms. Bienvenue Springer, for your summary, and we'll excuse you.
Thank you for the opportunity.
Thank you. Let's try to do do you want to take, there is no cross now scheduled for the next witness was listed. Okay. Do you want to just go in order then? Do you want to call your next witness?
Yes, please, and Mr. Griecu will do that.
Okay, Mr. Griecu.
The division would call Mr. Christensen.
Okay, Mr. Christensen, if you'll come forward. Welcome. Will you raise your right arm? Mr. Christensen, do you solemnly swear the testimony you're about to give in this matter, pending before the Public Service Commission of the State of Utah, shall be the truth, the whole truth, and nothing but the truth, so help you God? Thank you. You may be seated. Mr. Griecu.
Thank you. Could you please state and spell your name for the record?
My name is Justin Christensen. That's J-U-S. Can you hear me now? Yeah.
Yes, much better.
It's Justin Christensen, J-U-S-T-I-N. Last name Christensen, C-H-R-I-S-T-E-N-S-E-N.
And by whom are you employed and what is your position?
I'm employed with the Division of Public Utilities as a utility analyst.
And what is your business address?
As mentioned quite a few times today, it's Heber Wells Building, 160 East, 300 South, Salt Lake City, Utah.
And have you participated in this docket on behalf of the division?
Yes.
In that participation, did you review the company's filed application, amended application, exhibits and testimonies, as well as filings from the other parties?
Yes.
And as it pertained to your area of review, did you review responses to the data requests?
Yes.
Did you prepare and cause to be filed your rebuttal testimony and DPU exhibits 13.1R through 13.3R on November 15th, 2024, and your rebuttal testimony filed on December 4th, 2024?
Yes.
Do you have any changes or corrections to those filings?
I do not.
And if I asked you the same questions posed in your testimony today, would you provide the same answers?
Yes.
Do you adopt your pre-filed testimony as part of your testimony today?
Yes.
At this point, I'd like to move for Mr. Christensen's rebuttal testimony and rebuttal testimony and associated exhibits.
And there were no exhibits associated with the rebuttal testimony, is that correct?
Correct.
Okay. Without objection, we'll receive Mr. Christensen's rebuttal testimony and exhibits and his rebuttal testimony.
Thank you.
Thank you.
Mr. Christensen, have you prepared a summary to share?
I have.
Please proceed.
Thank you. Good afternoon, Commissioners. In my rebuttal testimony, there were two adjustments I adopted regarding the company's willing revenue. The first adjustment was to use the current FERC-approved transmission rate for the months of January 2025 to May 2025. The second adjustment was to include the willing revenue in the test period associated with the 500 megawatt point-to-point transmission service request. In my rebuttal testimony, I changed my position to use the company's forecasted transmission rate as filed for the months of January 2025 to May 2025. In her testimony, Ms. McCoy has brought up a few points that seem reasonable. From her rebuttal testimony, and I quote, the impact of removing the $1.7 billion of wildfire loss accruals from the estimated rate drops the 2024 estimated rate from the 4,460.80 megawatt month to approximately 3,564.74 megawatt month, absent any other impacts to the transmission rate, close quote. The division has a better understanding that the current 2024 FERC-approved transmission rate is an estimated rate and that the true-up rate will be calculated in May 2025. When the 2024 true-up rate is calculated, based on actual data from the 2024 FERC Form 1, the company believes its actual transmission rate will be closer to its forecasted rate of 3494.49 megawatt month in this docket compared to the current estimated FERC-approved transmission rate. Based on Ms. McCoy's assertion, the division agrees that the transmission rate the company used for the period of January 2025 through May 2025 is a more reasonable rate estimate than the current FERC-approved transmission rate. For my second adjustment, after reviewing Mr. Bell's rebuttal testimony, I continue to recommend the adjustment to include the $26.4 million in willing revenue associated with the 500 megawatt point-to-point transmission request. The company's open access transmission tariff allows the customer to request a one-year extension for up to 5 years, provided two requirements are met. One, the customer pays a 1-month reservation fee, and two, there can be no other requests in the queue for service over the transmission line. Since there are multiple requests in the queue, the customer cannot request an extension. Now that Gateway South is operational, the customer must begin taking service January 1st, 2025, or forfeit its rights. The customer must begin taking service January 1st, 2025, or forfeit its rights. If the customer takes service, the estimated revenues is $26.4 million. If they forfeit the contract, another request from the queue takes service over the release capacity. Either way, it seems there would be willing revenue generated from this contract during the test period. Accordingly, based upon the information it has, the division continues to support this adjustment. This concludes my summary.
All right, thank you, Mr. Christensen. I assume you have nothing? No cross from Rocky Mountain Power? No cross from anybody else? Commissioner Harvey has a question at least. He held up one finger, but whether that proves to be accurate, we'll find out. But please, Mr. Commissioner Harvey.
One topic.
Very good.
Just turning to that last topic you mentioned, the contract on the line that would produce wheeling revenue. I understand your explanation of the people in the queue taking service if the rights are lost. My question on it is just how long of a process is that from a customer losing their rights to when the next customer would start taking service? Do you have any idea?
I'm not positive on that.
Okay. Thank you. That's all the questions I have.
Thank you, Commissioner Harvey. Commissioner Clark.
No questions, thank you.
I have no questions, Mr. Christensen. That was short and sweet. Thank you very much, and we'll excuse you.
Thank you.
Appreciate your testimony, your summary. I think we can continue on. I'm starting to think, I think we have a conflict with one of the commissioners. We'll have to end by 5. Is that about when you? So we're, as much as I would like to do some arm twisting to get this all done tonight, I think there's a conflict that we have with Commissioner Harvey's schedule. So next witness of the division, please.
The division call is Mr. Paul Hicken.
Mr. Hicken. Mr. Hicken, welcome. Thank you. Would you raise your right arm? Do you solemnly swear the testimony you're about to give in this matter pending before the Public Service Commission of the State of Utah shall be the truth, the whole truth, and nothing but the truth, shall help you God? Yes. Thank you very much. You may be seated. Mr. Grecu.
Thank you. Mr. Hicken, could you please state and spell your name for the record?
You need to turn your mic on.
My name is Paul Hicken, Paulhicken.
And by whom are you employed and what is your position?
I'm employed by the Division of Public Utilities as a utility technical consultant.
And what's your business address?
160 East, 300 South, Salt Lake City, Utah, 84114.
And have you participated in this docket on behalf of the division?
Yes.
Did you review the company's filed application, amended application, exhibits, and testimonies, as well as filings from the other parties?
Yes.
And as it pertained to your area review, did you review the responses to data requests?
Yes, I did.
And did you prepare and cause to be filed your rebuttal testimony filed on November 15th, 2024?
Yes.
Do you have any changes or corrections to that filing?
No.
And if I ask you the same questions posed in that testimony today, would you provide the same answers?
Yes, I would.
Do you adopt your pre-filed testimony as part of your testimony today?
Yes.
I'd like to move to admit Mr. Hicken's rebuttal testimony.
Without objection, Mr. Hicken's rebuttal testimony is received.
Thank you. Mr. Hicken, have you prepared a summary to share?
I have.
Please proceed.
Thank you. The purpose of my rebuttal testimony is to state and summarize the division's position and recommendation regarding the company's proposal to create a new involuntary renewable energy credit tariff option program that allows the company to retire RECs on behalf of participating customers so that those customers can meet their own sustainability goals. The division's analysis finds that the proposed program is selective and exclusive. Rocky Mountain Power proposes that the program will only be offered to a select group of customers, primarily larger companies with high energy demands. Smaller companies with lower aggregated load, such as residential customers, irrigation customers, and certain small business customers, will not be eligible to participate. The company's reserve of RECs is generated by all customers, not just those with the largest demand or aggregated load. Therefore, when the company sells or retires RECs, the benefit should be available to all customers. Because the costs are unknown for implementing this new program, the division concurs with the Office of Consumer Services recommendation that the program should be implemented as a pilot program for a limited time and should be evaluated no later than 2 years after it begins. The administrator should conduct annual or biannual reviews to determine the administrative costs, which customers are participating, whether the program needs modifications, and whether the participation levels justify continuation or expansion of the program. This concludes my statement.
Okay, cross-examination?
No cross.
No cross. We'll turn to Commissioner Harvey.
Just one question. Do you have an estimate of how large the current REC benefit is in residential rates?
No, I don't.
Okay, thank you. That's all I have.
Commissioner Clark?
No questions, thank you.
I just have one question, and I'll ask Mr. Moore to correct me if I misstate what my recollection is of the witness from the office. But my recollection is that the office agreed with the company's recommendation or position to have a pilot program that would run for 3 years rather than 2 years. And I guess I'm trying to figure out whether you would have any objection to that as the division if it was a 3-year pilot program rather than a 2-year pilot program.
No, we don't object to that.
Okay. And what about with respect to the scope, that this is now limited to a certain subset of customers for purposes of administrative ease as well as evaluating the program in that 3-year period, and it would not include at present residential customers? Do you have an objection to that?
I think it was addressed in Mr. Eller's either rebuttal or surrebuttal testimony that the company will consider that in their final reviews, and they would like to limit the scope in the beginning so that the administrative costs don't become too burdensome. And I think our position as a division is, I think we're okay with that.
Okay, yeah, I don't want to misrepresent the company's position, but that's my recollection. Ms. Smith, would you like to just state what the company's position is in a nutshell?
That was a good summary of the company's position on it.
Okay, all right, and so with the limitations they propose and what the office is comfortable with, and Mr. Moore, was I correct in my?
To the best of my recollection.
This is the best of mine as well, and so that's why I don't know that I can take it to the bank, but it's pretty close. I was just trying to figure out if we have a divergence of viewpoint on this issue vis-a-vis the division and the office, and I don't think we do. All right, I have no further questions.
Thank you.
You can be excused. Thank you very much, Mr. Hicken. We're going to continue to move along, and let's just talk about this. It occurs that we have a quorum, and I've checked with Mr. Harvey, Commissioner Harvey, and he does have to leave at 5 o'clock, but Commissioner Clark and I are able to work into the wee hours of the morning to finish the witnesses for today. I think aren't there just 2 more witnesses? 2 more witnesses. So at the way we go, we could be done by 5, and I'll quit talking, and we can call your next witness. But the question arises with respect to the issue we talked about during the break, Mr. Moskin, and that is whether you see any need at this stage in the proceeding to recall your witnesses.
Yeah, thank you. And to be honest, I still need to confer with my client after all of this, but I believe that we likely, in response to, as we had been objecting about what I'm going to call live on the stand commentary about previous testimony, would like to recall 1 or 2 witnesses. This may be remote or in person. We're still working this out. I don't anticipate that being a long thing, and we can be prepared to do that in the morning if we finish up with these 2 tonight.
Okay, but you feel like, given the nearness in time to the testimony of Mr. Coleman, that you'd like to address that now rather than waiting and having an opportunity to call them in another phase of the proceeding. Is that correct?
Can you give me 30 seconds?
Yes, go ahead.
Yes, now.
I wish I hadn't given you that time. Okay, well, that means we may have to do that in the morning. Go ahead, do you want to make a comment as to that?
Yes, I would like to make several comments.
Okay, we'll listen to them.
The company has put on its case, and allowing it to have a further round of rebuttal is unreasonable and provides no meaningful opportunity for parties to respond. The company certainly has not been prejudiced by the presentation of material by the other witnesses. It has had ample cross-examination opportunities and has made objections to any information it claimed was new. When will these witnesses be heard? If it's too soon, there's little opportunity to prepare. If it's later, it jeopardizes the party's ability to get post-hearing briefs done in time. And if it's after post-hearing briefs, it gives an unfair opportunity to respond to briefing. We should not create a Phase 1, Part 2, which this threatens to do. And if I may add, and perhaps Mr. Griecu is going to kick me, but I believe that Ms. Colbia, in her live testimony last week, referenced a new Moody's credit report from a little earlier in December. I do not believe that report has been provided to the parties. I particularly asked Mr. Sabin if he had produced that in this docket, and he said no. It was filed in the merger docket, the one which Pacific Core and BHEC became one. I asked him to provide that, and I have not seen it yet. So I believe that it would be unreasonable to grant his request under the circumstances.
Okay, Ms. Schmidt, you make some good comments, and I just want to ask a question with respect to, to determine the scope of why you would need to call, I'm assuming you're talking about Ms. Bulkley or Ms. McCoy?
Sure. Well, so let me just state in response very writ large on the concept. Throughout the proceedings, we're reminded that as the applicant, we bear the burden, and traditionally the applicant with the burden gets the last word. What has been happening that we've objected to, and the chair has noted and said there's a remedy to this, is when the company's witnesses go, they go first. They haven't had an opportunity to see and hear what everyone else said and say, oh, by the way, and this is my response to so-and-so, and this is my response to so-and-so. Yet that's what's been happening to the company here. When Mr. Higgins was on the stand and he was going through and pointing out charts and things, and we raised this kind of conceptual idea to the chair, and the chair said, hey, there's a way around this, you can bring witnesses back with Mr. Coleman and the Ms. Bulkley or the Ms. McCoy on the wildfire issues. In fact, one of the commissioners, may have been you, Chair, that said, I wished I had asked this of the company witness because new ideas came up in questioning And as we saw again with another objection, with the little chart that was provided, it's like, well, Commissioner Harvey asked this, so I anticipated I'd be asked it, and so I made it. Our witnesses have not had that opportunity to do it because they went first. So that's just a conceptual idea of it. But yes, to give some ease of it, this is not intended to be this putting on a phase 2 of phase 1 of recalling every witness. This would be, I think, limited to a handful of questions of 2 witnesses.
Okay, well, let me just say one other thing. It's only with respect to, we would only allow it, and I'm gonna perhaps rethink this a bit, but we would only allow it as to these 2 exhibits that were used in Mr. Coleman's testimony as illustrative. That's what you objected to. Is there something else that you objected to?
Yes, we've objected multiple times to witnesses on the stand responding to somebody else where we didn't get an opportunity to do that. I thought the remedy was if you wanted to I will just say traditionally, we've always been given the right to do redirect. In every proceeding that I know of, we haven't always taken it, but that's the procedural mechanism that has been in existence for as long as I've been practicing. So the fact that we have witnesses come back and address things that have been raised during the proceeding is the norm. So I don't believe we're just limiting it to those items. We would only be addressing items raised during the proceeding by witnesses about what other people had said during the proceeding or what commissioners had asked about that we didn't get a chance to respond to.
Okay, we're not gonna do that. All right, I'm sorry. As far as the objections were ruled on up at the time, the only issue that I think is outstanding is whether we're gonna allow these 2 exhibits for further examination. Those are the ones that you claim surprise on. I don't have any other sense that you were caught off guard or surprised in my rulings on that stand. With respect to these 2 exhibits, let me just say this. We've already indicated with respect to this exhibit that we're not going to give it much weight, okay? It's in there. It hasn't been marked as an exhibit in the case. We've already indicated with respect to the horizontal lines that we're going to disregard those, that they're static when it wasn't a static. The last couple of years actually show trend lines moving in favor of Rocky Mountain Power's position. So I'm just not sure why you need to call a witness back for that exhibit. As far as the other one, which I won't show up for the camera, it was a confidential exhibit. But did you refer to that in your testimony when you were? I don't think you did on this.
Just to thank them for preparing.
But there wasn't a discussion of the numbers on this in the.
In that case, if I may, can we analogize the yellow paper thing to exhibits that perhaps are in the books that the commission has received that were not sought, that the companies and the other parties did not seek admission for? We don't have the opportunity to see what they did or did not present, and I would like that yellow paper presentation to be considered perhaps, I'm not sure if it should be considered an exhibit that was not presented since there was not any questioning on it, or I'm not sure if there was no questioning because it contains confidential numbers.
Mr. Chair, can I raise one more issue that might
Sure,
weigh in on
Mr.
this?
Saban, sure. I want to hear from everybody.
First of all, when you make decisions about who you cross-examine about what one factor that goes into that is the opportunity for redirect, which has always existed as far as I'm concerned. You may choose to say, for example, I've got a witness who I think can better explain that issue than I can do it on cross-examination. And it's an issue that comes up in the middle of a proceeding. I didn't keep track, but I've noted with you, when I was asked various issues or during witnesses where I was defending the witness, we noted a couple of times, I wish I had kept track of the times when we said we'll address that on redirect. And I had assumed, and we had been operating under the assumption that we would have that opportunity to have witnesses provide answers to questions that have come up during the proceeding. I'm not talking about questions that came up in pre-filed testimony. I'm talking about during the proceeding. I think that is prejudicial to our client to not be able to address issues that came up during the proceeding that our witnesses have not had a chance to respond to. I don't think this is extensive. I think it's minimal, but these are important issues, and you have gotten the answer from other witnesses. Now, had the commission ask every witness the same questions, that would be a different matter, but that's just not the way hearings go. So we do our best to create a list of items and issues that we try to have our witnesses address to make sure you're fully informed on the issues and that we understand where the commission has asked questions. So that has factored into our analysis as we've gone throughout this proceeding, is the expectation that we'd have witnesses that would have the opportunity to do that. And I thought we had mentioned that multiple times during the proceeding and had not heard that the commission was not willing to entertain that. I certainly will of course abide by whatever you decide to do, but just know that's been a factor for us and it's something we'd been expecting. And if it's not allowed, I do feel like we need to lodge that as an objection.
All right, that's fair enough. I'm going to just consult with what the other commissioners here recall. Give us just a few seconds off the record, okay?
Chair, excuse me, may I have the pleasure of the record for a second?
Sure.
I just wanted to say that the office concurs in the DPU's objections, and that I believe I believe the processes we have had to object to questions which are outside the scope is sufficient, which were not made, are waived. You don't, if the questioning goes outside the scope of direct or outside the scope of the written testimony, there's an objection that can be logged at that time that I don't believe has been made consistently. I also would like to say that there's prejudice. If there is prejudice on one side, there's prejudice on both sides. And I have never been aware of a situation where witnesses are routinely recalled. And if they are recalled, they're recalled to a very specific question that is answered and not reopened the hearing, because there'll be no end, and somebody has to go last. And regarding the standard of proof, the utility goes first consistently, and that means someone else goes last.
I agree with that, Mr. Moore. I want to talk to the commissioners for a moment, but there is not going to be a reopening to have witnesses testify again. The case in chief was put on. The only issue is the question of whether there was surprise with respect to any issues that were raised. I only recall stating to Mr. Moskin that we could address the issue with respect to this if necessary, to recall his witness or witnesses to address Mr. Coleman's specific issue. That's the limit to which I am going to allow a witness to appear again at this stage in the proceeding. I've already indicated that there may be, I'm not planning on this. This is not being necessarily something you should plan on, but this is a fairly unique proceeding in the sense that we issued an order that you strenuously disagreed with, but this decision in this case is now due on April 25th. It has 3 phases of a hearing. If in fact, in preparing our order on revenue requirement and cost of capital structure, we have additional reason that we want to recall witnesses and put on, have you put on more evidence, we'll obviously it'll be direct cross, redirect, recross, okay? But let me just take just a second. Okay, I think I've heard enough on the issue from everybody, and in talking to the other commissioners, my recollection is we worked through all of the issues at the time. We've not allowed or made a commitment to recall any other witness other than I did tell Mr. Moskin that we would, in his cross, that with respect to this chart, which, by the way, we have not received into evidence, it's not an exhibit, and this other confidential chart that we could have, you could have a witness testify to it if necessary. I will say that with respect to the second chart, it wasn't used today. We're not going to get into that one at all. So that one we can lay aside. If you feel a need, because you claim surprise as to this second exhibit here, we will allow you to call someone to testify as to that chart, but that's the limit of it, okay?
I believe, and I'm going to look over my shoulder to make sure I'm not misspeaking, but if, with that limitation, then I think it would not be worth it. The company would not recall a rebuttal witness.
If you want to file a motion for reconsideration on that ruling, go ahead. We'll consider it. And if we conclude that what we've done is error, I don't think it's a reversible error, but if you think that what we've done is error, we can revisit that issue, and if we rule differently, we still could address that at a later stage in the proceeding. We have two other stages in the proceeding, but that's our ruling. So with that, I understand you will not be recalling a witness this evening or in the morning. Okay, let's move forward. And do you have another comment? I saw you go over your mic.
It was just that we just want to make sure we reserve our right. You noted about you could file a motion to reconsider. I'm assuming we can wait and get the transcript and review.
Oh, sure. I'm not gonna, yeah.
Right. Okay.
But if we rule differently, and if that's an important issue for you, I mean, I'll be honest with you. I think that the chart doesn't carry, doesn't hold a lot of weight with us, and I'm not sure why you would need a witness, but that's your determination, not mine. But if you want to file a motion for reconsideration, you can wait until you get the transcript. And if we did rule in your favor to grant that, we'd try to schedule that around either phase 2 or phase 3 at the beginning or end of one of those. Okay? Is that fair?
That makes sense.
Okay, if that makes sense. All right. That was an awful lot of fun. No, it wasn't, but I appreciate you raising that, and I think that that's how we're going to proceed. So let's, Commissioner Harvey will leave us when he has to leave us, but if without objection we have a quorum, we'll go forward with 2 commissioners. And we know that will also shorten the hearing somewhat because Commissioner Harvey won't be able to ask questions.
This is true.
All right. Will the division call their next witness?
Yes, with that, the division would like to call Mr. Ryan Daigle to the stand and ask that he be sworn.
Mr. Daigle, welcome. Thank you. Will you raise your right arm? Do you solemnly swear the testimony you're about to give in this matter, pending before the Public Service Commission of the State of Utah, shall be the truth, the whole truth, and nothing but the truth, so help you God? I do. Thank you. You may be seated.
Good afternoon. You have the distinction of being the second to the last witness.
Hooray.
Could you please state and spell your name for the record?
My name is Ryan Daigle, RYANDAIGLE.
By whom are you employed, and what is your position title?
The Division of Public Utilities, and I'm a utility analyst.
Is your business address 160 East, 300 South in Salt Lake City, Utah?
It is.
Have you participated on behalf of the division in this docket?
I have.
Has your participation included, to the extent that it addresses items which you have been tasked to analyze, reviewing the application, amended application, testimonies, exhibits, reviewing and preparing data requests and responses, analyzing the issues, and meeting with others to discuss them?
Yes, it has.
Have you prepared and caused to be filed what has been pre-marked as your rebuttal testimony, marked as DPU Exhibit Number 16.0-R, with attachments A, B, C, D, and E, did I read that correctly?
I believe so.
Do you have any changes or corrections to that exhibit?
I do not.
If asked the same questions as in your pre-filed testimony, would your answers be the same as were included in that pre-filed testimony?
Yes, they would.
Do you adopt your pre-filed testimony as part of your testimony here today?
I do.
With that, the division moves for the admission of Mr. Daigle's DPU Exhibit Number 16.R with its attachments.
Without objection, that testimony and attachments were received.
Mr. Daigle, have you had an opportunity to prepare a summary?
I have.
Could you please share it with us?
Sure. Good afternoon, Chair Finn, Commissioner Clark. The division recommends the commission adopt the adjustments proposed in the direct testimony of Donna Ramus in Exhibit OCS 3.16D as suggested in my rebuttal testimony. The division also recommends the commission adopt the adjustment to the Gateway South project proposed by Mr. Higgins in his direct testimony. This concludes my summary.
Thank you. That was another trophy or medal is coming, correct? Is that how you do
Correct,
it? All right.
correct.
Well, all right, so thank you. All right, cross-examination of this witness.
No questions.
Okay. Commissioner Clark.
I just have a question with respect to the degree to which these pro forma plant additions, adjustments have been reflected in the company's more recent filings since you prepared your rebuttal testimony.
Sure. I've reviewed the numbers proposed by Ms. McCoy in her rebuttal testimony and subsequently adopted by Ms. Ramus in her surrebuttal testimony, and the division does not contest those updates.
I promise you we didn't plan this in advance. Thank you.
Okay, so that was the reference to, if I recall, 69 projects that were included in the pro forma plan additions, and a number of those have been, because they were canceled or delayed beyond the test year, they're no longer included in the request for the company's requests.
Yes.
Okay, all right, I have no further questions. Mr. Daigle, that probably is the shortest time somebody's been on the stand, and we'll excuse you. Thank you. All right, Mr. Wheelwright, your last witness?
Yes.
Okay. Welcome, Mr. Wheelwright. Will you raise your right arm, please? Mr. Wheelwright, do you solemnly swear the testimony you're about to give in this matter pending before the Public Service Commission of the State of Utah shall be the truth, the whole truth, and nothing but the truth, so help you God?
Yes, I do.
Thank you. You may be seated.
Good afternoon, Mr. Wheelwright.
Good afternoon.
Could you please state and spell your name for the record?
Yes, Douglas Wheelwright. Last name is spelled W-H-E-E-L-W-R-I-G-H-T.
By whom are you employed, and what is your title?
I'm employed by the Utah Division of Public Utilities as a Utility Technical Consultant Supervisor.
Your business address?
160 East, 300 South.
And could you please speak just a little slower? It's the end of a very long day.
Yes.
Thank you.
Sorry.
Have you participated in this docket on behalf of the division?
Yes, I have.
Did your participation include, with regard to the tasks to which you were assigned, reviewing the application, the amended application, the testimonies filed, preparing and reviewing data requests and responses, and discussing these issues and analyzing them?
Yes.
Did you prepare and cause to be filed your direct testimony in both redacted and confidential form, which has been pre-marked as DPU Exhibit Number 4.0-DR, with exhibits number 4.1 through 4.7 Some of those exhibits are confidential. And did you cause that to be filed on October 17th of this year?
Yes.
Did you also prepare and cause to be filed your rebuttal testimony, again in confidential and redacted form, marked as DPU Exhibit number 4.0-SR, with exhibits number 4.1, 2, 3, and 4.4, some of which are confidential?
Yes, I did.
Do you have any changes or corrections to those pre-filed exhibits?
No, I don't.
If I were to ask you the same questions as contained in those pre-filed exhibits and testimonies, would your answers be the same?
Yes, they would.
Do you adopt what is in your pre-filed testimonies and exhibits as part of your testimony here today?
Yes, I do.
With that, the division moves for the admission of Mr. Wheelwright's direct and rebuttal testimony and exhibits as previously identified.
Without objection, Mr. Wheelwright's direct and rebuttal testimony and exhibits are received.
Have you had an opportunity to prepare a summary for us?
Yes, I have.
Could you please present that?
Yes,
Thank
thank you.
you.
Good afternoon, Chairman Fenn and Commissioner Clark. This is a very interesting case with very complicated and challenging issues. The Division of Public Utilities has provided more witnesses and recommended more adjustments than any other case that I am aware of. The division has hired Daymark Energy Advisors to provide analysis and perspective for this complicated case. The individual division witnesses have proposed adjustments which are well supported and better reflect the conditions that will likely occur during the test year. The state of Utah represents the largest customer group of any of the individual Pacific Corp states, and usage on the east side of the Pacific Corp system represents 2/3 of the total load. The company has the challenge to manage the requirements of the entire system and also meet the requirements of the individual states. During the course of this complicated case, the division has encountered difficulty in various areas getting timely and complete answers from the company. With the inherent information asymmetry in the regulatory environment, especially with a time-limited case, it is vital that the company offer full and complete testimony and prompt responses to data requests. My portion of the testimony and analysis concerns the load and sales forecast used by Rocky Mountain Power for the test year. The load forecast used in this case was completed in May of 2023 and includes a significant increase in commercial and industrial loads in 2025, primarily from new data centers. However, very little detail has been provided to support the additional load. The division has concerns with the amount and the timing of the increase, since large portions of the increase is allocated to Utah. My testimony also discusses the impact of the load forecast on net power cost and the reliance on market purchases. The load forecast is a fundamental building block that is used to estimate the allocation factors, calculate net power cost, and ultimately the revenue requirement for this general rate case. The division is concerned that the load forecast represented for 2025 is overstated and does not accurately represent the anticipated load for the test year. An incorrect or overstated forecast will result in an incorrect allocation of cost to Utah and to commercial and industrial customers. In response to data requests, the company indicated that an updated load forecast was available and that additional loads from data centers would not be in place during the test year. While this information was known, there was no attempt to correct or update the load forecast. Early in this case, the division asked the company to prepare a revised load forecast, which was denied, and the company has resisted division efforts to model its view of loads. The lack of an accurate load forecast and Ms. McCoy's testimony about its importance, including follow-on modeling effects for underlying revenues and expenses is critical. In August, the company chose to file an update to its insurance cost and file a rate mitigation proposal, but failed to update the critical component of an updated load forecast. During Mr. Mitchell's testimony a few days ago, it was interesting to hear that an updated net power cost forecast was prepared for the Oregon Commission in November of this year. It is unsettling to know that the company has provided a revised estimate of net power cost with updates as of November of this year and in November of prior years to the Oregon Commission, while this commission has been asked to use data from a load forecast and net power cost that was prepared in May of 2023. Since the load forecast is fundamental to other calculations within the model, the division prepared a revised load forecast using the 3-year average load for Utah plus an estimated growth rate based on historical information. This information and analysis was presented in my surrebuttal testimony. The division's estimated load results in an adjustment to the revenue requirement and has an impact on jurisdictional allocations. The adjusted load will have an impact on net power cost calculations. However, the division did not attempt to make an adjustment to the net power cost since the impact to the dispatch model is not available to the division. It should also be noted that during the division's review, it was determined that the megawatt hour forecast in the normalized load tab of the JAM model is not the same as the megawatt hour forecast used to calculate net power cost. As discussed in my testimony and in the testimony of other division witnesses, the division has concerns with the company's hedging program and the increased reliance on market purchases. The company has not been able to support the current hedging program or its impact on the increase in net power cost. While this portion of the hearing is intended to determine the revenue requirement, several significant issues remain unresolved and will be addressed in Phase 3. While the full revenue requirement will not be known until Phase 3, the division can and will provide the Commission with an update of the company's JAM model, which include the division's adjustments thus far in the case. Additional updates to the model will be provided to the Commission during Phase 3. In summary, the company bears the burden of proof to support the requested increase in rates. However, the company has not provided sufficient support in its application to justify the significant increase. Setting customer rates based on a load forecast that the company has acknowledged is incorrect and net power cost that is inaccurate will not result in rates that are just and reasonable. And that concludes my summary.
Thank you, Mr. Wheelwright. We'll turn to Rocky Mountain Power for Cross.
No cross, thank you.
Okay. And we'll turn to Commissioner Clark if he has any cross.
I just have some questions, excuse me, regarding how the information that you've just presented relates to Mr. Pohl's testimony and the initial load forecast information that he presented in his direct testimony and the information presented in his surrebuttal testimony.
I think we've both recognized that the load forecast is incorrect. We've taken different approaches to looking at a revised load forecast, but we both recognize that the forecast is wrong.
He proposed specific adjustments to it, though, initially and in his surrebuttal. Am I correct?
Yes.
And you are not?
We did present, and in my surrebuttal, we looked at a revised load forecast based on some historical growth rates and looking at the growth and the historical load for Utah. So we did present in my rebuttal testimony.
Right, and how do your conclusions relate to Mr. Pohl's?
Like I said, I think they both, it's essentially the same information. We took a little different approach, but both recognize that the load forecast needs to be updated and revised because it's wrong.
So if we adopt the corrections, I'll put corrections in quotes, that you have recommended, it would still be wrong?
Yes. And the reason, let me qualify that a little bit. I looked at the historical loads for Utah and added a growth rate to look at an estimated load for Utah. We did not take that to the next level of putting those revised loads into the net power cost forecast. That would be the next step that would need to take place. I don't have access to look at the dispatch that the company would use to calculate net power cost.
Thank you. So does that mean that you don't have, or the division does not have the ability to generate a net power cost reflecting loads that you have confidence in?
We don't have access to the Aurora model within our office.
And how typically would you resolve that kind of issue where the company has a proprietary model or a licensed model that it uses to produce numbers and the division doesn't have access to a particular model?
We asked the company to revise their load forecast, and that request was denied. The response was, it won't lead, something to the effect, and it's in my testimony, it won't lead to information that's applicable to this case, which I disagree with.
And so when you mention you intend to present additional information in a later phase of the case?
I think
how would that happen?
Well, I think it's up to the company to support their case. They've stated in the initial filing that it was due to, the increase in load was primarily due to these data centers. In response to data requests, they said that the loads from the data centers will not be there in the test year. So I believe it's the responsibility of the company to modify and update that load forecast. They have access to information that we just don't have. Their modeling is, it would need to run through their own system. But they've acknowledged that there is an updated load forecast. As I mentioned, Mr. Mitchell said there was an updated forecast presented and provided to the Oregon Commission in November. We've sent off a data request to ask for that information. I don't know if that includes a revised load forecast and what assumptions are in that. That was the first time I've heard of it.
And just to be clear, the update in November was a net power cost?
Correct.
Forecast update, right?
Yes.
And so what you're saying is you don't know whether that included a different load forecast than the one that...
That's correct.
That's currently before the commission?
That's correct.
Those are all my questions. Thank you.
Okay, Mr. Wheelwright, I don't have any questions for you. You may step down. You may be excused.
Thank you.
Mr. Chair, as unusual as it is, would the chair allow the company to ask just a couple of questions of the witness based on that dialogue? Because my colleague believes we can clarify or rebut some of that exchange. I know it's unusual. I believe it has happened a couple of times in this proceeding where there was like recross or following.
I allowed somebody else to ask a question. I think it was the division, so if anything, I try to be fair. You may not always agree that I am fair, but I try to be fair. So the answer is yes, we'll allow you to ask a very limited number of questions for the purpose of clarifying based upon Commissioner Clark's
Thank you.
questions.
Then I'll turn the microphone over to Mr. Kumar. Thank you.
Thank you, Mr. Kumar. You may proceed.
I'm going to try and do this in the reverse order of issues that I heard, and I'll be as brief as I can. And I imagine it'll be extremely brief. So at the end, you talked about a data request that you asked the company regarding the company's Oregon NPC update that it does in November.
Yes.
And you stated that you did not know whether the company updates its load forecast.
I don't know if that information that was provided to Oregon includes an update to net power cost, or an update to the load forecast.
And so you're not aware whether the Oregon, and this is the Oregon Transition Adjustment Guidelines, actually specifically prevent the company from updating the load forecast? I will slow down. So you are not aware of whether or not the Oregon TAM guidelines, which govern the Oregon Transition Adjustment Mechanism, specifically prohibit the update of the load forecast after the initial filing in that case?
I don't know.
Okay. And could you, isn't it also true that by updating the load forecast would also require an update to nearly almost many of the other elements of the case, and it could require 4 to 6 months to actually refile the case?
I don't know how long it will take. I was somewhat surprised when Mr. Mitchell said they can produce a revised net power cost very quickly.
And that's based on a limited number of factors that the company had previously identified in Mr. Mitchell's testimony. Isn't that true?
I don't know how the company prepares that.
And the company hasn't identified a updated load forecast as one of those elements. Isn't that true?
No.
Okay. And one final question.
Wait a second, I'm confused by the answer. Isn't that true? The answer was no, it's not true, or he was agreeing with you that it's not true? I wasn't clear on that answer.
The company, in response to a data request, they have identified an updated load forecast. That is in, the actual information is in my direct testimony. There is a revised load forecast that is lower than what is presented in this case.
That's what I thought you said in response to a question, Mr. Clark. Does that now generate another question from you, Mr. Kumar?
I think it's just to clarify the record, because I think my question was specific to whether or not the updates that are included in the, that Mr. Mitchell identified include an updated load forecast for the net power costs.
And I don't know what's in that, in what is provided to Oregon. I don't know.
Okay. And you discussed the updated load forecast, but isn't it also true that you haven't updated the revenues as well?
There would be an update to revenues. There's concern that we have not looked at the updated revenues. I did look at that. If I look historically, and it's provided in my rebuttal testimony, if I look historically, revenues have continued to go down for the last 4 years. So I'm looking historically, and the company is saying we're going to have a dramatic increase in sales in 2025. Historically, that has not been the case.
I have no further questions.
Okay, thank you, Mr. Kumar. All right, let's just take one moment here and talk about where we're headed. So we have a phase 2 of this hearing, I think is scheduled for January 15th and 16th. We have reserved the 17th of January as well. Is that everybody's understanding? Okay, is there anything else that we need to discuss this evening before we adjourn? Yes, Ms. Hayes.
Mr. Chair, thank you. I just am curious related to the post-hearing briefs. specifically with regard to the insurance cost adjustment, if the commission has any guidance about whether those of us like WRA who understood that the creation of the insurance cost adjustment was a phase one issue. I recognize not all parties, I think, shared that same view. So I'm curious if the commission has guidance on whether you would prefer for the insurance cost adjustment to be briefed later on.
I have a response to that. I'm going to just talk to Commissioner Clark for just 1 second. So to the extent we've allowed the ICA to be discussed, and there has been a bunch of testimony on that, that can definitely be included in the phase one post-hearing brief, but I'm not going to preclude anyone to the extent that comes up again in phase three to file on that issue. We want to get as much information as we can. Now, I believe we set a date for post-hearing briefs after phase one. We've not done that. I guess my inclination is to have one other brief for phase two and phase three, but I have to tell you, we're going to have a quick turnaround on the phase three post-hearing brief because we have a very short time frame to produce an order by April 25th. So we don't have to address that today unless you're ready to propose a schedule. I think you might want to all talk about it. It'd be better if it came to us as an agreement, stipulation among the parties. But I'm just telling you, if you come back and say we want to provide a post-hearing brief after phase two and after phase three, we'll entertain that. I was contemplating there'd be one other one filed, but just to note, it's going to have to be a very short turnaround. We'll allow you to talk about that and propose a schedule, and then we'll make a ruling on that at the beginning of the second phase of the hearing on January 15th. Anything else we need to talk about tonight?
Chairman Finn?
Yes, sir. Mr. Moore.
I was wondering if the commission wanted to order an expedited transcript, and I also was wondering if I could confirm that the first post-hearing brief is due the 29th of January.
I think that's the date we decided, but I can't keep it in my mind. But it's Melissa, you remember? Melissa will look it up. I thought it was, yeah, was it the 29th or 30th? She's going to look it up. With respect to an expedited transcript, tell me. I started to speak and you hadn't even sat down yet, so we'll pretend that I'm starting to speak right now. So, Mr. Moore, with respect to your question about an expedited transcript, our very able court reporter here has told us that she will be producing a transcript of the brief in the first week in January, and that as she has it may come in stages. If she has the brief, a couple of days of the transcript, a couple of days of the transcript prepared the, whatever, what's the first week of January? Give me a second. Look it up. So are you talking December 30th to January 3rd, not January 6th to 10th? Correct. Okay, so she has a holiday in there, so she's been incredible, and we should be grateful for her. But what she's told us, and she told us this the other day, that she anticipates that that first week, which starts on December 30th, does have two holiday, well, New Year's Eve and New Year's holiday. But she intends to produce the transcript that week. And it may come in stages. It may come some on December 30th, some on January 2nd and 3rd. Having said that, do you think that is sufficient for your needs?
That's more than sufficient, and I'd like to take this moment to thank the court reporter in advance.
Yes, I think she's been terrific. All right, and I assume everybody else would be fine with that. Okay, anything else that needs to be discussed tonight?
This doesn't need to be on the record.
Okay, we'll go off the record.
Do you mind if we have this?
On the record, yes. Anything else that we need to talk about?
May our witness be excused?
Thank you.
I was doing so well this week. I offer you my apologies, Mr. Wheelwright. I should have excused you long ago. And sitting here with the stress of whether somebody could think of something else to ask you, it's pretty inexcusable on my part, but please forgive me, and thank you very much for your patience and for not bringing it to my attention earlier that I had neglected to excuse you. Thank you, though.
We still haven't received confirmation on the date of the pre-hearing, of the post-hearing brief.
It's January 30th. That's the date we set.
All right, thank you very
Okay.
much.
All right. Now, can we adjourn? Okay, this hearing is hereby adjourned until January 15th, when we'll begin Phase 2 of the general rate case. Thank you very much for your participation, and happy holidays to all of you.
Thank you.
Thank you very much.